Try again, Ms Orr.
Thank you, Commissioner.
See
I
if
will
Mr
try.
Murphy and his law is still alive.
Mr Benjamin Steinberg, Commissioner.
Yes, Mr Steinberg, would you prefer to make an oath or take an affirmation?
An affirmation, please, Commissioner.
Yes, affirm the witness, please.
I solemnly and sincerely
I solemnly and sincerely
declare and affirm
declare
that the evidence I shall give
that the evidence I shall give
will be the truth,
will be the truth,
the whole truth,
and
nothing but the truth.
and nothing but the truth.
Please sit down. Thank you, Mr Steinberg. Yes, Dr Collins.
Is your full name Benjamin William Steinberg?
Yes, it is.
And Mr Steinberg, is your business address 100 Queen Street, Melbourne in Victoria?
Yes.
And are you the Head of Lending Services, Corporate and Commercial for the Australia New Zealand Banking Group?
Yes, I am.
Mr Steinberg, have you received a summons to appear before the Commission and produce documents?
Yes, I have.
Do you have that summons with you in the witness box?
I do.
Commissioner, I tender the summons.
Exhibit 4.7, the summons to Mr Steinberg.
I was waiting for a number.
Exhibit 4.7.
Sorry, Commissioner.
What I said.
Mr Steinberg, have you made a witness statement for the purposes of the Commission numbered rubric 4-1?
Yes, I have.
Yes, and do you have that with you in the witness box?
Yes, I do.
Are the contents of that statement true and correct?
Yes.
Commissioner, I tender the statement in rubric 4-1.
Exhibit 4.8, witness statement of Mr Steinberg concerning rubric 4-1.
And Mr Steinberg, have you made a further statement for the purposes of the hearings of the Commission in rubric 4-20?
Yes.
And do you have that with you in the witness box?
Yes.
Are there some corrections that you wish to make to that statement?
No.
If I might lead you, would you have a look at paragraph 33?
There are some corrections
There
you
are
want
some
to make to that, apparently, Mr Steinberg. Yeah, go on.
I'm sorry. Oh, I'm sorry. I'm being told it's to the annexures to rubric 420.
Dr Collins wants to make to himself, yes.
Mr Steinberg, your statement in rubric 420, does it have a number of annexures?
Yes, it does.
Yes. And do you wish to make some corrections to annexure D to the statement in rubric 420?
Can I just have a look at that, please? Yes, that's right.
It is the first correction to paragraph 33 little c in annexure D.
Paragraph 33 of annexure D.
Yes. It is the correction in paragraph 33C to delete the number 426 and substitute the number 427.
Yes, that's correct.
Okay. Could you note that in handwriting and just initial in the margin? Is the next correction to paragraph 56 of the same annexure?
Yes.
And is the correction to delete the number 808 and substitute the number 2808?
Yes, it is.
Would you make that change and initial in the margin? And in the same paragraph, is there a correction to be made in the row regarding insurance? In place of the number 245, should it be the number 1245?
Yes.
Would you make that change and initial the margin? And finally, Mr Steinberg, in paragraph 60, in the row referring to volume 2688, folio 172,
Yes.
do you wish to delete the number 926 and substitute the number 936?
Can you just give me that volume and folio again, please?
Yes, I'm sorry. Volume 60, you see the words sold together with volume 2808, folio 926, should it be volume 2808, folio 936?
I'm just looking in the column parcel of McKellen and property. Is that the right column for me to be looking at?
It's got to be a more efficient way of doing this, Dr. Collins.
Yeah, sorry,
Get on with
Commissioner,
it.
it is the last
Fix it.
one.
Yeah,
Yes.
can't have the witness fix it.
So in paragraph 60,
Yep.
in the row referring to volume 2688, folio 172, which is the bottom of page 14.
Yes, I've got that.
Yes. And then if you look at the top of the next page, you'll see the continuation in the shaded column, the continuation of the volume and folio number.
Yes.
And it's the correction to delete the number 939. What's wrong with this? Oh no, I'm sorry, I've found it. Mr. Steinberg, in the fourth column, you see sold together with volume 2808,
Yes, I've
folio
got that.
926. Should that be folio 936?
Yes.
Yeah, thank you. Would you make that change and initial the margin?
Yep.
And could I ask you please to go to Annexure E?
Yes.
In paragraph 33 on the second line.
Paragraph 33, yep.
Do you wish to delete the month November and substitute the month October?
Yes.
Thank you. Would you make that change? And in the same annexure, in paragraph 110,
Yes.
on the first line, do you wish to delete the month September and substitute the month October?
Yes, I do.
Okay, would you make that change? Mr. Steinberg, with those corrections, are the contents of your statement in rubric 420 and the annexes to that statement true and correct?
Yes, I am.
Commissioner, I tender.
Exhibit 4.9, witness statement Steinberg in relation to rubric 4-20 and its annexures.
Mr. Steinberg, have you made a further statement for the purposes of the Commission in rubric 4-38?
Yes.
Do you have that statement with you in the witness box?
Yes, I do.
Yes. Are the contents of that statement true and correct?
Yes, they are.
Commissioner, I tender the statement in rubric 4-38.
Exhibit 4.10 is witness statement in relation to rubric 4-38.
And Mr. Steinberg, have you made a supplementary witness statement for the purposes of rubric 4-38?
Yes, I have.
Are the contents of that supplementary statement true and correct?
Yes.
Commissioner, I tender the supplementary statement.
Exhibit 4.11, supplementary statement of Mr. Steinberg concerning rubric 4-38.
Thank you, Commissioner.
Yes. Yes, Ms. Orr.
Just for a moment, Commissioner. Sorry, Commissioner, there is a further statement that was prepared by Mr. Steinberg, which will be tendered after the cross-examination, because I understand the original of it is not yet available, but it will be made available. Now, Mr. Steinberg, you've been put forward by ANZ to answer questions about ANZ's acquisition of the loan book of Landmark Financial Services.
Yes, that's right.
And also to deal with the way that ANZ dealt with the former Landmark clients.
That's right.
And in your role as Head of Lending Services, Corporate and Commercial, you're responsible for managing the high-risk loans in ANZ's corporate and commercial portfolio,
That's right.
and that includes the agricultural portfolio.
Yes, it does.
And you've had responsibility for the agricultural portfolio within Lending Services since 2013.
That's correct.
And in 2015, you were involved in a task force that reviewed what you've called the high-risk landmark files.
That's right.
Now, you've provided a number of statements, as we've heard, to the Commission, most of which deal with ANZ's acquisition of Landmark, both in a general sense and by dealing with specific clients, former
Yes.
clients of Landmark.
Yes.
You've also provided a statement that dealt with a customer of ANZ who was not a former Landmark customer, and that's the statement that will be tendered. I understand later you recall that statement as well?
Yes, I do.
Thank you. Now, if I can deal with your statements that relate to the Landmark, the former Landmark clients, I want to start by asking you some questions about ANZ's acquisition of the Landmark loan book and then deal with some of the specific cases. You understand?
Yes, I do.
Yes. Now, Landmark was a division of AWB Limited,
Yes.
and Landmark Financial Services was a division of Landmark.
That's right.
And Landmark Financial Services provided loans and deposit services to agribusiness customers.
Yes.
And in 2009, AWB Limited approached ANZ about ANZ purchasing Landmark's loan and deposit books.
That's right.
And on the 21st of October 2009, after a period of due diligence, ANZ's board considered a proposal for the acquisition of those loan and deposit books.
Yes.
And the board decided to approve the acquisition.
That's right.
Now, can I take you to some aspects of the proposal that was put to the board? And can I ask you to look at the first exhibit to your first statement, which is a statement dealing with general matters.
Yep.
So exhibit 1 to that statement, which is ANZ 800 097 7082.
Yes.
Just wait for it to come onto the screen, but you can see that it's a management board report dated 21 October 2009.
Yes.
And if we turn to the first page of that document at 7083, we can see the background and strategic rationale for the acquisition of the Landmark loan book. Is that right?
That's right. Yes.
And under the heading background, we see in the final dot point that a non-binding proposal was submitted on the 8th of October 2009 to acquire the lending and deposit books at book value, adjusted for additional provisions, and to enter into an exclusive distribution agreement. You see that?
Yes, I do.
And you see that under the heading strategic rationale in the last dot point, we see ANZ has the objective of becoming a super regional agribusiness bank.
Yes, I see that.
And that was ANZ's objective at this time?
Yes, according to this document, I agree, yes.
Yes, and that was, as you understand it, the objective?
Yes.
Thank you. And then over the page at 7084, we can see the opportunities that ANZ believed would flow from loan and deposit books. Do you see under strategic rationale at the top of the page, the proposed purchase and exclusive referral agreement provides ANZ with an opportunity to move ANZ to number 2 in agribusiness and improve commercial market share by almost 1%, enhance our agribusiness portfolio in our targeted industries, cropping, beef, mixed livestock and geographies, Western Australia, Queensland and New South Wales, expand ANZ's rural footprint, customer reach and enrich our farm lending specialist skill base, leverage Landmark network to cross-sell commercial, retail and wealth management products, including maximising retail deposits of existing and future Landmark customers and providing wealth management products to retiring farmers. You see that?
Yes, I do.
And this is explained in a bit more detail below under the heading Business Model and Integration. And we can see there that the proposed business model covered management of the acquired portfolio and targeting the Landmark customer base. Landmark will exclusively refer customers with commissions paid by ANZ at a rate which is lower than the current broker industry norm. Referrals and ongoing customer relationships supported by ANZ relationship managers focused on cross-selling the full ANZ product range to currently underserviced Landmark Financial Services customers. And the remaining Landmark customer base, 95,000 customers, to be targeted by joint ANZ and Landmark initiatives.
Yes.
So a large part of the rationale for the acquisition was to allow ANZ to sell its products to farmers.
I think that was part of it, yes.
And it seems to be a significant part from this document. Do you agree?
Well, I think the reasons are evenly outlined in the document, and I think that the potential to win market share and to move to the number 2 position in agribusiness, enhance the portfolio and move into areas where ANZ otherwise didn't have market strength, to me they appeared to be the predominant reasons.
Why do you say they're the predominant reasons, Mr. Steinberg?
It's a view that I formed when I read the document.
And what in the document makes you think that those were more predominant reasons than allowing ANZ a vehicle to sell its products to farmers?
You know, I agree with that proposition. I was just responding to whether, in my opinion, that was the main purpose of the acquisition. I don't believe it was the main purpose. I think it was one of the purposes combined with all of the others that are listed in that document.
What is the full ANZ product range that we see referred to in the 3rd bullet point under business model and integration?
So, Ms. Saura, I wasn't involved in the preparation of this document, so I can't really say exactly what the writer meant when they wrote this, but it appears to me that generally the products that ANZ offers to its customers, its intention was to be able to market those products to Landmark customers as well.
As part of an exclusive distribution agreement?
That's right.
Yes. And further down that page, still under the heading business model and integration, we can see that ANZ intended to retain about 80% of the current Landmark Financial Services staff. Do you see that in the last point on the page, Mr. Steinberg?
Yes, I do.
And did ANZ do this, to your knowledge, because it was thought that those staff would bring their experience in dealing with agribusiness customers?
Yep.
They did?
My understanding, Ms. Orr, is that there is some documents that indicate that 6 months into the transition, ANZ had lost 10% of the Landmark staff.
Yes.
I don't know what the number was 12 months later, but I do know that there was some concern that, in fact, we may lose more than the 20% target.
Yes, I've seen those documents, Mr. Steinberg,
Yes.
and your recollection of them accords with mine. But at this time, in October 2009, we see that the document records an intention to integrate about 80% of those staff. Now, we'll come to whether that was able to be executed as a plan, but that appears to have been the intention.
Yes.
And what I'm asking you is whether you understand that that intention was so that customers would benefit from having the relationship managers from Landmark bring across their expertise.
Yes, I agree.
Okay. Now, on the following page, 7085, we see a summary of the findings from the due diligence that was conducted. And you see at the top of the page there under the heading due diligence findings, due diligence has identified the following key issues, none of which are considered showstoppers. Do you understand what's meant by that, Mr. Steinberg?
I assume deal breakers.
I see. I see. So these are the issues the key issues identified in the due diligence process, but none of them were deal breakers.
That's how I understand it. That's right.
And the first issue we see there relates to credit provisions. Following a review of detailed loan information and physical files, additional individual provisions of $20 million above current Landmark Financial Services levels have been estimated. A further fair value adjustment for expected losses of $52 million above Landmark Financial Services' current collective provisions has also been identified. Now, can you explain what individual and collective provisions are, Mr. Steinberg?
Yes, Ms. Orr, an individual provision is an estimate of a loss that we may suffer or that we estimate will suffer on an individual customer basis.
Yes.
A collective provision is a broader look at a lending portfolio and estimates the potential loss in that portfolio outside of the accounts that have individual provisions.
Yes, thank you. So what we see from this reference is that Landmark had not adequately provisioned for the losses that ANZ expected it would make on the Landmark loan book.
That was in ANZ's view, yes.
Yes. So in other words, at this time, in October 2009, ANZ thought that it was likely to incur a loss on certain loans that Landmark had not made provision for.
Yes.
Then the second issue identified in these due diligence findings related to customer migration. Further work is required to refine the mechanism for migrating customer accounts and negotiate an appropriate transitional services agreement. Customer migration is a key risk being addressed in integration planning, particularly on deposits. So in October 2009, it was also recognised that further work was needed to make sure that customers had a smooth transition from Landmark to ANZ.
Yes.
Okay. Now I'm going to come back to that, but you said earlier that the board approved the acquisition in October 2009.
That's right.
And ANZ signed the sale and purchase deed in December 2009.
Yes.
And then the acquisition completed on the 1st of March 2010.
That's correct.
So from that date, the 1st of March 2010, the former Landmark customers were customers of ANZ.
That's right.
And ANZ staff had management of their loan and deposit accounts?
Initially, the intention was it would be predominantly Landmark staff that had transitioned across to ANZ, but over time, some of the ANZ staff also managed some of those accounts.
When I say ANZ staff, I mean including the Landmark staff that have transitioned across because they became ANZ staff.
Yes, they did.
Okay, so the staff managing the loans and deposit accounts were a mixture of Landmark staff who had transitioned across and ANZ staff, is that right?
Yes, initially mainly Landmark staff, and then as some of the Landmark staff left, then there was an integration of ANZ staff members as well.
Yes. Now, at the time of the acquisition, there were 7,124 loans in the Landmark loan book. You give us that figure in your statement?
Yes, that's right.
And the total value of those loans was $2.293 billion.
That's correct.
Okay. Now, following the acquisition in March 2010, ANZ sent letters to former Landmark customers about the acquisition.
Yes, we did.
And they were pro forma letters.
Yes, they were.
And I'd like to take you to one of those letters which you've exhibited to your statement as Exhibit 12, ANZ 800 620 1996.
Yes.
So this is a copy of the pro forma letter that went to customers of Landmark that transitioned across to ANZ.
Yes.
We see the first paragraph there. On the 1st of March 2010, ANZ acquired Landmark's financial services loan and deposit book. We have made this investment because we believe strongly in the future of agribusiness in Australia. ANZ has been banking businesses just like yours for more than 150 years, and we plan to continue to work with you for many years to come. As a result of the acquisition, your deposits are with ANZ and your lending accounts are now managed by ANZ. In addition, many of Landmark's financial services staff accepted roles with ANZ. That means that people who know and understand your business will still be available to support you. While your Landmark Rural Finance Manager will now be known as an ANZ Agribusiness Manager, they will continue to visit you and to work closely with the Landmark network. So the customers were told by this letter that this was essentially a change in name only.
Well, I think it says exactly what you read. It said that the deposits that you have and your lending accounts are being managed by ANZ, and that Landmark Financial Services staff had accepted roles with ANZ, and that they would continue to visit. Yes, I agree with that.
Well, yes, you agree that they were being told it was a change in name only.
Well, I'm not sure it says exactly that, but I agree with it, that it says what you read out, that it says yes.
I'm sure you agree that it says
Yes.
what I've read to you, Mr. Steinberg. I'm asking you about what the person who receives this letter would have understood it to mean. And what I'm putting to you is that having read those two paragraphs,
Yes.
the Landmark customer reading this letter would understand that this was a change in name only because the same people were going to be managing their accounts just under a different title.
I can understand how you might think it would be read that way. I think different people read different documents in different
How
ways.
do you read it, Mr. Steinberg?
So when I read this document, I did not take it the way that you've put it to me. I read the document literally, but again, I can understand how some people might read it in that particular way. It's just not the way that I read the document.
I see.
Yes, but I can see how different people read documents in different ways.
Okay. What we know though, Mr. Steinberg, is that at this time ANZ was planning to, or already had, terminated the employment of a number of the Landmark Rural Finance Managers.
I'm not aware that that had happened. No.
All right, well, can I show you a document, Mr. Steinberg, which is Exhibit 8 to your statement? This is ANZ 800 616 1254.
Yes.
So this is a document we see in relation to Project Conserve. That was the Landmark acquisition project, is that correct?
Yes.
And
that's
it's
right.
dated September 2009, so well before the March 2010 letter that I just took you to.
Yes.
Now, if you could turn to 1260 within the document. Do you see there? I'm sorry, I've taken you to the wrong page. 1261.
Yes.
You see there at the top of the page, so reminding you this is September 2009. Based on RCNA customer management ratios, only 40 of the current 65 RM posts will be required.
Yes, I see that.
And that was the case, that only 40 of the 65 Landmark relationship managers were required to come across by ANZ?
Yeah, I accept that based on the fact that it's written there, yes.
Yes, so that was the plan in September 2009.
So, Ms. Orr, I don't consider this to be the plan. What I consider this to be is a statement that says that once the acquisition is made, that 40 out of the 65 posts will be required. I wasn't aware that it was part of the plan, but I think it's just stating that that was a mathematical outcome of the way that we analyse the number of relationship managers ANZ uses, depending on the number of accounts that on an account to a relationship manager formula.
Well, how many did you take across, Mr. Steinberg? Did you take 65 or 40?
I don't know that number. Don't know.
You don't know
No.
how many landmark relationship managers went across in the acquisition?
No, what I do know is that there was approximately 130 staff that came across from Landmark to ANZ. I don't know how many of those 130 were relationship managers and in other roles.
Right, so you can't tell the Commission whether or not this indication in this document that only 40 would be required to come across, whether that's what occurred or not.
I don't believe that is what occurred. I believe what occurred was that all of the staff came across, all of the relationship manager staff came across. That was my understanding.
And you told us earlier that within 6 months, about 10% of them were no longer with ANZ,
Yes,
and there was more attrition within a fairly quick period of time after that. Is that right?
yes, there was more attrition after that, yes.
And what level of attrition?
Look, I don't know. What I have read is that there was concern that they were going to breach the 20% retention ratio, so at least that number.
At least 20% within what period?
That was the concern, within 12 months.
Thank you. All right. Now, did ANZ, you don't know how many landmark managers, relationship managers came across, I think that's your evidence.
Yes,
But not enough to cover all of the former landmark customers, is that right? There were also ANZ relationship managers managing some of these accounts.
no, I think at the point of transfer, I think all of the landmark relationship managers came across. So at that point in time, all of the landmark customers would have been managed by their existing
I see.
landmark relationship manager.
I see. And then within 6 months we see the numbers drop, and those numbers are supplemented by ANZ relationship managers coming in and dealing with those clients.
Yes.
Is that right?
Yes.
And did ANZ provide those ANZ relationship managers who took over landmark clients with any particular training in dealing with agribusiness customers?
So these customers were managed by our regional and commercial banking area. So those relationship managers would have already had experience in dealing with agri-business customers.
Well, what level of experience would they have had, Mr. Steinberg?
Look, I think that's a question that I'd have to apply to each individual person, but because they were being managed by a regional and commercial area, there would have been a team of people who would have had experience managing agribusiness customers.
Well, are you aware, Mr. Steinberg, that in a notice to produce issued by the Royal Commission to ANZ, the Commission sought documents for the period from 1 January 2009 to 31 December 2011 that constituted any report, memorandum or similar document describing the steps taken or proposed to be taken by ANZ to train its staff in dealing with agribusiness customers?
Yes.
Are you aware that that was a request made in a notice to produce to ANZ?
So my understanding of the request was, although I didn't deal with the request myself, my understanding of the request was that it was around the training that the landmark financial services staff had in helping them to integrate into the ANZ network.
Well, that wasn't the nature of the request. It was documents describing the steps taken or proposed to be taken by ANZ to train its staff in dealing with agribusiness customers.
Yep.
Are you aware that ANZ returned only 4 documents in response to that category, each of which dealt with the training of the landmark relationship managers that were moving across to ANZ, not with the training of ANZ relationship managers?
Yeah, no, so I'd need to be able to see those documents to make any comment. I'm not familiar with what they are right now.
All right. I'll have those documents made available to you
Okay.
so that you can comment on those
Yes.
later in your evidence. can I return now to the letter that we were discussing on the 5th of March 2010 that went to the customers?
Yes, is that 12? Yep.
Yes, Exhibit 12 to your statement. We see that the letter also says, in the second part of that second paragraph that I read to you, that the ANZ agribusiness managers would continue to visit former Landmark customers. Do you see that? They will continue to visit you and to work closely with the Landmark network.
Yes, I do.
Was it ANZ's policy at this time that relationship managers should visit customers at their farms?
Yes, it was.
Right. And did the ANZ relationship managers continue to visit the Landmark customers at their farms?
Again, it's very difficult for me to answer that question in a broad way. I'd have to look at individual circumstances, but it was the practice in that area to visit their customers on a regular basis.
Well, you know, I assume from the statements that you've provided, Mr. Steinberg, that in at least one of the cases that the Commission asked you to address, which was the case of the Harleys,
Yes.
the ANZ relationship managers did not visit the Harleys at their farm.
So I think what you're referring to there is after the account got transferred to Lending Services, there was a request by the Harleys for the ANZ Lending Services relationship manager to visit them, and I agree that that did not happen.
You say in your statement, and I'll have this brought up on the screen in relation to the Harleys, ANZ 99901100044.
Can you take me to an exhibit number, please?
It's your statement
statement,
in relation to the Harleys, page 25 of your statement, bottom of the page, subparagraph C.
Yes.
This is your statement. From my review of the file, it does not appear that the ANZ relationship managers ever visited the Harleys in person on their farm.
Yes. Yes, so that comment was directed to the time that it was being managed in Lending Services.
I see. So, although it's not clear from the language that you've used in this statement, there's a qualification to that you say we should read into that, which is it does not appear that the ANZ relationship managers ever visited the Harleys in person on their farm after the file was moved to Lending Services. Is that
Yes,
how we should understand that?
Yes, please.
Okay, thank you. Now, back to the letter, Mr. Steinberg. So back to
Yep.
your general statement in ANZ 800 640 1996.
Yes.
The next thing that the customer's told in the third paragraph down is that your agribusiness manager will be in touch soon. Did ANZ have systems in place to ensure that that follow-up occurred to the customers who received these letters?
What I've seen is that there were some training sessions and integration sessions with former Landmark staff that gave them a program as to what they should do in order to transition their customers across from Landmark to ANZ.
So I just want to understand what the answer to my question is, Mr. Steinberg. Did ANZ have systems in place to make sure that that follow-up that was promised in this letter happened?
Yeah, so I don't believe it comes down to systems. I think what needed to happen was there needed to be a process in place so that the customers would be transitioned across to ANZ, and the documents that I've seen indicate that there was training and processes put in place to have that happen.
Were there systems to ensure that those processes were followed?
I'm not aware of there being any systems.
Right. Should there have been?
Yes.
Thank you. Now, along with this letter, the customer received a brochure. Is that right?
Yes, that's right.
We see over the page at ANZ 800 620 1998. And if we turn to the inside of the brochure, which is 1999,
Yes.
we see that it said under the heading Official Notice of the Lending Facility Changes, on behalf of the lender, we give you notice that changes to your facility will be made.
Yes.
And one of those changes was that new fees and charges were going to apply to the accounts. Do you see that in 1B?
Yes.
And another was that there would be a change to the way that variable interest rates were determined.
Are you reading that in 1C?
I am.
Yes.
And another was that ANZ would now only need to give 30 days notice of changes to the facility instead of the 60 days notice that was given by Landmark. That's 1D.
Yes, I see that.
And back over to the front page of the brochure on 1998, the customer was told that they were required to open an ANZ account. Do you see that? 1G?
Yes.
Now, was the receipt of this letter and this accompanying brochure the first time that former Landmark customers were told about the acquisition?
No, it wasn't.
And when were they told about the acquisition?
So I believe that there was a letter sent out pre-acquisition, I think it was December 2009, that gave them the earlier notification of the pending acquisition.
Have you annexed that letter to your statement, Mr. Steinberg?
No, I haven't.
Why not?
I'm assuming that when I read the questions that it wasn't responsive to the questions that I was asked to address.
I see. And what do you say the customers were told in December 2009 about the pending acquisition?
So again, I don't have that document with me, but it was a document that just advised them of the acquisition and that they were going to receive some more communication from the bank.
Okay. Now, let's assume that there was, as you say, the letter on December 2009 flagging the acquisition for customers.
Yes.
Is the next communication they received the March 2010 communication that we've just looked at, the letter with the brochure?
Yes, I actually think I saw that there were two correspondences that went out pre-acquisition, but certainly this one in front of me is the first one that went out post-acquisition.
I see.
Yes.
So two communications pre-acquisition saying what in general terms?
In general terms, just letting the Landmark customers know that there was an acquisition in progress and that and advising what the date of the acquisition is and letting them know that they'll receive more communication after the acquisition has occurred.
And do you think that happened before or after ANZ signed the sale and purchase deed on the 8th of December 2009?
I can't recall.
Would it be likely that ANZ communicated with them prior to signing the sale and purchase deed?
Look, as I sit here, I don't know.
Okay. And do you think ANZ took adequate steps to explain the acquisition to former Landmark customers?
So I think that we informed them pre the acquisition, and I think we informed them post the acquisition. That said, I think, and we've made public statements to this effect before, that we should have done a better job in the way that we communicated that to the Landmark customers.
Yes. And what do you see as the problems with the way ANZ communicated with those customers? What could you have done in doing a better job?
So the communication initially is around what the integration meant for the customers, the fact that a lot of these landmark customers have never dealt with a large financial institution before, like ANZ. We could also have communicated more around the systems transfer and the integration. Yes.
What should you have told them about the systems and integration?
Perhaps more information around what they could have expected, but more importantly also in the manner in which the customers were transitioned from Landmark to ANZ.
And having acknowledged that you could have done this better, this communication with customers, what do you understand to have been the effect of the inadequacies of ANZ's communication on the former Landmark customers?
I don't feel that I can answer that question in relation to the entire customer pool. I think the impact would have been different for each individual customer, if any at all. So I think we'd have to break that down into individual customers to be able to answer that.
Could you give us some examples of what you understand to have been ways that this inadequate communication affected former Landmark customers?
Can I have a moment to think about that, please? Thank you. As an example, I'm aware that some of the customers felt that ANZ didn't have the same level of agribusiness experience as the former Landmark staff had. So I think that's one example where they may have been, or they feel that they were affected.
Was that about your communication with them or about the nature of the experience that your relationship managers had?
It's addressing how some customers may have been affected by the transition.
Yes. I don't want to labour the point, but I was trying to understand what you understood the effects of the inadequacies of the communication about the acquisition
Yes.
to be.
Yeah, and so the point I'm making there is that some of the customers felt that had they been advised earlier,
Yes.
they may have made a decision to refinance their facilities from
Yes.
Landmark before the acquisition occurred.
Yes, I see. Now, if a similar sort of acquisition happened now, what would ANZ do differently in its communications with customers?
So this is not a part of the bank that I normally work in, Ms. Orr, so it's a difficult question for me to answer. But, as a general statement, I would say that we need to be clearer in the way we communicate the impact of an acquisition to impacted customers.
All right, so over the following year after the acquisition, ANZ migrated the former Landmark customers onto its technology platform, is that right?
Onto ANZ's technology, yes, that's right.
And did that process go smoothly?
Not in all cases, no.
What went wrong?
Well, in some cases, limits were incorrectly loaded onto the systems. In some cases, interest rates were incorrectly charged.
Any other difficulties?
I mean, they're the ones that come to mind right now.
What about customers experiencing difficulties in opening their accounts as a result of the migration?
Yes, I'm aware that that happened as well. Yep.
And what about delays in responses to information and funding requests as a result of migration difficulties?
Yes, I accept that happened in some cases.
And did ANZ investigate what caused those issues?
Well, in the cases that I'm aware of, they did.
And what was the cause?
Error by bank staff in most cases.
Isolated errors or systemic errors?
Look, I wouldn't call them systemic, no.
Are we talking about a small number of errors or a large number of errors?
Look, I don't know.
Do you know anything about the numbers of customers that were affected by those errors?
No, I couldn't give you a number, no.
Okay. All right. Okay, so if a similar sort of acquisition happened today, what would ANZ do differently in relation to the migration of customers onto a technology platform?
Yeah, again, this is not a part of work that I do, so I'm finding it difficult to answer that question.
All right. Mr. Steinberg, you've explained in your statement that following the acquisition, the loans from Landmark were held in a trust. Is that right?
That's right.
And from March 2010, ANZ began a process of redocumenting customers' loans out of the trust structure to loans that were written by ANZ.
Yes, that's right.
And what did that involve?
It involved undertaking a review of our customers' facilities, preparing a new letter of offer, an ANZ letter of offer, talking to the customer about the new letter of offer, also taking the securities onto ANZ as ANZ securities. That's what I think was involved.
Mm-hmm. And why did ANZ engage in that process?
It was for efficiency reasons. The view was that it would be more efficient to have all of our customers on similar terms and conditions, similar platforms. It was a decision taken by the integration team that that would be a more efficient way to manage that pool of customers.
More efficient for who, Mr. Steinberg?
More efficient for the bank.
For the bank. So the bank required each of the customers to engage in this process because getting them all to do that would be more efficient for the bank.
I wouldn't put it in those terms. The way that it was done was that as facilities came up for annual review or as customers requested an increase in their facilities, then ANZ used that as an opportunity to redocument those loans onto ANZ paper. Not all customers took that offer up.
But within the year, had you redocumented all their loans?
No, I don't believe so. And even as we sit here today, there are a number of customers who have elected not to transition onto ANZ paper.
Mm-hmm. And what proportion do you think that is of the
That's a small
Landmark
proportion.
customers?
It's right now it's in the order of 50 to 60 customers. But I'm not sure of the rate at which that occurred over time.
40 to 60 out of how many customers who transferred across?
4,000.
4,000.
4,500, I think.
Now, one of the due diligence reports prepared in preparation for the acquisition related to ANZ's credit stream, and I want to ask you about that. That's your Exhibit 7, which is ANZ 800 616 1266. This is another Project Conserve document. I can't recall now if I asked you before what Project Conserve was, Mr. Steinberg.
And I think it's just the project name given to the due diligence for the credit part of the whole due diligence process.
I see, thank you. And what is the credit stream?
So credit stream would be looking at the quality of the credit aspects of each of the customers that ANZ was acquiring.
The quality of the credit aspects, did you say?
Yes, that's right.
Okay, now, if we turn to 1268,
Yes.
which is part of the executive summary for this document, we see there that the fifth bullet point tells us that there is, and before I read this, I should just remind you, this is September 2009, which you will have seen from the front page.
Yes.
There is an immediate repricing opportunity given the variable book, 1 billion, is currently priced off a conserve index rate. A conserve index rate, do we read that as a landmark index rate? Is that what that means?
I don't know what it means.
Right. Okay, so an immediate repricing opportunity given the variable book of $1 billion is currently priced off a conserve index rate, implying a reasonably simple conversion to an appropriate ANZ pricing index. Currently, there is a 0.63% margin differential between ANZ and conserve variable rates, offering a potential $6 million annual revenue opportunity. Can you explain that, Mr. Steinberg?
Yes, my understanding of what it's saying is that the view at the time was that the landmark book was potentially underpriced relative to the ANZ portfolio. And I believe what this is saying is that as a result of that, there is an opportunity to have a revenue uplift through repricing the landmark portfolio.
So ANZ saw an opportunity immediately to reprice many of the loans with a $6 million benefit to ANZ. Is that right?
Well, I think that's what the document says.
Yes.
In terms of what actually happened, I don't know. I have seen through some of the case studies that I've worked on that there were price increases
Yes.
at various stages,
Yes.
but I don't know how that was dealt with across the portfolio.
So is it the case, Mr. Steinberg, that you've come to this Royal Commission to answer questions about the landmark acquisition, but you can't tell the Commissioner whether ANZ took up the opportunity that it identified to reprice the loans to obtain an advantage of $6 million?
Yes, that's right. I wasn't involved in that, so I don't know.
Right. Did ANZ make other changes to the terms of customers' loans when it redocumented the loans?
Again, I think that needs to be addressed on a case-by-case basis. I don't think there's one remark that could describe what happened to all of the customers. So I think I'd need to address that on a case-by-case basis.
Are you aware of any general types of changes that were made across large numbers of the loans?
No, I'm not. The ones that I've seen have been changes on a case-by-case basis. I haven't seen anything that's indicated a wholesale change at any one point in time.
You don't know if that happened or not?
Well, I haven't seen any evidence of that happening.
Okay. Now, you've told us in your statement that ANZ acknowledges that its communication with former landmark customers wasn't always satisfactory.
Yes.
And ANZ acknowledges that some former landmark customers experienced delays in receiving responses to information and funding requests.
In some cases, yes.
And ANZ's acknowledged that this conduct fell below community standards and expectations.
In certain respects, yes, we acknowledge that.
In which respects, Mr Steinberg?
Well, in respect of the things that we've spoken about, the communication, the lack of responsiveness, I agree with that.
The migration across,
Yes.
yes. And there were also issues in cases where customers were transferred to lending services. Is that right?
Yes, that is.
And you tell us in your statement that lending services is the division of ANZ that's responsible for the high-risk loans.
Yes, that's right.
And in what circumstances might a customer's file be transferred to lending services?
So the way we determine that, Ms Orr, is based on the customer credit rating. So at ANZ we have a customer credit rating system that goes from 0 to 10, 0 being a top quality credit and 10 being an impaired loan.
Yes.
And so our system is that when an account reaches a risk grade of 7D, it's classified as high risk,
Yes.
and then typically would be transferred to lending services. There can be some exceptions either way of that.
Okay. And who decides whether a file should be transferred to lending services?
So they would normally be what I would call a credit decision that's made by the authority holders on a customer by customer basis. Ordinarily there'd be a credit paper that would be prepared documenting the circumstances with a recommendation that would then have to be decisioned by the authority holders.
And what does lending services do once the file's transferred to it?
So typically what we would do is we would go out and either meet or make contact with our customer. We'll then undertake a review of the customer's circumstances to understand the reasons as to why they found themselves in lending services. And then we would talk with our customer to try and establish a strategy for how to get that customer back on track.
And did any Landmark staff come across to ANZ's lending services division?
A small number did, yes.
Do you know how many?
No, I don't.
A small number, you say. So if a former Landmark customer's file was transferred to lending services, then a large number of them would have been dealing with ANZ employees rather than former Landmark employees. Is that right?
I don't think so. My understanding was that there was enough Landmark Lending Services equivalent staff that came across into ANZ's lending services to continue to manage the accounts that they were managing, but there may have been some cross pollination in that process as well.
Well, did it remain the case that there were enough former Landmark staff in lending services to deal with all the former Landmark files that were coming across to lending services?
As time progressed, no.
Yep. And how quickly was that the case?
I don't know. I haven't looked into that, so I don't know.
You told us earlier that at the time of the acquisition, the total value of the Landmark loan book was $2.298 billion.
Yes.
And you tell us in your statement that of that 2.298, 273 million, or 12%,
Yes.
was classified as D1 stress, D2 legal action, and E default. Can you explain those classifications?
Yes, so they are landmark classifications. So D1 and D2 would be what I would classify as our risk grade 7s and 8s. So they're in that what we would call the high risk category, but not
Yes.
yet impaired.
Yes.
The E loans are what I would call our risk grade 10 loans, which are the loans that have an impairment charge or an individual provision against them.
So those figures mean then that ANZ knew before the acquisition that a significant proportion of the Landmark loan book presented a risk.
Yeah, so we knew that those 273 million were risk graded D1, D2 and E, and we understood that they were the higher risk elements of the Landmark portfolio.
Yes, I see. Now, can I take you to another of your exhibits, Exhibit 3, which is ANZ 800 616 1038. the financial due diligence report
Yes.
for ANZ's acquisition of the Landmark loan book prepared
Yes.
by McGrath-Nicol.
Yes.
What's the purpose of a financial due diligence report, Mr. Steinberg?
So the purpose of this was to understand the financial metrics of the pending acquisition, including the portfolio, the makeup of the portfolio, provisioning, profitability. It's essentially a financial review of the business that the bank was looking to acquire.
And we see at 1045 that this report sets out an overview of the proposed transaction. We see it's recorded there that Landmark was a specialist agri-finance provider to rural Australia, offering its customer loans, savings accounts and insurance services.
Yes.
The loan book and debenture book are considered in scope and the insurance business out of scope for the proposed transaction.
Yes.
Landmark reaches its customers via a mobile network of regional financial managers who operate primarily out of Landmark-owned or franchised stores. A significant component of the proposed transaction involves ANZ and the vendor negotiating an acceptable distribution agreement. That's the agreement we referred to before
Yes.
in relation to the sale of ANZ products.
That's right.
Our scope does not include analysis of the proposed distribution agreement. The loan book is managed within two trusts, specifically the RWT and CPT, which are primarily funded by ANZ and Rabobank. The contemplated transaction involves ANZ purchasing certain assets and liabilities of Landmark, which include, and there's a note there that I won't read out, they include a loan book of 2.354 billion, which resides in the CPT and RWT. The total loan book is 2.372 billion, but 18.2 million of the loans sit in Landmark, and the current proposed transaction excludes those loans. And total provisions of 111.6 million associated with in-scope loans.
Yes.
This includes a specific provision as calculated by ANZ credit risk of 45.4 million.
Yes.
And a collective provision as calculated by ANZ Capital Management of 66.2 million.
Yes.
Now, can I move then to the following page before asking you some questions, where the report sets out the transaction rationale. We understand ANZ is interested in the proposed transaction for the following reasons. ANZ's agribusiness market share is less than its key competitors, therefore the proposed acquisition would achieve significant growth in market share, and ANZ's current agribusiness loan book is of higher quality than the profile experienced by Landmark. Therefore, the proposed acquisition would combine a high quality loan book with a lesser performing loan book.
Yes.
So we see there that ANZ considered that its loan book was of higher quality than the Landmark loan book.
Yeah, that's a statement by McGrath-Nicol.
I'm sorry, yes.
Yes, that's right.
Yes, and this was prepared for ANZ
Yes,
for the
that's right.
financial due diligence.
Yes.
And there is recognition there that compared with ANZ's existing loan book, a greater proportion of the Landmark loan book was likely to be problematic. Is that right?
Yes.
And McGrath-Nicol go on to set out their key findings from the due diligence that they conducted. At 1047, they commence. And I just want to take you to a few of those. Now, on this page, we see key findings in relation to the loan book. And we see there that as the loan book had shown signs of significant deterioration over the past 12 months in respect of both risk rating and security indicators, there was a significant risk of managers incorrectly classifying customers by risk rating and or security indicator, which may hide further evidence of deterioration in the loan book portfolio. Specifically, there may be a large number of loans currently classified in the C1 or C2 risk category, which are in fact D1 or D2. Limited credit management resources not being able to closely manage those accounts which require attention as the loan book quality decreases and the number of managed accounts continues to increase. Now, McGrath-Nicol suggests a recommendation in the right-hand column to address this problem. We see that in the third bullet point down, ANZ operations may need to consider increasing the number of credit management personnel to focus on the credit risk rating classifications, with support from RFMs prior to the transaction being completed or immediately following transaction close. The objective is to ensure close to 100% of the loans are independently reviewed to assess Landmark's classification by risk rating and security indicator, to ensure compliance with ANZ policy and that problem accounts are identified and a strategy to manage those accounts is put in place.
Yes.
So we see there that McGrath-Nicol is recommending to ANZ that it may need additional credit management resources to manage the issues, perhaps some hidden issues with the Landmark loan book. You see that?
I see that, yes.
And did ANZ put in place extra credit management resources to manage this issue?
I'm not aware of anything specific, Ms. Orr, that was added, but my understanding was that at the time the bank had the right resources dedicated to, managing this process and also the accounts that were subsequently then transferred into lending services. But I didn't have any direct involvement in this process.
Well, can you see there that McGrath-Nicol didn't think ANZ did? McGrath-Nicol thought that additional credit resources would be required.
Yes, I understand that.
You don't know whether those additional credit resources were obtained?
No, I wasn't involved. I can see that it's a recommendation there from McGrath-Nicol, yes.
Okay. And you don't know whether the recommendation was adopted?
No, other than I was around the bank at the moment, and my understanding was that there were sufficient resources to deal with it. But yes, I do not know specifically what was done.
Okay. All right, can we turn to 1049, still within the McGrath-Nicol report? And we see there some further key findings, and we see a breakdown on 1050. Could I actually have, if it's possible to have 1049 and 1050 both on the page, that would be helpful. It may not be because of the orientation. Thank you. So we can see there a breakdown of the loan book both by risk rating on the left-hand side and by security rating on the right-hand side.
Yes.
And if we could enlarge the right-hand side, focusing on security rating, can you see, Mr. Steinberg, that more than 45% in total of the loan book by value had either a D, E or F security rating, both in November 2008 and in August 2009?
So are you looking at the table of 1050 there?
I am.
Yes.
And I'm looking at the D, E and F classifications.
Yes.
Both in 2008 and 2009.
Yes.
And I'm adding those figures and I get to more than 45%. And Mr. Hosking helpfully points out for me that I don't need to add the figures because they're added underneath. Some B,
yes.
45.8.
Yes.
And 45.9, so you don't need to do the maths that I've done, Mr. Steinberg. So you can see there that more than 45% of the loan book by value had either a D, E or F security rating.
Yes, I can.
Are those concerning figures?
Not necessarily. So the security indicator is not an assessment of probability of default. So these security indicators, as I understand it, Ms. Orr, are ANZ security indicators, not the Landmark risk rating
Yes.
ratings.
Yes.
And So what that's saying is that 45% of the book are not over or well secured, and in a lending portfolio that's not necessarily unusual. The bank does lend on cash flow, and we do take security to support the cash flow, but predominantly our purpose of lending is around cash flow. I agree with you that it would be better if that number was lower, but other than that, it doesn't look remarkable to me other than that.
I see. Not concerning to you, those figures?
Well, I prefer it to be lower, but it's just telling us that the security is not as strong as we would like it to be.
Can I ask you to look at 1078, where McGrath-Nicol...
1078?
Yes, McGrath-Nicol make a number of observations about the control environment. You see their landmark policy observations at the top of the page. And under the heading, what we see on this page, I want to suggest to you, is some of the reasons that McGrath-Nicol has identified as to why there were issues with the quality of the landmark loan book. And they included the issues in relation to delegated authorities. You see there that the branch-located RFMs appear to have an uncomfortably high level of formal authority in the qualitative aspects of loan approval and management. For example, RFMs can roll over existing loans under $500,000, perform their own assessments of valuations, and monitor accounts. RFMs are incentivised up to 20% of base pay to establish new loan facilities, and despite best intentions could have difficulties with being truly independent, considering the size of the communities they serve and the extent that their success is also highly reliant on them building friendships with their customers. There are very few independent valuations. Generally, all valuations are informal and driven from the branch level, either from the RFM's own appraisal or through landmark real estate. And further down, on face value, in the absence of compensating controls, the high involvement of RFMs in qualifying the quality of their own loans puts a significant degree of risk into the loan portfolio. You see that?
Yes, I do.
Now, these practices were different from the practices of ANZ at origination at this time, is that right?
Yes.
And we see also on this page, McGrath-Nicol identifies under the heading regulatory pressure that Landmark is not a licensed ADI, as such is largely unregulated and has limited external pressures relating to the strength of its control environment. The LFS regulatory oversight comprises an AFSL, requiring Landmark operations to have an external auditor and report on cash liquidity, external auditor and reporting requirements by AWB Limited, lending guidelines and biannual operational review or audit, and the debentures are required to be sold with a prospectus. They were the only regulatory matters for Landmark, is that right?
Yeah, or the regulatory oversight matters as...
Yes.
Yes, that's right.
And what was the effect of Landmark not being regulated in the same way that ANZ was?
Well, as far as the work that I've seen is concerned, they did not have the same processes in terms of evaluating their lending. They did not have to sign up to the Code of Banking Practice as an ADI does, and that is the biggest difference that I've seen have an impact based on the work that I've done.
So these are all matters about the quality of the Landmark loan book that were well understood by ANZ at the time of the acquisition. Is that right?
Yes.
Now, can I then just take you back within this document to 1052? And this is back into McGrath-Nicol's key findings, and this page relates to the provisions made by Landmark Management. And if we turn to the following page, which is a continuation of this at 1053, we see that McGrath-Nicol formed the view that overall management-specific provision and collective provision process was poor, and the dollar value of both the specific provision and collective provision was significantly understated. Our view has been supported by the detailed file review and provision assessment performed by ANZ Credit Risk. You see that?
Yes, I do.
And McGrath-Nicol went on to say, further down at the bottom of that page, we applied an arbitrary risk weighting across the risk rating categories and concluded a provision between 82 million and 110.9 million using 100% and 80% of loan book real estate security values respectively. ANZ Credit Risk and ANZ Capital Management have calculated a total provision of 111.6 million, which is at the top end of our high-level due diligence estimate.
Yes.
Now, did ANZ go on to make provision for the Landmark loans in accordance with McGrath-Nicol's recommendations?
We certainly made provision at the acquisition and in terms of calculating what the final purchase price would be, and that's outlined in the completion accounts that were prepared. I can't tell you right now if we use the exact numbers that McGrath-Nicol put in front of me, but I'm happy to go to that document if you'd like me to. But we have allowed in that document for an adjustment for individual provisions and collective provisions, which the two of them together, I can't recall right now what it came to, but...
So that's all right. Your understanding is that ANZ did make provision for the problematic loans, is that right?
At acquisition and in terms of the purchase, yes.
And it was aware when it did that, that the quality of the loan book that required that provision had come from factors such as a poor control environment within Landmark, a lack of regulatory oversight of Landmark. Do you accept both of those things?
Yeah, I accept that they were the shortfalls identified, and when the due diligence was done, they would have known about that. Yes.
And do you accept that all of these matters that ANZ was looking into at this time, which led it to make provision for these problematic loans, meant that ANZ was well aware that the Landmark customers that were moving across to ANZ, a significant number of them were likely to experience financial difficulty?
I'm prepared to accept that we knew that some were going to experience financial difficulty. There is a number that's in our completion accounts, a dollar number,
yes.
So we can refer to that as a fact as to what that number was. I just can't remember it now. I think it is significant though, so...
Yes, it was significant, but I would like you, Mr Steinberg, not to focus on the dollar number.
Yes.
I'm not interested so much in the provisioning that ANZ did. I'm
Yes.
interested in whether ANZ calculated how many customers were going to experience financial difficulty and put a system in place to deal with the impending financial difficulty that those customers were about to encounter.
The documents that I've seen have all centred around calculating the overall dollar provision.
I understand that. So from a business perspective, ANZ was provisioning for this. What I want to understand is what ANZ was doing to deal with the human impact of what you were seeing in these documents, the fact that you were taking on all of these customers who were headed for financial difficulty.
Well, we had set up our usual processes and procedures that were available to manage those accounts. I haven't seen anything that specifically addresses the number of customers, and so I'm not able to tell you now how many of those customers we provided for, but neither is it necessarily the case that as the Landmark acquisition occurred, that there was going to be a material move of customers into lending services.
But the poor quality loan book meant that it was inevitable that you were going to have customers experiencing financial difficulty, didn't it?
I think that's fair. What we didn't know was the timing as to when this would occur. So I wouldn't want to characterise it as on the day of the acquisition that there was a large number. It was just something that progressively happened over time.
Yes, and you knew it was going to happen over time. So did you start training your lending services staff in having the difficult conversations that they were going to need to start having with the landmark customers?
So, Ms. Orr, I wasn't running this part of lending services at the time that this happened, so I can't speak of having any direct knowledge in that. But I do know that there were plans going on at the time and there was discussion going on at the time. But I also don't want to give the impression that there was an exodus of these accounts into lending services. That's not my understanding of what happened. My understanding is that there was a progressive move of a number of these accounts on an as-needed basis as credit decisions were made. And so I don't feel that there was any massive one-off impact on that group of people.
Well, did you start putting together a team within lending services to deal with your agribusiness clients?
Are you referring to the specialist team that we...
No, I'm not talking about events much later on. I'm talking about because of the knowledge that you had about the poor quality of the landmark loan book, whether one of the things you did in response to that was set up a specialised agribusiness team within lending services.
In 2010? No, we didn't.
And why not?
Well, at that time, we did have people in that lending services team who had experience in working with agri-business customers, but there was no decision made at that time to establish a dedicated agribusiness team.
Did you do all that you could to retain the landmark employees that were coming across to make things easier for the customers in their dealings with the bank?
So my understanding is we did.
And you were unsuccessful?
Based on the metrics that I've seen, the 10% in the first 6 months and looking like losing 20%, there were more that went than we expected.
And you accept in your statement that that led to a loss of corporate memory of the former landmark customers' files?
Yeah, I think it's I think that's right. It's not unusual in banking to have relationship managers change, and so this is something that generally bankers are accustomed to dealing with. But I otherwise accept that there were people that left and that resulted in a loss of memory, yes.
And you noted that in your statement, the loss of corporate memory that flowed from the loss of those landmark managers, and that led to the loss of established relationships that many of the former landmark customers had with their bankers, didn't it?
In those cases when they left, yes, it did.
So what I want to put to you, and as I see the time, this will be my last question for the day, what I want to put to you is that although ANZ provisioned financially for the high-risk loans, it didn't really prepare itself to deal with the effects that the failure of those loans would have on the borrowers.
No, I don't agree with that proposition. My understanding is that the lending services team at the time who would have managed these accounts were aware that the acquisition was happening, and my recollection is that there was activity, although I can't tell you what that activity was because I wasn't involved in it, but I knew that there was activity going on in the event that landmark accounts had to transfer into the lending services area. That's my recollection of the events.
There was some activity.
Yes.
You don't know what the activity was?
Well, I wasn't involved in that business at the time, so unfortunately I don't know.
All right. Perhaps if we could leave it there for today, Commissioner.
I'll resume sitting tomorrow at 9:45, rather than 10 o'clock, so 9:45 tomorrow morning. Thank you. sorry we've started late, but the technology gremlins have apparently done their thing again. That which was tested this morning then proved it wanted to have a little holiday. So there we are. Yes, Ms. Orr.
Thank you, Commissioner. Now, Mr. Steinberg, I want to pick up where I left off yesterday. We were dealing with ANZ's...
Can't hear.
We were dealing
Well,
with...
I won't have interruptions like that. I just won't have it. Go on, Ms. Orr.
We were dealing with ANZ's provisioning for the landmark loan book. Now, is it fair to say that the quality of the loans that comprise the landmark loan book was worse than ANZ had anticipated?
Yes.
And in your statement, you've provided a table that sets out the number and value of the former landmark accounts that were impaired and high risk.
In my rubric 4,
Yes, your original statement.
yes, I do, yes.
If we go to that, that's at paragraph 35 of your first statement. Get the document ID for that. It's ANZ 999-010-0069. That's the statement, and the table appears.
Well, mine is 79, Ms. Orr. Is that paragraph 35?
Yes, I'm sorry, I was directing you first to the first page of the statement, which
Oh,
you
yes.
now have on the screen, and then the table that I want you to look at is at 0079 to 0080. Now,
So I've got a table that goes from 7.8 to 7.9.
Thank you.
Yeah,
Now, you've described in your statement, Mr. Steinberg, what an impaired loan is in paragraph 35A of your statement, one that's been assessed as having a rating of 8. Is that 8 minus? Is that how I read that?
yes, it is.
8 minus 9 or 10.
Yes,
You've also described what a high risk account is in paragraph 35B with an internal risk grade of 7 plus D or worse.
yes,
Now, if we turn back to the table that you've provided, which is in paragraph 34, we'll need 7.9 and 7.8 on the screen at once, please. We see that in March 2010, there were 113 impaired landmark accounts,
yes,
and there were 320 high-risk accounts.
yes,
For a total of 433.
that's right.
And your table doesn't include figures for 2011 or 2012. Why is that, Mr. Steinberg?
Because that data was not available to us.
It's still not available to you?
That's right, yes.
And then in 2013, we can see that you're up from 113 impaired accounts to 419 impaired accounts. Is that right?
Yes,
And you're up from 320 high-risk accounts to 631 high-risk accounts.
from 320 to 631, is that what you said?
That's right.
Yes, that's right.
So in 2013, you've got a total of 1,050 impaired and high-risk landmark accounts.
That's right.
And they had a total value, those accounts, of $722 million,
That's right.
which is almost a third of the value of the former landmark loan book as it stood at that time. Is that right?
Yes,
So a significant volume of the landmark loans by 2013 were in the impaired or high risk category.
yes, I'd agree with that.
And you've agreed that that was worse than ANZ expected of the loan book. Is that right?
Yes,
Can I take you to a document that's not in your witness statement, which is ANZ 800 075 5114.
Is this one of the... Do I have the document
I
here?
think you may have the document there, Mr. Steinberg. I understand your counsel have provided you with a folder of some documents that we put them on notice of.
Is that the tender bundle?
Yes. I don't know how that folder is organised, Mr. Steinberg, so I won't be able to assist you to find the document within the folder, other than to tell you that the document ID is ANZ 800 075 5114.
Yes.
Now, this is minutes of an ANZ board meeting on the 6th of August 2015.
Yes.
And on that date, ANZ's board considered some of the issues that were arising by that time from its acquisition of the Landmark loan book.
I don't know, but if you can take me to the area where it considers that.
You've seen this document before though, Mr. Steinberg. Your lawyers have provided it with you in preparation for the hearings today.
Yes, I saw it over the course of the weekend, but I haven't looked at the document in detail.
Let me take you to the part
Yes.
that I'm concerned with, which is 5124. And what we see there is that at this meeting of the ANZ board on the 6th of August 2015, the minutes record that the board discussed a paper titled Farming Segment Supports Strategy and, heard comments from Mrs. Whelan, Williams, Bezenkon and Linden, who highlighted a number of points. And I want to direct your attention to the second point that they highlighted, which is there is a lesson to be learned from the Landmark acquisition in connection with assumptions that were made around delinquencies and expected losses that were not stress tested. You see that, Mr. Steinberg?
Yes, I do.
Now, do you know what the assumptions are that are referred to there?
No, I don't.
You don't know what assumptions ANZ made in connection with the Landmark acquisition?
No, I don't.
ANZ has put you forward to give evidence about the Landmark acquisition, Mr. Steinberg. Are you telling the Commission you are unable to tell us what assumptions ANZ made in connection with the Landmark acquisition?
Yes, that's what I'm saying.
Well, Dr. Collins, your side chose this witness. What am I to do?
The question with respect, Commissioner, began from the premise of the second bullet point on the page on the screen.
Yeah, I understand
The
that.
question was then put on a much broader basis. It might be that if the question were clarified to the witness, put in the first formulation concerned assumptions made around delinquencies. That's one matter. The second formulation concerned assumptions around the acquisition, which is quite a different matter. I respectfully request that if that's the matter which counsel assisting wishes to inquire into, the question ought to be re-put.
Well, I rather thought the answer to my question meant that even the subset of the assumptions that were identified in this document was not a topic that he was able to give evidence on. I'm happy to put the question in relation to the
Again, and see
subset
what answer
and
he
see if I
gives.
get a different answer. Are you unable to say, Mr. Steinberg, what assumptions ANZ made in relation to delinquencies in connection with the Landmark acquisition?
What I am able to talk to is the level of provisioning, which I'm assuming that that's what they mean by delinquencies, the level of provisioning that was allowed for when the loan book was assessed and when the completion accounts were done, as at the 1st of March, which then became part of the adjustment at the acquisition.
So do you interpret this to be referable to assumptions that were made in connection with the provisioning?
That's how I'm reading it, yes.
And in that case, what do you understand the lesson to be learned from the assumptions that that ANZ made in connection with provisioning to be?
So, Ms. Orr, I wasn't at this meeting, and there's been no description of this particular matter having been discussed at the meeting given to me. So I'm trying to read into it what it might mean.
You've made no inquiries of the people who were present at this meeting, having been provided with this document in preparation for your evidence?
No.
All right. Well, Mr. Steinberg, what does it mean to stress test losses?
I assume the meaning of that is to do some tests to try and determine what the losses might be under different scenarios.
Yes. And do you see here that there is a lesson to be learned, according to the people who addressed this meeting, in connection with expected losses that were not stress tested?
Yeah, I mean, what I'm interpreting from that is that the losses were ultimately higher than what we expected them to be, and therefore at the time when we did the due diligence, which resulted in us calculating what the provisions should be, that we hadn't done that work certainly correctly in the sense of the way it turned out.
Or did ANZ stress test the expected losses?
I haven't seen any stress testing. What I've seen is the due diligence work that was done, and then the completion accounts, which outline the final adjustment for provisioning.
So you've seen no suggestion that there was stress testing of the expected losses?
No, I don't recall seeing anything like that.
So from that, given that you are the person here giving evidence about these topics, do we understand the situation to be then that there was no stress testing of the expected losses?
I think the best that I can say is that I'm not aware of there being any stress testing.
And you would be aware if there was, wouldn't you, Mr. Steinberg, because you prepared to give evidence about these topics to the Commission?
Yes, I did, but the work that I did was generally in response to the questions that we received, and so as I worked through those questions, that particular issue did not come up, and so I haven't inquired or asked for information specifically on stress testing.
You were asked a series of questions about ANZ's conduct in connection with the acquisition of Landmark, weren't you?
Yes, that's right.
And you addressed that in your first statement.
Yes, that's right.
You did not inform yourself about these particular matters. Is that your evidence?
Yeah, I did not inform myself about stress testing, yes.
Okay. All right. I tender that document, Commissioner.
Exhibit 4.12, Minutes ANZ Board, 6 August 2015, ANZ 800 075 5114.
And now, Mr. Steinberg, in the years that followed the acquisition, ANZ received complaints about its handling of the accounts of former Landmark customers. Is that right?
Yes.
And in your statement, you categorised those complaints. You explained that they related to a lack of communication from ANZ about the transition from Landmark to ANZ.
That's right.
They also involved complaints about issues associated with the transition, including an inability by people to access and manage their accounts.
Yes.
And they included complaints about changes in the frequency of interest payments when customers' loans were redocumented.
Yes.
And complaints about other changes in facility terms.
Yes.
Complaints about default notices being issued by ANZ.
Yes.
And there were allegations that ANZ had required customers to sell their properties in circumstances that resulted in a sale at undervalue.
Yes, that's right.
And some former Landmark customers took their stories to the media.
That's right, yes.
And two of those were Charlie Follott Sr. and Charlie Follott Jr., who ran Carisbrook Station near Winton in north central Queensland.
Yes, that's right.
And when did stories about Mr. Follott's treatment by ANZ first start appearing in the media?
So my understanding is December 2014, where there was some radio media coverage, and then again it was around June 2015 when there was some television coverage on 60 Minutes.
Thank you. So the first publicity in connection with Mr. Follott's story was December 2014.
Yes,
And you've acknowledged in your first statement that ANZ's conduct in relation to Mr. Follott Jr. Fell below community standards and expectations.
yes,
And you've also acknowledged that ANZ's conduct in relation to Mr. Follott Jr. Was in breach of certain clauses of the Code of Banking Practice.
yes.
Can I just ask you to look at the Code of Banking Practice while I ask you these questions, which is RCD 9999 0035 0001. Are you familiar with the Code of Banking Practice as it was in place at this time, Mr. Steinberg?
I am familiar with the Code of Banking Practice. I can't recall off the top of my head what was in place at this particular time, but I am familiar with it.
This is the Code of Banking Practice published in May 2004, which we understand to be the version that was in place at the relevant time, and the version that you've referred to, I think, in your statement.
Yes.
Could I ask you to turn to 0006 of that document?
So is this in 4.1 again?
No, I'm sorry, I don't think you will have that document. This is not an ANZ document, this is a Commission document, so you'll need to look on the screen. And we see there clause 2.2 of the Code of Banking Practice obliged ANZ to act fairly and reasonably towards customers in a consistent and ethical manner. In doing so, we will consider your conduct, our conduct, and the contract between us. Now, you've conceded that ANZ's conduct in relation to Mr. Follott Jr. breached that obligation. That's right?
Ms. Ord, can I have a look at my table 8, please, in my
of course,
statement?
Mr. Steinberg.
Thank you.
If we could bring it up on the screen as well, that might assist. It's ANZ 999 010 0087. Now, there's been some redactions made to that page, but we understand that Mr. Follott is comfortable with us referring to his identity. There's been contact with the Commission, so you can see in your version, Mr. Steinberg, the part of this table that relates to Mr. Follott Jr.
Yes, I can.
It's the second row in the table on this page.
Yes,
And you can see there that you've acknowledged breaches of clause 2.2 and 25.2 of the Code of Banking Practice in relation to Mr. Follott Jr.
yes. That's right.
So you now can answer my question about having conceded that there was a breach by ANZ
Yes.
of clause 2.2, which I just directed you to.
Yes.
And in general terms, can you explain what it was about ANZ's conduct towards Mr. Follott Jr. that breached the obligation in clause 2.2?
Well, there were two aspects, as I understand it. The first aspect was in that ANZ took responsibility for some of the dealings that Landmark had with Mr. Follott in relation to the original lending to to the customer. And then the second aspect was post ANZ's acquisition, the manner in which we communicated with Mr. Follott, and the fact that we felt we did not work constructively with him in a way to resolve the issues with him.
Those are the ways in which you say ANZ breached clause 2.2 in relation to Mr. Follott Jr.
Yes.
Right. You've also
Well, can I understand that? You say you did not act constructively. Are you saying you did not act fairly and reasonably? You're saying the bank did not act fairly and reasonably?
Yes, I think that's correct.
Are you saying that the bank did not act in a consistent and ethical manner?
Commissioner, I think that the bank did act in a consistent manner in terms of its dealings there. There was a history of requesting debt repayment over a period of time. I think the dealings were consistent, but I think they weren't fair and they weren't reasonable.
And the fourth element to which you have not referred is ethical. Did the bank act in an ethical manner?
I think it's fair to say we didn't.
You've made another concession in relation to Mr. Follott Jr., which is that ANZ breached clause 25.2 of the Banking Code of Practice. Clause 25.2 is at 0014 of this document. Sorry, if it assists, the full number is RCD 999900350014. Do you see there that the obligation imposed on ANZ by clause 25.2 reads as follows: with your agreement, we will try to help you overcome your financial difficulties with any credit facility you have with us. We could, for example, work with you to develop a repayment plan. If at the time the hardship variation provisions of the Uniform Consumer Credit Code could apply to your circumstances, we will inform you about them. Now again, could you explain, Mr. Steinberg, what it was about ANZ's conduct towards Mr. Follott Jr. that breached that obligation?
Yeah, my understanding is that we issued a notice on our customer, effectively terminating the facilities and requesting repayment of them, and I believe that's the conduct that did not comply with that section of the code.
In that conduct did not constitute ANZ trying to help Mr. Follott overcome his financial difficulties with his credit facility with ANZ?
At that time, yes.
Thank you. I tender the Banking Code of Practice from 2004, Commissioner.
Exhibit 4.13, Code of Banking Practice as at 2004, RCD 999900350014, 0001 rather. So the number is 999900350001.
Now, in that statement, your first statement, Mr. Steinberg, you said that there were nine other cases where ANZ accepted that it engaged in conduct in relation to a former landmark customer that fell below community standards and expectations or was in breach of the Banking Code of Practice.
Nine others, that's right.
Thank you. And in a letter that ANZ sent to the Commission in May this year, in response to a request for information about any misconduct or conduct falling below community standards and expectations in relation to agribusiness. ANZ also said that it had recently become aware of a claim made by a former customer arising from its conduct in transitioning facilities acquired from Landmark to ANZ. ANZ said that although the conduct took place in 2010, the claim was first raised with ANZ in late January 2018. ANZ has now identified what it anticipates may be breaches of the Australian Banking Association's Code of Banking Practice and is in the process of investigating the circumstances and whether loss has been suffered as a result of its conduct. Are you familiar with that letter and that part of that letter, Mr. Steinberg?
Yes, I am.
Now, has ANZ now investigated the circumstances of that customer?
We're certainly in the process of investigating it, but we haven't concluded our investigations at this stage.
Are there any preliminary conclusions or findings that ANZ has reached?
What we've done is we've presented the facts of the matter to a group of senior people at the bank. We've determined that we'll get some legal review done, and that we should then present the matter to the bank's customer fairness officer for some guidance and some adjudication, and that's where the matter currently sits at the moment.
At this stage, does it appear that the customer has suffered loss as a result of ANZ's conduct?
I don't think we've bottomed that out yet, Ms. Orr. Our customer feels that they have, but that's something that we're looking into. I haven't yet reached that conclusion.
And does it appear at this stage that ANZ has breached the Code of Banking Practice in relation to that customer?
Again, I haven't yet reached that conclusion. I think it's possible, but I haven't yet reached that conclusion.
And which part of the Code of Banking Practice applies here?
It'll be the obligation to act fairly and reasonably.
So ANZ is still investigating whether or not it acted fairly and reasonably towards that customer?
Yes, that's right.
And when do you anticipate that investigation will conclude?
Look, I don't know. It entails us arranging some meetings with various people and obtaining some more information. I don't know.
Are you able to give any estimate?
I can give an estimate of 6 weeks.
Thank you. Now,
Just understand how many man hours that entails.
Look, again, an estimate, Commissioner, I'd say it's 15 to 25 man hours.
Spread over that time.
And then it's a matter of getting some legal guidance and then sitting down with the customer fairness advisor. So I have been conservative to make sure that I don't overpromise and underdeliver.
has ANZ met with that customer, Mr. Steinberg?
Yes, we have.
Thank you. All right. Now, the Commission asked ANZ to provide a statement explaining its conduct in relation to 7 particular former Landmark customers.
Yes.
And in 4 of those cases, the statements that you've provided contain acknowledgements by you that ANZ engaged in conduct that fell below community standards and expectations.
Yeah, without actually going through each one of them, that sounds about right, yes.
There are 7?
There are 7 in total.
There are 7 in total.
And I know there are some where we've made some admissions on community standards and
yes, well,
one on misconduct, yeah.
I'm putting to you that there are 4.
Yes,
of the
I'll
7.
accept that,
Do
yes.
you accept that?
Yes.
And in one of those cases, you also accept that ANZ engaged in misconduct?
Yes, that's right.
All right. And in the other 3 cases, you've not accepted that ANZ's conduct fell below community standards and expectations,
Yes.
or that there was any misconduct.
Yes.
But in each of the 7 cases, you've accepted that there are things that ANZ could have done and should have done differently.
Yes.
And I want to ask you some questions about each of those cases.
Yes.
And the first case that I want to take you to relates to the Cheeseman family
Yes.
and their company, Cheeseman Family Farms Proprietary Limited. You have your statement in relation to that matter, Mrs.
Yes.
Steinberg.
Which statement is it, Ms. Orr?
This is a statement responsive to rubric 438,
Thank you.
and the document ID for the statement. Sorry,
I've got for the statement, which annexure?
oh, it's annexure G. I'm sorry, Commissioner.
Thank you.
At ANZ 999-013-0001.
Thank you.
Now, Mr. Steinberg, the Cheesemans ran a farm in Western Victoria. Is that right?
Yes, that's right.
And that farm produced hay, cereals, oilseeds, and pulses, including lentils.
Yes.
And the members of the Cheeseman family who were involved with the farm were Arthur and Rhonda Cheeseman and their son Reuben Cheeseman and his wife Katrina.
Yes, that's right.
And they were 3rd and 4th generation farmers who'd farmed in the area all their lives.
Yes.
And the farm was spread across a number of properties, some of which were owned by the Cheesemans and some of which were leased by them.
Yes.
And most of the properties that they owned are described in a table in your statement at paragraph 30, which is ANZ 999-013-0001 at 0011.
Yes, that's right.
Now, we can see from your table, which will come up on the screen, but you have a copy there,
Yeah.
that there are 3 properties in the table: the Lens property, the Scottsdale property, and the River property.
That's right.
And each of those properties comprised several parcels of land.
Yes.
And Arthur and Katrina Cheeseman lived on one of the parcels of land that made up the Scottsdale property.
Yes.
And there was also a 4th property, which isn't referred to in your table, which was called Wingfield Road. Is that right?
That is right, yes.
And Reuben and Katrina, Reuben, the son of Arthur and, the son of Arthur and Rhonda Cheeseman, my mistake. Arthur and Rhonda lived on one of the parcels that made up the Scottsdale property, and their son Reuben and his wife Katrina lived on the Wingfield Road property.
Yes.
Yes. Now, do the Cheesemans still own any of these properties? Do they own any of the properties in the table? Do they own Lens, Scottsdale or River?
No, not to my knowledge.
And do they still operate their farm on any of those properties in your table?
Look, I don't believe so, because all 3 of them have been sold by the Cheesemans, yes.
And they don't live on any of the properties in the table either?
No.
Now, the Cheesemans were former Landmark customers,
Yes.
and you've considered ANZ's conduct in relation to the Cheesemans,
Yes.
and in your view, aspects of ANZ's conduct fell below community standards and expectations.
Yes, that's right.
And I'll come to that conduct, but in addition to that, you acknowledge that there were other aspects of ANZ's management of its relationship with the Cheesemans that could have been handled better.
Yes, that's right.
Okay, now to understand some of the decisions that ANZ made in relation to the Cheesemans, I want to go back to 2010 when ANZ acquired the Cheesemans loans as part of the Landmark loan book.
Yes.
The Cheesemans had been clients of Landmark, you tell us in your statement, since 2004.
Yes, that's right.
And at the time they came across in March 2010, they had a term loan with a limit of $2.95 million.
That's correct.
And they also had a seasonal facility with a limit of $650,000.
Yes.
Now, even before ANZ acquired the Landmark loan book, the Cheesemans were facing financial difficulties, weren't they?
Yes.
Landmark had already been considering downgrading their risk rating,
That's right.
and when they moved across, their facilities were already overdrawn.
Well, I don't quite remember that point. Can you take me to something
Yes,
in my
paragraph
statement?
41 of your statement.
Thank you. Yes, that's right, Miss Orr, yeah.
Thank you. Now, could I take you to one of the exhibits to your statement, which is Exhibit 19. This is ANZ 160-003-0272. There are a number, I think there are multiple documents behind that tab of your statement, Mr. Steinberg, and 0272 is the second document behind that tab. You should only need to turn one page and one pink page into the exhibit, Mr. Steinberg, if you go back to the start. The first document is 0298. If you go back to the first document there, you'll see 0298.
Yes, I do.
Then it looks like you have a pink page, and behind that you have the document that I'm directing you to, 0272.
Yes.
Okay. Now, this is a credit submission that was prepared by Landmark in May 2009 before the acquisition.
Yes.
And if we turn to the fifth page of that document, which is 0276, we
Yes.
see a summary of the Cheesemans' financial information for the past 3 financial years. Now, we have redactions there, but you have a version that allows you to see that information. And you can see that in each year, the farm had made a loss, each of the last 3 financial years.
Yes.
And you can see that in the 2007 and 2008 financial years, the interest costs being paid by the Cheesemans were around 40% of the total farm income.
Yes, close to it, yes.
And underneath this table, we see comment on historical financials. Do you see that part of the document, Mr. Steinberg?
Yes, I do.
The comment there is, clients' interest costs are exceptionally high and are dramatically impacting the client's profitability. Interest is a reflection, however, of the client's high debt-to-income ratio. Given a reasonable year, the client should achieve a sound income, and they now realise that they need to look more closely at their expenses. The client's accountant has been working closely with them recently and has very clearly told them the financial position they are currently facing. The clients have been made aware by both the RFM and accountant that the success of the coming season is vitally important to their ability to continue to trade. You see that?
Yes.
And we see from this and other documents that you've exhibited that part of the reason for the poor results the Cheesemans were experiencing was that the region that they were in had experienced droughts and below average rainfall.
Yes, that's right.
So by August 2010, so I'm taking you now about 6 months after ANZ had acquired this loan from
Yes.
Landmark, so within 6 months, in August 2010, ANZ was already considering transferring the Cheesemans file to lending services. Is that right?
Yes, that's right.
And in October 2010, ANZ increased the Cheesemans facilities to allow them to trade for the rest of the season.
Can you just take me to that document, Miss Orr, so I can confirm that?
Yes, I can.
Please.
I can take you to the 21st exhibit to your statement. And
Is that LMG 21?
it is.
Thank you.
And ANZ, again, your statement's been prepared in a way that has multiple documents behind the tabs. Can I ask you to turn to ANZ 16000300186?
So the first one I have in that batch is 0216.
0186
It's on the screen, I think.
is on the screen. If you can't find it there, it might be easier for you to look at it on the screen, Mr. Steinberg.
Yep. Could we make it a little bit bigger if possible, please?
And just to remind you that the question that I had asked you, Mr. Steinberg, was about whether in October 2010 ANZ had increased the facilities to allow trade for the rest of the season. So if you could just, I appreciate that the print is small,
Yeah.
but it's small on the printed page as well, I'm afraid, in the form that it was provided by ANZ. But this is a document that I want to suggest to you supports the proposition I've just put to you. Can I ask you to focus on the second box under the heading Conclusions and Recommendations? You have the relevant part there. What you don't have, because it's been blown up, is the date, which also appears above that in the document, 7 October 2010.
Yes. So, yeah, Ms. Hall, so what I'm seeing there is the credit memorandum that's
Yes.
seeking approval for the increase.
Yes.
I just prefer to see the letter of offer in October 2010 if that's possible.
Yes,
'Cause I've
and
got
that is
recollection.
possible. It is ANZ 160-004-0054.
Yeah, thank you.
A letter of offer dated the 13th of October 2010. Again, I think it's one of the documents in this multi-document exhibit, but it will be easier if you look at it on the screen. Now, you may need the second page as well on the screen, I think, Mr.
Well,
Steinberg.
yeah, and I've also got the facility amount that's redacted. Can you take me to that in my statement?
It's Exhibit 21? Yes, which is ANZ 160-004-005. 00454. Thank you. I'm sorry, it is the document we have on the screen. ANZ's counsel, I think, are assisting Mr. Steinberg to find it in his hard copy. Yes. The very last document under that tab, Mr.
Which tab number was it, sorry?
The same tab, Exhibit 21.
Yes, that's right.
Okay, so you now agree with me that in October 2010, ANZ increased the facilities to allow the Cheesemans to trade for the rest of the season.
Yes,
And we know from the credit memorandum, which you saw you had also exhibited, that it did this on the basis that the Cheesemans would clear the debt through the sale of assets in early 2011 before this loan expired in March 2011.
Can you put that to me again, please?
The basis upon which ANZ extended the facilities was that the Cheesemans would clear their debt through the sale of assets in early 2011 before this loan expired in March 2011. You can see from the letter of offer that's on the screen that the facility was a 6-month facility.
That's
so
right.
it would have expired in March 2011.
Yes.
And we know from the credit memorandum that the basis on which ANZ took this action was that the Cheesemans would sell assets before March 2011, within 6 months.
So I agree that there was discussions and a request from the bank for the Cheesemans to sell assets to reduce debt. So I agree with that. I'm just having a look at the letter of offer to see if we actually had it as a requirement in the letter of offer.
It is a requirement in the letter of offer. It's 0058.
Yes.
Under other conditions, you undertake Roman numeral 1. Should the various properties which are listed there not be sold by private treaty on or before 31 October 2010, that the properties will be listed for public auction, with auction to be completed by not later than 30 November 2010.
Yes, that's right.
0058,
Yep.
you see that?
Yes, I do.
So the loan term was for 6 months, and the Cheesemans were to sell their properties to clear their debt.
Yes, that was the intention.
And after this, the Cheesemans did sell one of their properties. Is that right?
Yes, I did.
And they used the proceeds of that to pay down their debt.
Yes, that's right.
But they were unable to clear the debt by the time the facility expired in March 2011.
That's correct.
And then in March 2011, the file was transferred to Lending Services.
Yes.
And after the file was transferred to Lending Services, the ANZ staff member with primary responsibility for the file was Mr Ian Warmold.
Yes, that's right.
And Mr Warmold came to ANZ from Landmark.
Yes, that's right.
And around the time the file moved across to Lending Services, Mr Warmold prepared a takeover diary note, which you've annexed to your statement.
Yes, that's right.
It's Exhibit 5 to your statement, ANZ 160-003-0107. And towards the end of this document, at 0115, we see Mr Warmold's recommendation for how to deal with this file.
That's right.
And his recommendation was support a retained strategy in the interim, given the customer, given the following. Customers acknowledge current position is untenable, and to this end have embarked on an asset sales strategy to improve business sustainability. And $500,000 from the sale of the property I referred to earlier was applied towards permanent reduction in ANZ debt in March 2011.
Yes.
And the cash flow budget provided to the bank projects that the customer will not require additional funding to meet operating expenses for the current season. Income receipts during the year will allow the customer to fund expenses during the course of the year.
Yes.
And this retained strategy recommended by Mr Warmold, we see was one of 3 strategy options that he'd listed in the document above that. The first being retain, the second being upgrade, and the third being exit.
Yes.
So the position was that on the basis that the Cheesemans had already begun selling their assets to reduce their debt, and they wouldn't need additional funding from ANZ for the current season, ANZ would continue to support them while they sold off their remaining properties and repaid the debt. Is that right?
Yes, that's right.
Okay. Now, soon after this, Arthur Cheeseman met with Mr Warmold. Is that right?
Yes,
And he told Mr Warmold that they were having difficulty selling their crop of lentils.
that's right.
And he asked ANZ to fund certain expenses of fertiliser and fuel and some incidental expenses for the following year.
Yes, that's right.
And after that meeting in July 2011, Mr Warmold prepared another diary note, which you've annexed to your statement as Exhibit 6.
Yes,
ANZ 16000300150. So in July, the file having moved across to lending services in March, and Mr Warmold having made the retain recommendation that I just took you to, in July there's another note from Mr Warmold, and we see towards the end of that document at 0161 that Mr Warmold again makes a recommendation. Mr Warmold again set out the strategy options, and one of those was a managed exit. Is that right?
I can see upgrade and I can see exit. Are you seeing another heading there?
I'm sorry, the pages are out of order in this exhibit. Can I ask you to look at 0163, where you'll see the reference to managed exit as an option?
Yes, I can see that.
That is actually the page that appears before 0162 in the document. So this is the second last page of the document. Do you see the managed exit option?
Yes, I do.
And we see there that that option is interim retain strategy to be adopted, whereby all existing facilities are extended to the 31st of March the following year, 2012, conditional upon an AMA being entered into with the customer. AMA to require the sale of all properties by the 31st of March the following year to clear the ANZ debt in full.
Yes,
So now the position of ANZ is that they'll have a further 8 months within which to sell the properties. Is that right?
yes, that's right.
But that was conditional upon this AMA being entered into. An AMA is an asset management agreement, is that right?
Yes, that's right.
And could you explain what an asset management agreement is?
Yeah, it's an agreement between the bank and, in this case, the Cheesemans, whereby we set out the terms by which we will conduct a relationship involving the management of assets, in this case the sale of assets, and at the same time either forbearance or extension of facilities from the bank.
And we see from further down this page that this was the strategy that Mr Warmold recommended. He recommended the managed exit strategy at this point in July 2011.
Yes, that's right.
And a few months after this, in October 2011, in line with that recommendation, ANZ sent the Cheesemans a new letter of offer.
That's right.
Okay. Now that letter of offer is Exhibit 22 to your statement, ANZ 16000040002.
Yes.
And the figures have been redacted, but under this letter of offer, there was a facility of a certain amount and an overdraft of a certain amount offered to the Cheesemans.
That's right.
And we see from the second page, 0003, that those facilities were offered for just over 5 months until the 31st of March 2012.
Yes.
And the facilities were secured by mortgages over the remaining properties,
That's right.
and they were also secured by a crop lien
Yes.
And guarantees were given by Arthur and Rhonda Cheeseman.
Yes.
And ANZ took a stock mortgage over all the livestock on the farm.
Yes.
And we see at 0006 that it was a condition precedent to ANZ making the facility available that the Cheesemans entered into a particular asset management agreement with ANZ.
That's correct.
And ANZ provided the Cheesemans with the asset management agreement together with this letter of offer.
Yes.
And you've exhibited that asset management agreement to your statement. It's Exhibit 17, ANZ 160-004-0013.
Yes.
And could I ask that you turn to 0015 in this document? So we can see there it's an asset management agreement between ANZ and the Cheesemans. And under the heading background, the parties have agreed to enter into this document to reflect a strategy agreed by them. The strategy involves a debt elimination by way of sale of the security property. You see that?
Yes, I do.
And further down the page, in item 2, we see a reference there to the Cheesemans being liable to ANZ for certain amounts and a reference to them being in default under their facilities.
Yes.
If we turn to the following page, 0016, we see there that under clause 3, the agreement makes clear that ANZ agreed to temporarily withhold from enforcing their securities, provided that the Cheesemans complied with their obligations under this agreement.
Yes.
And under clause 4.1, further down that page, those obligations included appointing a real estate agent to sell all of the security property.
Yes.
And a bit later in the agreement, at 0025, we see, and perhaps I needn't take you to this, we see the definition of security property there. You accept that it covered all of ANZ's secured property.
Yes, I do.
So it included the blocks where Mr. and Mrs. Cheeseman lived and the blocks where Reuben Cheeseman and his wife lived.
Yes.
And it included their crops.
Yes.
And it included their other assets.
That's right.
Now, if we turn back to clause 4, which dealt with the sale of the security property, and if we, for now, ignore the handwritten annotations on this document, which I'll come back to, we can see that the agreement initially said that if the properties didn't sell by the 30th of November 2011, the Cheesemans had to put all of their properties to auction by the 15th of March 2012.
Yes.
So under the agreement, the Cheesemans had less than 2 months to sell all of their properties.
Can you just take me to the date when this was executed, Ms. Orr?
Well, it's sent to the Cheesemans with the letter of offer, which was dated the 12th of October 2011.
Okay.
Do you accept that?
Yes, I
The
do.
letter of offer refers to it
Yeah.
being enclosed. So do you accept that this agreement gave the Cheesemans less than 2 months to sell all of their properties?
So if they had this for the month of November, December and half of January, it's 2.5 months, yes.
Thank you. And if the property didn't sell at auction, we see from clause 4.1p at 0017, if the property didn't sell at auction, the Cheesemans had to surrender possession of their properties to ANZ within 7 days of ANZ's demand.
Yes.
Does ANZ still use asset management agreements, Mr. Steinberg?
Yes, we do. Each one is specific for the circumstances.
And under what sorts of circumstances does ANZ ask customers to enter into asset management agreements now?
It depends on the individual circumstances. If I could just put a little bit of background to this particular one.
I want to ask you some more questions about this particular agreement, so
Yes.
we'll come back to that. But can I pause and just ask you to deal with the situation now? When now does ANZ ask customers to enter into asset management agreements?
So typically in situations where we've agreed with our customer that assets are to be sold in order to repay the bank's exposure, then it's possible in those situations we'll enter into what we might term an asset management agreement with that particular customer, again designed to outline a program of asset sales and at the same time outline the support to be provided by the bank in return.
So you say it's possible in those circumstances that the bank will ask the customer to enter into an asset management agreement. Can you be more specific? In what circumstances does it happen?
There's no prescribed time for this to happen. These are decisions that are made based on the individual circumstances and using the judgment of the relationship managers and the credit officers who are managing that file. But there's no prescribed set of circumstances that point you into this direction.
Are there any criteria that need to be satisfied before this step is taken?
No, it's a judgmental credit decision made by the authority holders.
Unguided.
I'm sorry, Commissioner?
Unguided.
So we're generally guided by the strategy for that particular file, as well as our customer and what our customer is looking to achieve. So again, if I could bring it back to the Cheesemans, my understanding from reading the file is that there was quite a long period of time when the bank and Landmark before that and the Cheesemans were talking about selling assets to reduce their debt levels. And there was some concern in this particular case that the properties weren't being put up for sale at prices that would attract buyers. And so I think a combination of those together with the acknowledgement from the Cheesemans that they needed to sell assets to repay debt led to the asset management agreement.
Would ANZ now enter into an asset management agreement with customers in the same terms as this agreement?
Again, it depends on the circumstances.
So it might.
It might, depending on the circumstances. But every case is analysed on the individual circumstances that apply. Today, we are guided by different practices that we've established. So it's true to say that we do look at these differently today compared to how we looked at them, earlier.
Now, I just want to give you an opportunity to deal again with a question I asked earlier about how long the Cheesemans had to sell the property under this asset management agreement.
Yes.
I think you said ultimately that it was 2.5 months.
In accordance with this asset management agreement, that's right.
Well, I just want to make sure that you understand that the letter of offer that contained this document went to the Cheesemans partway through October.
Yes.
And they had until the end of November to sell their properties.
Yes.
So less than 2 months.
Yes, although on the copy that I've got, the November's been
Yes.
scratched out and
Now,
replaced with 15th of
I
January.
want to come to that. I want to come to the subsequent discussions that led to some amendments. But the original asset management agreement that ANZ provided, which was acceptance of which was a condition of the term of offer, of the letter of offer, gave the Cheesemans about 6 weeks to sell all of their properties.
Yeah, yes, that's right. But
Yes.
again, if I could just put some context into that, if I may, there was an agreement with the Cheesemans before this that assets would be sold to repay debts. So
Yes.
I'd just like to put this in the context of this not being the first time that was requested or discussed.
No.
This strategy does go back to pre-ANZ acquisition and with Landmark, and on my review of the file, I did see evidence that indicated that the Cheesemans were accepting of
Yes.
the need to sell assets,
Yes.
and in fact they
They had sold them.
agreed that needed to be done.
Yes, but the difference is you asked them to sign up to this agreement, which gave them 6 weeks to do that, and then told them if they didn't, they had to vacate their properties within 7 days upon ANZ's demand.
That's right, that's what it says.
Okay. Now, the Cheesemans didn't sign this agreement immediately, did they?
So I'm not aware of the individual occurrences between it going out and it being signed, but I can see that there were some changes made to the agreement.
Yes, well, we can see from documents you've exhibited to your statement that a couple of weeks later, on the 28th of October, the Cheesemans and their accountant called Mr Warmald to discuss the asset management agreement.
Can you take me to that document,
Yes,
please?
Exhibit 27, ANZ 16000030057,
Yes.
is a diary note dated the 28th of October 2011. I'm sorry, we're going to need to turn, again, it's one of your exhibits that has multiple documents within it. It's the second document in your
Yes.
hard copy there.
Yep.
A diary note of Mr Warmald's note of his conversation with the Cheesemans and their accountant. And we see there that Mr Warmald recorded, second paragraph, they understand that assets need to be sold in terms of the asset agreement either by 30 November or by auction by 15 March, but they wanted to know if they could have some more time to sell their houses. They intend selling the land and leasing it back and using share farmers to help them farm it going forward. They also wanted to keep machinery so they could earn income from contracting. You see that?
Yes, I do.
And Mr Warmald responded to that, and one of the things he said to them in the second bullet point there was that the offer of facilities before them was the bank's best offer, and it was unlikely that the bank will amend those terms unless there was a strong, compelling reason to do so. However, the Cheesemans are free to send me any proposals for the bank to consider. The AMA required all property to be sold, including the houses. You see that?
Yes, I do.
And he went on to tell them in the final bullet point that if they sent him a proposal to vary the terms of the AMA and the bank declined their request, then they would need to be ready with a fallback position because it's an option for the bank to issue statutory notices to take possession of the properties under the mortgage.
Yes.
Okay. And that day, the Cheesemans' accountant wrote to ANZ with a formal proposal for amendments to the asset management agreement. And we see that from the first document in this tab. If you turn back to the start, Mr Steinberg, which is ANZ 16000050403.
Yes.
The email from the accountant to Mr Warmald.
Yes.
I'll just wait till that comes up on the screen, but if you could read through that, Mr Steinberg. We see that the main amendment was to exclude from the definition of security property the two properties where they lived. They didn't want to have to sell their homes within that time. Do you see that?
Yes, I do.
And he also proposed that their equipment and machinery be excluded.
Yes, that's right.
So the Cheesemans wanted to delay selling their homes and their means of earning a living to see if they could clear the debt through the sale of the other properties.
That's right.
And if they couldn't clear the debt entirely or refinance after clearing most of the debt, then they accepted that they'd need to sell their homes and equipment at that stage.
So what I see is put is our clients are merely making this request so they may have the chance to retain their home and livelihood. Is that the sentence you're referring to? Yes, that's right.
And have the opportunity to refinance the smaller debt that they would have if there was anything left over after selling all the other properties.
Right, so you're referring to the third paragraph, or obtain refinance?
Yes.
Yes, that's right. Yes.
And someone at ANZ prepared a diary note recording the consideration that was given to this request. You've annexed that again in Exhibit 27. It's the third document behind that tab, and it's ANZ 16000030053. Do you know who prepared this document, Mr. Steinberg?
It appears to me that it was prepared by Ian Wormald. I'm making that assumption based on the fact that his name's at the bottom of it, but I can see it's not signed. So.
And do you know who made the handwritten annotations that appear on the document?
No, I don't.
Is it possible that it's Keith Waybury, the senior manager, whose name also appears on the document?
Yeah, I think that's possible, yes.
And we see on the first page, 0053, under the heading Current Position, a summary of the proposal. Do you see that there?
Yes, I do.
The customer emailed the bank seeking a variation to the proposed terms and conditions as follows. Exclude from sale certain properties, which have most of the improvements, including the houses where they live. Exclude from sale of assets, equipment and machinery items, and seek bank's permission to delay sale of the excluded assets or the obtaining of refinance by the 31st of May 2012.
Yes.
And then under the heading recommendation over on 0054, perhaps we could have 0054 and 55 on the screen. We see that the author of the document, you think Mr. Wormald, was prepared to consent to the request in relation to one of the two house blocks. See that down the bottom? Writer is prepared to consent to the customer's request, but I suggest that they cannot keep both houses. One has to go.
Yes, I can see that.
I would suggest the more saleable of the two would be the Scottsdale property, as this is 251 hectares and on 6 titles. The other property is 42 hectares and has been heavily capitalised with a refurbished house and several machinery sheds and silos. However, we should allow the customer to decide which one they would prefer to sell. And do you see there the handwritten note? Why?
Yes, I do.
And we see that Mr. Wormald also on 0055 suggests responding to the customer as follows. All land assets to be sold in an auction no later than 15 March 2012 except one house property of their choosing. And next to that we see the handwritten amendment, no. Do you see that?
Yes, I do.
And a few days later ANZ told the Cheesemans that ANZ wouldn't accept their proposal.
Yes, that's right.
Now, could I take you to Exhibit 27 still? It's the 5th document, ANZ 16000030051.
Is that also in 27?
Yes, that's right. 5th document in.
This document in? Yes, I've got it.
It's another diary note. a diary note of that teleconference between Mr Warmold from the bank, Mr Gladstein from the bank and the Cheeseman's accountant to convey the bank's position.
Yes.
And we see there that IW, Ian Warmold, fourth dot point down, reiterated that the bank would not accept the Cheeseman's proposal and the current letter of offer and AMA issued to the Cheeseman's stands. However, IW stated that if the Cheesemans required additional time to sell all the properties, the bank would be prepared to extend the private sale milestone date from 30 November 2011, bearing in mind that by now it's the 3rd of November 2011, to the 31st of January 2012, and the auction milestone date from 15 March 2012 to 31 March 2012.
Yes.
And we see further down there in the next dot point that Mr Warmold told the Cheeseman's accountant that the bank required full repayment of the outstanding debt, and in the event that the Cheesemans do not sell all properties as stipulated in the AMA, the bank will call up the debt.
Yes, I see that.
Now, that position in relation to the amended dates is reflected in the handwritten annotations we saw on the asset management agreement. Do you recall that?
Yes, I do.
And then can I take you to another document in this exhibit, which is a diary note dated the 13th of January 2012. It's the 6th document, ANZ 16000300047.
Yes.
We see that a couple of months later, in January of 2012, the Cheeseman's accountant called Mr Warmold with an update after meeting with Mr Cheeseman.
Yes.
And he told Mr Warmold that the auction was scheduled for the 10th of February 2012.
Yes.
And Mr Warmold said that the property should be sold as a whole, including all houses and sheds. And he said to the Cheeseman's accountant, the bank does not want to be left with a residual debt secured by an overcapitalised piece of land with houses and sheds. Peter agreed that the house and sheds should go with the sale and should be sold. Both Arthur and family have nowhere else to live. I'm sorry, but Arthur and family have nowhere else to live. You see that?
Yes, I do.
So the bank was aware of that by January 2012, that the Cheesemans wouldn't have a place to live if this plan proceeded.
Yes, that's what the note says.
Yes, okay. And then can I ask you to turn to the document behind this, which is ANZ 16000300046.
Yes.
We see a couple of weeks later, on the 27th of January, there's a phone call between the Cheeseman's accountant and Michael Gladstein, who appears to be an assistant manager at ANZ.
Yes.
And in the second bullet point, the Cheeseman's accountant again told ANZ that the Cheesemans were concerned that they would have nowhere to live after the properties were sold. You see that?
Yes, I do.
And we see in the fourth bullet point there that Mr Gladstein reiterated that the bank did not want to be left with the houses and sheds securing any residual debt and required the properties to be offered as a whole.
Yes, I see that.
And underneath that, down the bottom of the page, we see someone has written, "We should be firm here."
Yes, I see that.
Do you know who wrote that?
Well, it's written under Keith Waybury's name, so I'm assuming that it was written by him.
What do you think of that statement, Mr Steinberg?
Looking back on it and the events that you've just described, I find it sad that that happened. I'm struggling with it. If this was done today, it would be done. It would be dealt with in a different way. I guess as a counterbalance, I could only, put this in the background of the fact that there had been long-standing arrangements with the Cheesemans to sell these assets, and they understood that they had the obligation to repay the bank, but I accept that it's difficult reading what we've read.
They did understand that. The documents make that clear, and they were attempting to sell their properties, weren't they?
They were.
And all they asked for from the bank was that you exclude the parcels of land that contained their homes, and you exclude the equipment that would allow them to continue to earn income.
That's right.
And the bank was not prepared to do that.
That's right.
So after this diary note on the 27th of January, the Cheeseman's accountant set out a proposal that the land be sold in 3 separate lots in an email.
That's right.
And Mr. Wormald prepared a diary note about that proposal, which is also in this same exhibit. It's the 10th document in the exhibit, ANZ 16000030043. And you see there on the first page, under purpose of diary note, customer has written seeking consent for reserve prices and to amend auction conditions by auctioning house blocks separately or defer sale of houses to a post-auction date.
Yes.
And over the page at 0044 under current status, we see Mr. Wormald has recorded there has been no interest in the house blocks as the prospective purchasers have expressed interest in the rural farmland only. The customer is concerned that there will be no value realised for the house blocks and in fact maybe devalue the arable land for sale. As such, they seek the bank's consent to auction the house blocks separately or defer the sale of the house to a post-auction date. Customer feels that including the houses in the auction will have little bearing on the auction result, and they want to retain the houses to explore the option of retiring ANZ debt in full by sale of plant and equipment and grain on hand.
Yes.
And under the heading commentary, we see that Mr. Wormald contacted the valuer who had valued the properties.
Yes.
They'd been valued in June 2011, and he spoke with the valuer about the marketability of the house blocks if they were to be offered separately to the farmland.
Yes.
And we see there a reference to the Wingfield Road block, which Reuben Cheeseman and his wife lived on, having a home on it, but otherwise it's over-capitalised with improvements and would be difficult to sell in isolation.
Yes.
And the Arts Home Block property of 73 acres has a relatively good 5-bedroom weatherboard house on it with a couple of sheds and stockyards, and the valuer indicated that this would have much better prospects of being sold as an individual offering. House is relatively close to St Arnaud and with a value in the low 200s would suit the semi-retirement market or another farming couple as an add-on. Writer understands the customer's predicament in wanting to retain the house properties to avoid jeopardising value if sold with the arable land. That's the predicament that's being referred to there, jeopardising the value if the houses are sold with arable land. You agree with that?
I'm not exactly sure what that sentence means. It seems to be counterproductive. On the one hand, it's saying that if they split the house, then it'll jeopardise the value. On the other hand, the value indicated that that may not happen. So I'm not exactly sure what that particular sentence means.
Well, I want to put to you that it means that the predicament that's being referred to there is the predicament of getting a lower value if the houses are sold with the arable land rather than
Yes.
sold separately.
Yeah.
And
Yes.
that wasn't the full extent of the Cheeseman's predicament, was it?
I'm sorry, I didn't get that last question.
That wasn't the extent of the Cheeseman's predicament, was it?
Um,
I'll be clear,
Yeah.
Mr. Steinberg. The other problem, the more significant problem for the Cheesemans was that if the house blocks were sold, they would have nowhere to live.
yes, that's right.
but Mr Wormald didn't mention that as a consideration here.
No, it's not mentioned.
And Mr Wormald went on to say in the 5th paragraph, if the bank allowed the arable land to be sold for around I will say at this point, Commissioner, that we've done some checking while I've been on my feet, and we do not understand the basis for the redactions to financial information. As far as we can see, there is no non-publication direction that permits these redactions. I've been endeavouring to work around them, but I will put ANZ on notice now that we do not believe that there is a order that permits these redactions to have been made, and if we are wrong about that, ANZ can tell us. Now, if the bank allowed the arable land to be sold for a particular price without the house blocks, this would still leave a residual debt of approximately a certain figure to be repaid from the sale of house blocks, say a certain figure, remaining grain on hand and plant and equipment. Customer has not provided any detailed proposal in support of their request to the bank for the house blocks to be removed from the auction. However, it appears from the customer's feedback that irrespective of the houses being included or not, the sale value would not materially change. We have a choice: exclude the houses from sale and realise circa a particular figure, or include the houses in the auction and realise circa a particular figure, which is the same figure, isn't it, Mr.
Yes.
Steinberg?
It is.
It may be best to have a residual debt of a particular figure with the two houses as part of the security, rather than having this residual debt without them.
Yes.
And we see over the page at 0045 that Mr Wormald concluded this note by saying, to make an informed opinion, I need to find out more from the agent via the customer if the reserve price would be materially different with or without the houses.
Yes, that's right.
So at this point, there's some prospect, a real prospect, that the exclusion of the houses would not have made any difference to the sale price.
Yes, according to the Styra note, that's right.
And Mr Wormald sent this note to Mr Waybury.
Look, there's a signature below Mr Waybury's name. I don't know if that's his, but
Well,
I think it's likely that that did happen.
Could I direct you to the email in which it does happen, which is the 9th document in this tab, ANZ 160-003-0042. You see the diary note is annexed to that email?
Yes, I can see that.
And in response, Mr Waybury said, any proposal must cover everything on how ANZ will be cleared. You see, he says
Yes, I can see that.
there is not a deal here at present. I do not want to be left with the overcapitalised house block and a shortfall. You see that?
Yes, I do.
His sole focus was on seeing everything sold.
Yeah, I think that's one way of putting it. The other way of putting it is that his focus was on getting the bank repaid in full, which clearly resulted in all of those assets being sold.
And that was his position, even though Mr Wormald's note to him indicated that it might not have made any difference to the price whether the house blocks were included or excluded.
That's right, Ms Orr, but if my memory serves me right, there is another document which comes to my memory, but I don't know exactly where to find it, where there isn't a reference to an opinion from a valuer that suggests otherwise, that if you sold them that it would make some difference, and in fact...
A subsequent document?
I just recall seeing the document. I can't recall the date on it as I sit here, so...
Yes, well, let's assume there was,
Yeah.
Mr Steinberg. What I want to put to you is that at this time, given that the consequence of selling the house blocks was that the Cheesemans would be without a place to live, wasn't it worth at least exploring the possibility of seeking further information about the impact of selling the blocks with or without the houses?
Yes.
But Mr. Waybury was not interested in doing that, was he?
Well, I wouldn't use the terminology he wasn't interested. He's clearly said no to that proposal.
We know that ANZ rejected the proposal, don't we?
Yes, that's right.
And they required the auction to go ahead with both of the house blocks included.
Yes, that's right.
Is that the approach that ANZ would take if a similar situation arose today?
No.
What would ANZ do differently now?
Well, today we would take a more empathetic approach to the needs of our customer. As you've read in my statement, we've now established a specialist agri team that
Yes.
that deals with our agricultural customers. We're guided by what's called our lending services purpose, which guides the way we should respond in these types of situations. And we would more likely look at an option that would, if possible, result in some retention of home ownership.
And do you think the community would have expected ANZ to handle this situation differently at this time?
So I think that's a complicated question to answer. I think there are certain parts of the community that would not expect us to do that. I think in this case there could be other parts of the community that would potentially have a view that if the bank's owed the money and they've got the contractual right to recover it, then the bank has the right to do that.
Just to be clear, which parts of the community do you think would take that view?
Look, I don't know. I'm just putting out the possibilities that there could be different views on this. As I said, right now, if we were dealing with this, we would deal with this matter differently. We acknowledge that in this particular matter, with some of the other occurrences that occurred, that we have breached community standards in the way we've managed this file overall.
Do you think the community would have expected that ANZ would do more to structure the sale in a way that might not have left the Cheesemans without a place to live?
Again, I can just repeat what I said earlier. I think there are certainly parts of the community that would expect that, but I also think that there might be other parts of the community that would take a more contractual or legalistic approach to it. Irrespective of that, our current practice would be that we would support a strategy that, if possible, would involve home retention.
And why have you adopted that practice as your current practice?
Commissioner, through our experiences over the last few years, we've learnt that we haven't always dealt with our agricultural customers with as much empathy as we should have, and as I said, that's resulted in a change in the way we operate. It's resulted in a cultural change in our department, which is really guided by the lending services purpose, and requires us to demonstrate more care and empathy towards our customers.
Well, you've made the changes because you think it's the right thing to do. Is that correct?
Yes, that's correct.
And that's a view which has been formed in recent times?
Yeah, I'd say it's the genesis is probably around 2014, and then it's evolved since that time onwards.
I just wonder why it is that you hesitate to give your view about community standards and expectations at that time, while at the same time you acknowledge that today you should act differently. What's changed in the meantime?
Well, I think there has been a change in the way that the community expects banks to behave more generally. I think that that's been driven by a number of different factors, and banks are responding to that, and in particular the parts of the bank that do the work that I do, which is the restructuring and the recovery area, are constantly reassessing the way we do things as a result of what we see to be a change in communities' attitudes towards what we should do.
You see, there's a difference between community pressure and standards, I would have thought. I want you to grapple with the question of standards. What was the right thing to do at the time of these events?
I think the right thing to do at the time of these events would have been to structure a different arrangement with the Cheesemans, one that would have potentially given them an opportunity to retain some form of home ownership, as well as retaining some way of earning an income. And that could be achieved in a number of different ways potentially, but I think that would have been the right way to approach it.
Yeah, I'm struck by the fact that you accept that that's the right thing to do, and yet you hesitate to say that that's what the community would have expected. I just see a disconnect between the two. Now, tell me I'm wrong.
Yeah.
How?
So, Commissioner, I don't want to suggest that you are wrong.
A lot of people do often, Mr. Steinberg, join the queue. They're probably right.
But, we spend quite a lot of time discussing these sorts of issues as we've been preparing these submissions. And, I want to be careful about, exactly what I say and make sure that I don't offend anyone, but I do talk to people in the community who feel that banks have an entitlement to recover all of the money that they lend. And then I talk to other people in the community who feel exactly the way that I'm feeling, and the way that I think we should have responded to the Cheesemans. So in that sense, that is the reason for my hesitation, in that I feel that there are different groups of people in the community who would potentially look at this sort of a matter differently, but notwithstanding that, the position that we're taking at ANZ is that we want to do as much as we can to support our customers with empathy and as much humanity as we can.
I just want to give you an opportunity to answer one question connected with those questions, Mr. Steinberg, which is, why didn't you acknowledge in your statement that ANZ's repeated refusals of the Cheesemans' requests to retain their homes fell below community standards and expectations?
Can I just have a look at how I frame that in my statement? Would you mind if I do that? Thank you.
Yes, and if it assists, there are other parts of the Cheeseman story that I'm yet to get to that you have acknowledged fell below community standards and expectations, but there was no acknowledgement by you, as I read it, that the conduct that I have so far taken you to fell below community standards and expectations.
Yep.
And I want to ask you why that's so.
Look, the best answer I can give you now, Ms. Orr, is that I think it comes down to the discussion that I just had with the Commissioner that that there was a long-standing agreement with the Cheesemans that they would sell their property, and from my reading of the file, there was an understanding that they would be selling all of their property in order to repay debt. My recollection is that they were prepared to do that during the course of their dealings with Landmark and then with ANZ, and so this requirement was consistent with the arrangements that we had with the Cheesemans for a number of years. It was within the bank's contractual obligations, and that's, as far as I can remember now, is probably what fed into that conclusion.
And you agree, don't you, that there are other aspects of ANZ's conduct across these 7 statements where ANZ had a contractual entitlement to do what it did, but you have nonetheless accepted that the conduct fell below community standards and expectations?
Yes, I think everyone is different and everyone needs to be debated based on all of the variables and the unique circumstances that exist. It's a difficult conclusion to reach on each an individual file, and yeah, when we reached the conclusion on the Cheesemans around the breach of community standards, it did for us, for me, centre on the 2012.
On the events we haven't got to yet.
That's right.
And I just want to be clear before we go to those events what your position is now about whether the events that I have asked you questions about this morning involve conduct by ANZ that fell below community standards and expectations.
For the events that we're about to talk about, or?
No, the events that we have been talking about. What is your position now about whether those events, the way ANZ handled those matters, fell below community standards and expectations?
So are you asking me to reassess that position
Yes,
now?
I am. I want to know what your position is now, having been through these documents with me. Do you accept that ANZ's conduct in relation to those events fell below community standards and expectations?
So again, if I could just bring this back to our January submission where we spoke about community standards, and again, I don't have that document in front of me, but my recollection is that we use terminology along the lines of we should do the things that we say we are going to do. And if I apply that particular lens in the case of the Cheesemans, what we did here, I know this sounds harsh, and you can tell that I'm finding it hard to say this, but when you analyse it clinically, what we did in this case is we did what we said we were going to do, and not meaning for it to come across, you're asking me to analyse now whether I want to change my position, and when I draw it back to that statement, I'm still landing that if I use that statement as my guiding principle, that we didn't breach that guiding principle of having not done what we said we were going to do.
Can I ask you to look at it through a different lens, which is the way you did what you said you were going to do? We've just seen through a lot of documents the way ANZ handled the process of asset realisation for the Cheesemans. Did the way ANZ handled that process fall below community standards and expectations?
Again, unfortunately I'm not able to make my way quickly into the documents, but as I think this through, Ms. Orr, I'm recalling conversations with the Cheesemans where they acknowledge that they're going to sell all of their assets to repay their debt. I'm recalling documents, even though I can't quickly recover them now, that point to the Cheesemans telling us that they were going to, you know, embark on this sales strategy.
Yes.
I don't mean to justify the way it was done, so please don't interpret that in this. But you can clearly see that I'm not quite getting to the point where I feel it's breached community standards when all of those things are taken into account.
I see.
You know, I'm analysing it in the way that I see it, and as deeply as I can, you know, under the circumstances that I'm in right now, and that's where I find it lands for me.
Commissioner, I've been asking Mr Steinberg questions for some
should
time.
take
I
a
wonder if
break.
we might have a 5-minute break before
Yes.
I continue.
Can we sort out over that break what the position is with those redactions?
Yes, thank you, Commissioner. We will attempt to do that.
I'll come back at 1:45.
Thank you, Commissioner.
All staff, Royal Commission staff, please be seated.
Yes, Ms. Orr.
Commissioner, I've had some discussions with Dr Collins about the issues with the redactions in the documents. The situation is that the redactions were made in error. The error was drawn to the Commission's attention late last week, and it appears that there's been a misunderstanding about the steps that needed to be taken upon identification of that error. Mr Steinberg has versions of the documents which are unredacted, and Dr Collins is happy for me to refer to the portions of the documents that are redacted, and substitute copies of those documents without redactions will be made available for the court book.
Thank you.
Now, Mr Steinberg, in the end, the Lens, Scottsdale and River properties owned by the Cheesemans all sold at auction, is that right?
Yes.
And that included the part of the Scottsdale property where Arthur and Rhonda Cheeseman lived?
Yes.
But the property where Reuben Cheeseman and his wife Katrina lived didn't sell at auction, is that right?
It didn't sell, and I think it might be that it did go to auction and didn't sell, but I agree that it didn't sell.
Yes, thank you.
Yes.
Could I ask you to look at your Exhibit 28, ANZ 16000050287. This is a letter from ANZ to the Cheesemans in April 2012. And we see from this letter that the proceeds of the sale were just under $2.7 million.
Yes.
And that $2.7 million was applied to the Cheesemans' outstanding debt,
Yes, that's right.
and there was still $630,000 odd left to repay.
Yes, that's right.
And in this letter, ANZ gave the Cheesemans a month until the 23rd of May 2012 to come up with a proposal for how to pay off the remaining debt.
Yes.
And a month later, on the 23rd of May, the Cheesemans' rural financial counsellor wrote to ANZ. That letter is part of Exhibit 31 to your statement, Mr Steinberg. That's the first document behind that tab, ANZ 16000050276.
Yes, I can see that.
And by this stage, in May 2012, the Cheesemans had taken further steps to discharge their debt. They'd sold a tractor.
Is that referred to in this letter of
No, it's
23rd of
not.
May?
It's referred to in the second document in this tab, which is an email, ANZ 16000050265.
Yes.
I'll just ask you to read that and see if you agree with me that by this point the Cheesemans had sold a tractor and they'd applied the proceeds of that sale to pay down their debt.
This 0265, was it?
Yes, I'll just make sure I've got the correct reference. I have. It's in the second paragraph there.
Oh yes, post-settlement of the tractor. Yes, I can see that.
Right. So in May 2012, they've sold a tractor. They've applied the proceeds of sale from the tractor to pay down the debt. And the Cheesemans financial counsellor, in that letter that we just went to, ANZ 16000050276,
Yes.
asked ANZ to forgive the remaining outstanding debt, which was approximately $550,000. The first document
Yes,
behind
I can see the request to forgive. The debt's listed in that document at 630,000. So are you looking at this post the sale of the tractor?
Sorry, we need to keep moving between these two documents.
Yes.
If you go back to the email behind that
Oh, the
page,
552,
you'll
yes.
see the reference to the
Yes, I can
550
see that.
after the sale of the tractor.
Yes.
Now, did ANZ decline that offer to, or that request to forgive the $550,000 debt in full?
Yes, we did.
ANZ declined that offer the day after it received the letter from the Rural Financial Counsellor.
I'd need to see the document, but that sounds right to me, yes.
Yes, it's in that same email that we've just been discussing. That email is the 24th of May.
Yep.
And in that email, we see that ANZ gave the Cheesemans one more month until the
Yes.
22nd of June to submit a proposal for how they'd repay the debt in full.
Yes, that's right.
And on the 18th of June, the Cheesemans Rural Financial Counsellor again wrote to ANZ with a new offer. This offer was an offer that they would pay $250,000 in full and final settlement of the debt. And we see that from your Exhibit 32. ANZ 16000500263 and 264. If we could have both of those pages on the screen. You see there the offer
Yes, I do.
to pay $250,000 in full and final settlement of the debt,
Yes, I do.
and ANZ rejected that offer as well,
Yes, we did.
and it gave the Cheesemans a week until the 9th of July to come up with another proposal to repay the debt in full.
Yes, that's right.
And on the 9th of July 2012, at the end of that week, Mr Warmold and Mr Gladstein met with the Cheesemans and their accountant and picture partners,
Yes.
and ANZ gave the Cheesemans further time to prepare a proposal with the assistance of picture partners.
That's right.
And that proposal was provided to the bank in August of 2012.
I thought it was a little bit later than that, but can you take me, is this
Yes,
the one
your
in
Exhibit 33.
33? Yes, that's right.
You see that? Was
Yes, I do.
provided to the bank in August.
Yes.
And after some revision, that proposal essentially involved the Cheesemans paying $300,000 for ANZ to discharge its mortgage over the Wingfield Road property, the property that had Reuben and Katrina's house on it.
Is that part B of the offer that you're looking at? Because my understanding is that this offer, the first part of the offer was subject to capital being raised by Samuel Capital, so it wasn't an offer capable of being accepted. That's Plan A. And
Plan B?
Plan B, I don't think that was capable of acceptance either.
Well, can we come to your view on whether it was capable of acceptance? What I asked you is whether the proposal essentially involved them paying $300,000 for ANZ to discharge the mortgage over the Wingfield Road property.
Yes, it does. That's the proposal B, Plan B, correct.
Yes, and the Cheesemans were able to put that proposal because Katrina Cheeseman's parents, Ruben's wife's parents, were able to pay $300,000 so that their daughter and son-in-law could stay in their home.
Yes, that's right.
And the bank didn't accept that proposal. You wanted to say that it wasn't capable of acceptance, is that right?
Yeah, my understanding, Ms Orr, is that this Plan B was never finally considered because there was another offer that came in straight afterwards, which was the offer in, let's go to my statement, the offer on the 18th of October. So what our response to the 22nd of August offer was to confirm which settlement proposal that the Cheesemans wished to proceed with, and they didn't come back with either A or B, but instead they produced another proposal on the 18th of October.
Okay.
So I don't think that those two, the Plan A's and the Plan B's, actually were considered.
Could I ask you to look at your Exhibit 35, ANZ 16000050167?
35?
Yep.
Yes.
And we see there a communication in August 2012
Yes.
containing that proposal I've referred to. You'll recall, I think, Mr. Steinberg, that there's a bit of toing and froing and the proposal is revised.
Yes.
This is where the proposal gets to at this point. Because Rob and Gil Stewart are prepared to provide $300,000.
Yes, I can see that this proposal on the 24th of August has got two parts to it. One part is for this $300,000 to be sold through the purchase of the property, and then the second part is an asset sale proposal involving asset sales of $284,000. So my understanding was that this was one offer of about $584,000.
And we see, I just want to direct your attention to the following document, ANZ 16000050162.
Yes.
We see there in August discussion within ANZ about ANZ having undertaken a review of the proposal that we just looked at in
Yes.
that email.
Yes.
And it's not acceptable due to the sale value of $300,000 for the Wingfield Road property being below the recent valuation of $390,000.
Yes, that's right.
That was the basis upon which it was communicated that that proposal was not accepted.
That's right.
Now, the bank still had its mortgage over the Wingfield Road property,
That's right.
and if it forced the Cheesemans to sell that property, ANZ thought it could get more than the $300,000 that was being offered.
That was the basis of the decision, yes.
So instead, it gave the Cheesemans a couple of weeks until the 14th of September 2012 to pay the outstanding debt down to $300,000.
Can you just take me to that document, please?
I'll take you to a document that's not in your statement. It's ANZ 80071645990. You'll be in the tender bundle, I think, provided by your council.
Yes.
You see there the letter dated the 30th of August 2012,
Yes, I do.
giving the Cheesemans until the 14th of September to pay down the outstanding debt to $300,000.
Yes.
And at that time, ANZ said it would accept the offer of $300,000 from Katrina's parents.
Actually, Ms. Orr, I found that second paragraph a little bit difficult to understand. What it says is, please note that if the balance outstanding plus accrued interest and fees is reduced to below 300,000, then ANZ will be prepared to discharge its mortgage over the property in exchange for sufficient funds to clear the debt in full.
Yes.
So I didn't quite understand whether what it needed was an offer of $300,000 plus the debt in full, which is, I think, how it reads, or whether it was saying that if the balance is otherwise reduced to below 300,000, they'd reduce the mortgage. There's a bit of inconsistency in that paragraph.
Well, I want to put to you that it was conveying to the Cheesemans that they needed to pay their outstanding debt down to $300,000. Then ANZ would accept the $300,000 that was to be provided by Katrina's parents. And if they didn't reduce the debt down to $300,000, we see that ANZ says it's going to instruct its solicitors to commence enforcement proceedings.
So there's two questions there. I agree with the second part of your question.
Yes.
And I find that second paragraph is a little bit unclear, but I think what it's saying is that they're not accepting ANZ is not accepting the $300,000. I think that the bottom line is we're not accepting the offer that's put to us. Yes.
I see.
Although it's confusing as to how that sentence is written.
Yes. So this is when the Cheesemans are told that if they can't comply with these terms, your solicitors are going to be instructed to commence enforcement proceedings.
That's what the letter says, yes.
That's August 2012, the end of August 2012, and by the end of September 2012, the Cheesemans have sold their cattle, they've sold more equipment, and they've managed to reduce their debt down to about $450,000.
Yes.
Now, before I move on, I'll tender that letter, Commissioner.
Letter ANZ to Cheesemans, 30 August 2012, ANZ 800 716 4590, Exhibit 4.14.
So through the action that they've taken in selling assets, they've reduced the debt from $550 to $450, but despite the progress that they've made, the bank went ahead and instructed their solicitors to call up the debt.
So I can certainly see that letter that says that if it's not done, they will instruct lawyers to commence the process. Can you just take me to the letter that our lawyers actually wrote to them? I just can't quite recall that. But
I'm asking you at the moment about instructions to the solicitor. We'll come to letters that were written later.
Yes, that's what the letter says.
Except that at this time, instructions were given to solicitors to call up the debt.
I don't know that. Based on what this document is saying is that if they don't provide this, then it is our intention to instruct solicitors. I'm not saying it didn't happen. It may well have happened, but I'm not able to determine that based on reading this document.
I'm just going to see if I can find a document to put
Yes,
to you.
thank you.
Okay, I'll put this document to you. Mr Steinberg, ANZ 800 716 4151. This is a diary note from the 27th of September 2012. And we see a reference there in the third bullet point down. Ian Warmold stated that given the current status and the amount of time the bank has provided to the Cheesemans to clear the current outstanding debt, the bank will not be offering any further indulgences and have decided to call up the loan and issue FDM, farm debt mediation notices.
Yes, that's right.
All right. You accept that that was the position at that time?
Yes, I do.
I tender that document, Commissioner.
Exhibit 4.15, Diary Note 27 September 2012, ANZ 800 716 4151.
Now, before the bank could start enforcement action, it had to issue a farm debt mediation notice,
Yes.
and it did that in early October 2012, you tell us in your statement.
Yes.
And in the meantime, the Cheesemans continued to sell their equipment and machinery.
That's right.
And by about mid-October 2012, they'd reduced the debt further down to $425,000.
That's correct.
And at that stage, they put another offer to ANZ, which was to pay $285,000 in full and final satisfaction of the debt.
Yes.
And ANZ refused that offer
Yes.
because ANZ still had its mortgage over that property, and it believed that it could get more if it sold the property.
Yes.
So the Cheesemans continued to sell off their remaining equipment.
I believe that's the case, yes.
By late December 2012, they'd managed to pay the debt down to about $275,000.
That's right.
And then on the 27th of December, just after Christmas in 2012, the Cheesemans' financial counsellor sent ANZ a letter, which you've exhibited to your statement as Exhibit 37, ANZ 160-005-0088. So this is a letter to the Cheesemans' Rural Financial Counsellor. I refer again to the matter between ANZ and the Cheeseman family and have been requested to make a final offer to the bank in an attempt to bring closure to a relationship which the bank has been very clear in stating it does not want the Cheesemans. The Cheesemans have been committed to selling down machinery items, albeit not as fast as they would like, nor at the prices they had hoped for, but they are continuing to sell and forwarding all proceeds to ANZ. They are not even retaining the GST component, but paying all sale proceeds to the bank. Today they banked the sale proceeds from a truck and drop deck trailer. The outstanding amount at 27 December is $275,756.40. A family member has offered the Cheesemans a loan of $250,000. The Cheesemans are keen to end their relationship with ANZ as soon as possible, and accordingly $250,000 is offered in its entirety as full and final settlement of their indebtedness to the bank, payable within 3 business days of acceptance of the offer. They remain stressed from forced equipment sales, especially when less than budgeted prices, and confirm to me that they are worn out from trying to negotiate with ANZ Bank, with previous offers to be clear of the bank met constantly with a seeming unwillingness by the bank to acknowledge their claims in accepting a settlement. So that was the communication from the Rural Financial Counsellor.
Yeah, yes.
Did ANZ accept that offer?
No.
Now, could I take you to ANZ 160-003-0080?
Is this in my
It's in the
exhibits?
tender documents, not your statement. Now, this is a diary note prepared by Mr. Warmold, it seems, about the offer contained in that letter that we just went to. We can see at the top of the page that the amount due at that point was $276,000.
Yes.
And we see a note underneath that table there. Note, legal debt represents suspended interest only.
Yes.
There is no ink book debt remaining to record a provision or an ERV value. Now, could you explain what that means, Mr. Steinberg?
Yes, Ms. Orr, in short, without getting too complicated, what it essentially means is that the principal amount of the debt's been repaid.
Yes.
And what's outstanding is interest that hadn't been paid.
Right, So they'd repaid the entirety of the principal and the only amount outstanding was interest.
Yes.
C. And we see on the following page at 0081 that Mr. Warmold records under the heading current status, a few paragraphs down, writer is prepared to consider the offer for the following reasons. Settlement can take place within 3 days. It avoids the costs associated with mediation. Mediation will most likely contain a similar negotiated compromise outcome. Costs of enforcement and obtaining vacant possession is likely to be costly, time-consuming and involve reputational risk. Rural councillor has threatened a complaint to Financial Ombudsman in the past, which would potentially be a time-consuming and costly process. Therefore, writer is prepared to counter-offer at a value of, say, $265,000, which aims to capture legal costs incurred to date of $3,836 plus work in progress, including settlement. You see that?
Yes, I do.
That was the position taken by Mr. Wormald.
That's right.
A counter offer that would capture ANZ's legal costs.
Yes.
I tender that document, Commissioner.
Exhibit 4.16, diary note 31 December 2012, ANZ 16000030080. Ms. Orr, I'm told that there's been reference, I hadn't caught it, more than once to a property by its street address. The street address or the road address of the property is subject to a non-publication direction. I just raise it mainly to draw it to the attention of the media that referring to the property by the street address is subject to the NPD. I'm sorry I didn't pick it up earlier, that's my fault. It's hard enough without me raising things late, but there we are.
I apologise, Commissioner, that is my fault. And that is the references I've been making at times to the name of the property that Reuben Cheeseman and his wife Katrina resided on. So
I think that's right.
If it assists those reporting, that is the name of that property, ought not be published.
Yeah.
Now, ANZ went back to the Cheesemans and said they would accept $265,000 to settle the debt.
Yes.
$15,000 more than the $250,000 that the Cheesemans had offered.
That's right.
And the Cheesemans accepted that offer and paid the $265,000 to settle the debt.
That's right.
And as a result, they were able to keep the property on which Reuben and Katrina's house was located.
Yes.
But by that time, Arthur and Rhonda Cheeseman had lost their home.
That's right.
And the Cheeseman had sold their equipment and machinery, so they couldn't continue farming on leased land to earn a living.
So they certainly sold a lot of machinery. Whether that constituted all or not, I don't know. But there was, I've got the number in my statement, it's a few $100,000 worth of machinery.
4 times the Cheesemans put proposals to ANZ to discharge the remaining debt and keep Reuben and Katrina's house.
Yes.
Is that right?
Yes, it is.
And 4 times ANZ refused their requests because it thought it could get more money than what was being offered by the Cheesemans.
Yes, that's right, Ms. Orr. Again, I'd just like to put a little bit of context around this, if I could, please. By no means in an attempt to justify it, but just to give some context, if I may. As I go through these diary notes, recording these conversations with the Cheesemans and with Mr. Wormald and the advisors, what I have observed, which may have been one of the drivers for Mr. Wormald, is that Mr. Wormald was constantly requesting that the Cheesemans account to the bank for the previous season's crop. You'll see in my statement that we were expecting a little bit over $1 million from that season's crop, and Mr. Wormald indicated that there was only about $130,000 that had been received out of the $1 million crop, and Mr. Wormald is quite persistent and consistent in his requests to the Cheesemans and their advisors for an accounting of that stock or the crop. My understanding is that I don't think that issue was ever bottomed out, but from reading the file, it appears that some of those proceeds were banked into a bank account with another bank, and I'm only putting that in as context because I'm trying to understand how Mr. Wormald came to the decisions, and I just think it's fair to put that into context. But I'm not attempting to justify it. I'm just putting some context around it, please.
And that is not expressed by Mr. Wormald in any of the documents to be the reasons or the reason for the position the bank took in response to any of the offers, is it?
No, but it's constantly appearing in his communications with the Cheesemans and their accountant. There's a constant theme of a request. I'd call it almost persistent. It's more than constant.
Yes.
It's a theme that comes out to me quite strongly in the file.
And do you accept that in the documents that we have about Mr. Wormald's reasons for rejecting those offers, the theme that we consistently see in connection with those reasons is that the bank has a mortgage, and if it forces a sale, it will be able to get more money for the property than what is being offered by the Cheesemans?
I agree with that in that context that I put before, that the bank felt that it could otherwise have been paid out by the crop proceeds that were subject to its crop lien. But I accept the proposition that you've put. I just think it's important to give it that piece of context, if I could, please.
The 4 times that ANZ refused the Cheesemans' requests to discharge the debt on a particular basis, each time it did that, the Cheesemans were at risk, put at risk of losing Reuben and Katrina's home, weren't they?
Yes.
Do we see anywhere in the documents where that matter is taken into account by Mr. Wormald, Mr. Waybury, or any of the other people involved in these decisions?
Not expressly, but as I said, this theme comes out to me quite emphatically.
About the crop?
Yes, it's a very, very emphatic theme to me, having not been involved at the time, but then reviewing the file, that this was an issue that was of concern to the bank.
Yes. And you acknowledge in your statement that the settlement offers that were made by the Cheesemans in June, October and December of 2012 were all reasonable offers?
Yes, I do.
And in those circumstances, wouldn't the community expect ANZ to accept at least one of those reasonable offers instead of requiring the Cheesemans to sell off their machinery and equipment and putting them at risk of losing their home?
Yes.
So you accept that ANZ's conduct in these respects fell below community standards and expectations?
Yes, I do.
And you accept that by refusing those settlement offers, ANZ acted unreasonably?
No, I don't.
Well, I want to understand that because you've described them in your statement as reasonable offers.
Yes.
So I want to put to you that the refusal of those offers was therefore unreasonable.
I think that the context that I put to you before, to me at least, gives some reason as to why those decisions were made. And in those circumstances, I can understand why Mr. Wormald continued to insist on full repayment of the debt, because he felt that the debt would otherwise have been repaid from the crop proceeds which were subject to ANZ's lien. So if that had, in his mind, if that had happened the way it should have happened, then there would have been no residual debt and there would have been no requirement to sell potentially both of the homes, potentially. So to me that brings an element of reason to the decision, but as you articulate all those facts, I can see why any member of the community will listen to those and say that's not what we expect of a bank, and I'm prepared to accept that it fails to meet community standards and expectations.
The enforcement action that the bank was in the process of taking at this time was enforcement action in relation to the house, wasn't it?
So the one thing we didn't quite bottom out, Ms. Orr, is whether that enforcement action, I think we got to the point where farm debt mediation notices were issued.
We did.
And
I'm jumping ahead a little, but I want to do this because if ANZ thought that they could get money out of the crops, why not take enforcement action in relation to the crop, under the crop mortgage, rather than the mortgage over the property? Because ANZ did not do that, did they?
No, they didn't, and again, I can only look back and speculate as to what the reason might have been, and I assume that by that stage the crop had been sold and the proceeds had been banked outside of...
Well, you can't assume that, can you, Mr. Steinberg? Is there any evidence of that in the documents?
Yes, I believe there is a document that outlines the receipts from the crop proceeds with a reference that we understand indicates that those proceeds were banked into another bank account. So I think I have it exhibited somewhere. I'm not going to be able to pull it out for you, I'm afraid, but I have seen that document. So again, this is not an easy conclusion that I came to, because I spent some time trying to understand exactly what that document was concluding. Yeah.
I want to put very squarely to you, Mr. Steinberg, that the failure to accept the multiple offers that you describe in your statement as reasonable offers was conduct in breach of clause 2.2 of the Banking Code of Practice, which, as you'll recall, required ANZ to act fairly and reasonably towards the Cheesemans in a consistent and ethical manner.
No, I don't agree with that.
You don't?
No.
If a similar case happened today, would ANZ handle it differently?
Yes, it would.
And how would ANZ handle it now?
Well, I believe we would show more empathy towards the customer. We would look to find a solution that would support some form of home retention.
So why didn't ANZ do those things in 2012?
Again, I wasn't involved in this particular matter, so it's difficult for me to say exactly why. I've offered some background and some rationale.
But they were things that could have been done in 2012, weren't they? ANZ could have been more empathetic. ANZ could have tried to come up with a solution that would not involve the loss of the home.
We could have, yes.
And there was nothing preventing ANZ from doing that.
No, there was nothing preventing us, but again, I just think it's fair that I reiterate the context in
Yes.
which this happened. I do think that that's that needs to be considered in the background. 2011 is a different year to 2018, so we have acknowledged that we do things differently today.
In September 2015, after these events, Arthur Cheeseman got in touch with ANZ, didn't he?
Yes,
He'd seen the 60 Minutes story about Mr. Follott,
that's right.
and he was still aggrieved about the way he'd been treated by ANZ.
That's right.
And following that, you and another person from ANZ met with Mr. Cheeseman.
Yes, that's right.
And what was discussed at that meeting?
Mr. Cheeseman effectively took us through his story, his experiences with Landmark, his experience with ANZ, and he was asking the bank to review Landmark and its conduct to determine whether we thought that he'd been fairly treated and whether he should be compensated.
And by this time, ANZ had established a task force to review the files of former Landmark customers.
Yes, that's right.
And it referred the Cheeseman's file to the task force.
Yes, that's correct.
And in April of 2016, a memorandum was prepared in relation to that matter, which I'll take you to, ANZ 800 716 3733.
Is that in my documents, Ms.
No,
Hall?
it's not. It's
okay.
not annexed to your statement, Mr. Steinberg. Now, this is a memo relating to the task force's consideration of the Cheeseman's case. Is that right?
I need to see a little bit more, but looking at the date, it does look like that would be right, yes.
Yes, I'm sorry. It's difficult without some of the other
Yes.
pages. Could I ask that you be shown 3735? You see the heading there, Task Force Meeting Consideration?
Yes, I can.
And we see there, Task Force meeting considered the review and customer claims on 15 March 2016. Determination was made to support the customer's monetary claim. It was
Yes.
recognised that whilst on legally sound grounds, on revision, a more commercial and compassionate assessment would have enabled the customer a level of funds from the asset sales to enable a more positive movement forward. Rather, all principal and interest was cleared, unsecured creditors and statutory commitments paid in full, and the customer, that is, the elderly Arthur and Katrina, were left with nothing at all. Applying a current practice lens to the file management would undoubtedly have enabled the customer to avail of a level of funds to move forward. Agreed that certain people from the bank would visit the customer, along with their rural financial counsellor and legal representation, with a view to achieving a resolution within the $390,000 financial parameters. What are the $390,000 financial parameters that are referred to there, Mr. Steinberg?
I'm relying on my memory, Ms. Orr, but what it's referring to is an upper limit that the task force suggested as a reasonable settlement limit, so that when the bank's representatives went out to meet with the Cheesemans, they had a level of authority to agree to an arrangement if one could be agreed.
So that was an upper limit set by the task force in relation to the Cheesemans in particular?
It's a guidance given by the task force, yes.
And to your understanding, is that $390,000 informed by what we see further up the page of quantifiable costs and unquantifiable costs in relation to the Cheesemans?
It appears that's the case, yes.
The quantifiable costs included the forced sale of a home valued at $325,000.
Yes.
Legal costs for $11,600, out-of-pocket expenses in moving to Ballarat, and cost of renting a home to live in from then until present, $52,500. So that informed the parameters for the discussion with the Cheesemans.
That's right.
Ultimately, how much did the bank agree to pay the Cheesemans?
I'm just going to refer to my statement if I could. Are you able to help me find that in my statement,
Well,
Ms.
perhaps
Hall?
if I take you first to the resolution meeting description on this same page, that might assist
Yes, thank
Mr
you.
Steinberg. We see that there's a reference there to a meeting that was held with the Cheesemans in March 2016.
Yes,
There's a summary of the discussions.
yes,
It was explained that ANZ had undertaken a thorough and extensive review of their case. It was the view of the bank that having undertaken the extensive review, the bank's actions appeared legally reasonable, given the account conduct, monetary defaults and time indulgence provided to seek a resolution. The loss of the family farm and home, whilst distressing for all, was an unavoidable result of the farm's financial failure. The bank did, however, recognise that greater scope should have been offered to accept the debt compromise offers proposed by the customer, in particular the October 2012 offer to settle the remaining debt for $0.425 million and for $0.285 million that was declined by the bank may have avoided further erosion of circa $140,000 in equity. It was proposed that this figure, rather than the $390,000, based to a large degree on the sale of the home at $325,000, should form the basis of a settlement. Accordingly, the bank proposed a settlement figure of $210,000, recognising the $140,000 equity aspect, together with a gesture of goodwill in offering coverage of the quantifiable costs aspect of legals, $12,000, out of pockets, $2,000, and rental, $52,000. And we see there that the customer countered this offer with one of $250,000.
yes,
And if we go over the page, discussion ensued, and then in order to enable the former customer to make a clean start and avoid further financial strain, the ANZ offer was increased to $270,000 in full and final settlement, and that offer was accepted by the customer.
yes, that's right.
So you had the ability within these parameters to offer $390,000 to settle the position with the Cheesemans, bearing in mind that the forced sale of their home cost them $325,000, but you settled for $270,000.
Yes, that's right.
And you settled because the bank's conduct in relation to the Cheesemans fell short of what the community would have expected of ANZ.
Yeah, that wasn't the terminology we used at the time, but I'm happy to accept that proposition.
Yes.
The
Or is there
expression
another?
you used in this, or that was used in this document, was more commercial and compassionate. I understand the compassionate, Lim. Explain to me why it was more commercial. I can think of a number of reasons. You tell me why it would have been more commercial to deal with them differently.
Can I just see that reference, please?
Yes, go back a page in the document. Under task force meeting consideration, second bullet point, line 2.
Yeah, Commissioner, my reading into that is that the people making the judgment back in 2012 should have been more commercial in the way that they assessed the offer. So the way that I read that is the property was worth, from recollection, $390,000. The offer that was put to us at a particular point in time was $300,000. The commercial analysis of that offer would start off with your $390,000, which you think the property's worth. You would then apply a discount because you often don't achieve what you think the property's worth. You then pull out the costs that you'd have to spend in order to achieve that, and then you probably come up with an offer not far off, maybe even less than the one that was put to us. So had we been more commercial in the way we analysed the offer in 2012, we should have accepted it.
Yeah. Go on.
I tender that document, Commissioner.
Memorandum 26 April 2016, Landmark Task Force consideration, re Cheesemans, ANZ 800 716 3733, Exhibit 4.17.
Those are the questions I have for you in relation to the Cheesemans. Mr Steinberg, unless the Commissioner has any further questions, I want to move on to another case that you've dealt with, which relates to Gail and Joseph Court. That's dealt with in Annexure A to your second statement. Mr Steinberg.
Which is the second statement?
The second statement is the statement annexing all of the specific, or the first tranche of specific customers. It's rubric 420, Commissioner.
420. That's Annexure A.
It is, Commissioner.
Thank you.
You have that statement there, Mr Steinberg?
Yes, I do.
And the court's owned a farming property in Queensland,
Yes.
and this is a case where you don't consider that ANZ engaged in any misconduct or conduct that fell below community standards and expectations.
Yes.
Is that right?
Yes, that's right.
But you do accept that there were things that ANZ could have done better in relation to the courts?
Yes, I do.
And you accept that aspects of ANZ's conduct may have caused the courts frustration and disappointment?
Yes, I do.
And for example, you say in paragraph 89 of your statement that based on your review of the file, the courts were provided with little or no notice of ANZ's acquisition of the Landmark loan book before the acquisition date.
Yes, that's right.
And you acknowledged earlier that this could have been a failing on ANZ's part in relation, I think you said that there was inadequate communication to many customers about the acquisition at that time.
That's right.
You also say in your statement that the courts had a number of relationship managers over time.
Yes, I do.
So between March 2010, when ANZ acquired the Landmark loan book, and February 2017, when their file was closed, the courts had 6 relationship managers. Is that right?
That sounds about right, yes.
And their file was managed at various times by a number of different departments.
That's right.
Given the seasonal nature of agriculture, do you accept that it's particularly important for banks to maintain continuity in their relationships with agribusiness customers?
I think that is an ideal position to have. The reality, Ms. Orr, is that in banking and in all other businesses, people do come and people go. People move into different roles, people leave the bank, resign. So I would accept that is a preferable position to have. Unfortunately, it doesn't always work out that way.
Yes. So it's hard to build that continuity when you've got 6 relationship managers in 6 years, isn't it?
I think the important thing is that you're still being managed by the same group of people, because ultimately there are teams involved in managing these files. But I accept that for a customer, having the continual change is unsettling.
And you've also acknowledged in your statement that contact with the courts was not, in your words, always as frequent as would have been optimal.
Can you just take me to that?
That's 89B of your statement, Mr. Steinberg.
Yes, that's right.
Not always as frequent as would have been optimal. What would have been optimal in terms of frequency of contact between ANZ and the courts?
I don't think I could prescribe a particular frequency. I think that the frequency of contact for any customer is determined by the individual circumstances that apply to that customer. But just as I went through this particular file, you know, it occurred to me that there were times when there wasn't the amount of contact that they needed.
We know from documents ANZ has provided under notices to produce that in June 2015 there were some former Landmark customers who hadn't seen their relationship manager for more than 2 years. Have you seen those documents?
No, I'm not aware of them.
I'm happy to show
Yes,
you.
please.
ANZ 800 610 0479. You've seen this document before, Mr. Steinberg? June 2015 discussion document, lending services agribusiness.
Yes, I have.
And if we turn to the second page of that document, 0480, we see an analysis of lending services, commercial issues, agri-specific, and lending services, agri-solutions. We see from the heading that this is a comparison of old versus new.
Yes.
And you see at the top there, the first entry is customer visitation communication. The old structure showed a clear lack of customer visitation and communication. We are aware of instances where customers have not seen a bank manager for over 2 years.
Yes, I see that.
Yes, and you accept that that was the case?
Yes, I do.
I tender that document, Commissioner.
Lending Services Agribusiness Discussion Document 1 June 15, ANZ 800 610 0479, Exhibit 4.18.
Was that acceptable, Mr. Steinberg, that customers had not seen a bank manager for over 2 years?
No.
Why is frequent contact with a bank manager important for farmers?
So farmers have got needs that are different from our general population of banking customers. They have an emotional and a generational connection to the land. They run enterprises that are impacted by a lot of variables that are outside their control. I think with those factors taken into account, they do need regular face-to-face contact.
And does ANZ now have systems in place to make sure that its relationship managers have frequent contact with ANZ's agribusiness customers?
I would say we have guidelines and practices in place to ensure that that happens in the lending services area that I work, and also on the front line, but I'm not personally involved in those.
And in the area where you work, in the lending services area, do you know what those guidelines and practices suggest for an appropriate frequency of contact with farmers?
Again, there's no prescribed frequency. As a general rule, we would say that no customer should go 6 months without having a visit, but with many of our customers it will happen more frequently than that.
That's when they're in the lending services area, is that what you're saying?
That's right.
Not more than 6 months without a visit?
That's right. That's not to say that there wouldn't be any other form of contact during that time.
No, I
but,
understand.
But as I said, it really comes down to the individual circumstances of each individual customer.
And are you able to comment on what the guidance is for relationship managers, not in lending services, but for relationship managers with the frequency of their contact with farming customers?
The only comment I can make there is, as an observer, I observe that they are a group of people who are constantly on the road, travelling, visiting their customers. So by that, I'm deducing that that is the big focus of their roles.
Another thing that you've noted in relation to the courts is that there were instances where ANZ obtained a property valuation without obtaining quotes from different valuers. Do you recall that?
Yes, I do.
Is it now ANZ's practice to obtain quotes from different valuers before appointing a valuer?
Yes, it is.
And why does ANZ do that?
We do it to ensure that the cost that's ultimately incurred is as competitive as it can be, and also to give our customers some input into the selection of the valuer.
So ANZ now gives a customer input into the choice of a valuer?
In lending services, we do, yes.
And why do you do that?
We do it to help improve our relationship with our customers, and so that there's a greater amount of transparency and clarity around the valuation process.
And when did ANZ introduce that policy?
Let me just be clear. The change in policy that we have, and I'm struggling to remember a date, but it was sometime in 2016. The policy change is the change that requires we provide a copy of all of our valuations, including the instructions to the valuer, to our customers. The matter I was referring to before, the selection, is a practice. It's from, as I sit here right now, I can't think of a policy that covers that, but it's our practice to do that.
And how long has that been the practice?
I would say they came in concurrently at about the same time.
In 2016.
Yes.
So ANZ now provides its customers with copies of property valuations that are obtained for their property.
Yes, that's right.
And has done so since that policy change in 2016.
That's correct.
And the instruction letter.
And the instruction letter, that's correct.
Now, I want to move on from the courts to another case, and the case I want to talk to you about next relates to two customers whose names are the subject of a non-publication direction. So I won't refer to them by name, but they're dealt with in Annexure B to your to your statement.
So I'm just going to grapple with some of the... Is the other one Annexure F? Is the second one Annexure F?
The one I'm directing you to now is Annexure B.
Oh yes, I've got that.
So you understand that we won't refer to the name of these particular customers,
Yes,
but they own a farming property in Queensland
that's correct.
where they breed and sell cattle.
That's correct.
And this is another case where you don't consider that ANZ engaged in misconduct or conduct that fell below community standards and expectations.
Yes, that's correct.
But again, you accept that there were things that ANZ would do differently if the same situation arose today.
Yes, I do.
And as was the case with the courts, you've accepted with these customers that ANZ didn't always communicate with the customers as frequently as it should have done.
Can I just
That's
remind myself?
paragraph 90.
Yeah, thank you. Yes, that's correct.
And again, as we've just discussed in connection with the courts, this was a case where there weren't quotes from different valuers before the valuer was appointed. You refer to that in paragraph 91.
Yes, I do.
And I want to put to you that a bit like the Cheeseman's case, this particular case also highlights some failings in the way that ANZ dealt with customers in negotiations about their financial difficulties.
Can I ask you to be a bit more specific with that question, please?
Well, you've referred in your statement to an occasion in October 2011 when ANZ met with these customers to discuss their debt reduction options, but on the same day issued them with a default notice.
Yes, can you tell me what paragraph that's in?
That's dealt with in paragraphs 65 to 66 and 92.
Yes, that's right.
and you acknowledge in paragraph 92 that that wasn't consistent communication with the customer,
Yes, I do.
and you accept that it's important for a bank to engage consistently with its customers, particularly when those customers are in financial difficulty.
Yes, I do.
And you say that today ANZ wouldn't have inconsistent communications like this with a customer.
I would say I certainly hope so.
Now, do you accept that the conduct of meeting with these customers in October 2011 to discuss their debt reduction options and serving them with a default notice on the same day was conduct that breached clause 2.2 of the Code of Banking Practice, which required ANZ to act fairly and reasonably towards these customers in a consistent and ethical manner?
No, I don't.
So you accept that the communications from the bank were inconsistent. Your statement makes that clear.
Yes.
But you don't accept that the bank failed to act towards these customers in a consistent manner as required by clause 2.2 of the Code of Banking Practice.
Respect, Ms. Orr ought to read the whole of clause 2.2, or at least put it on the screen so that the witness can see it.
I'm happy to put it on screen. I was attempting to isolate the part of clause 2.2 that I'm directing your attention to, Mr. Steinberg. If we could have RCD 99990035 0006 on the screen. Do you see the obligation there, Mr. Steinberg, to act fairly and reasonably towards the customer in a consistent and ethical manner?
Can you just take me to the clause again?
2.2.
First word, line 2.
Yeah. So my response, Ms. Orr, is that I believe that in the case where a customer is in default of its obligations, that it's fair and reasonable that the bank reserves its rights and issues a default notice. That default notice was after quite a detailed meeting that occurred with the customers, and I'm very quickly trying to scan myself across this diary note, but there were a number of options that were discussed at this particular meeting, and ANZ representatives at that meeting expressed the seriousness of the position and indicated that this was the last roll of the dice. So to me that's indicating...
Steinberg, can I just suggest to you that you're trying to have the penny in the bun? You say in your statement that there was not consistent communication, and yet you say the bank acted consistently.
That's right. My concession in that document, Commissioner, was the inconsistency of seeing a customer on a particular day, not telling them you're issuing a default notice, assuming that that's how it happened, and then they leave and then you issue the default notice. So I accept that would be inconsistent. What I'm addressing is whether it's fair and reasonable to have issued the default notice. I think in the circumstances where there's a default, in the circumstances where the bank has conveyed the seriousness of the position and indicated that this is the last roll of the dice, I would say in those circumstances it's fair and reasonable that the bank issues a default notice.
So you don't accept that the conduct breach clause 2.2 of the Code of Banking Practice?
No, I don't.
There was also an occasion in 2013 when ANZ's lawyers sent these customers a letter of demand that required them to give vacant possession of their property within 1 month from the date of the letter. You deal with that in paragraph 92 of your statement.
Yes.
And you acknowledge in your statement that that wasn't sufficient time to require vacant possession, and that if a similar notice was sent today, further time would be given.
Yes, I agree with that.
We saw in relation to the Cheesemans that the asset management agreement provided for them to give vacant possession to ANZ within 7 days of ANZ making a demand. You recall that?
Yes.
And here we have ANZ requiring these customers to give vacant possession within a month. Are these sorts of timeframes acceptable timeframes, Mr. Steinberg?
So I think every case has to be dealt with individually based on the circumstances of the case. I have acknowledged that in the one that I'm looking at that 30 days I didn't feel was enough time. And as a general rule, I'd say that we would try and take the relevant factors into account in determining what the right period of time is.
Well, what does ANZ now consider is an appropriate time to allow a customer where the bank requires vacant possession of their property? I'm talking about farming customers. What's an appropriate time to require them to give vacant possession?
So we don't have a specific policy or guideline that I can think of now that would inform me of that.
No policy or guideline, did you say?
That none that I can think of right now. But again, I think that that particular fact needs to be considered in the context of everything else that went on with this particular customer's matter. And as you go through it, you'll see that there are a number of negotiations and a number of offers. There are deeds that are prepared and negotiated which aren't executed. So this file records a history of a long negotiation with a customer, and I accept it culminated with the legal notice in the 30 days, but there was a lot of things that happened leading up to that.
Well, what does ANZ say to its lawyers today about its position on how long is acceptable to require a customer to deliver up vacant possession, bearing in mind that it's often the lawyers communicating that position?
Well, we would now, in my area in lending services, we'll apply the lens that that we have been applying since the establishment of the agricultural team, and would inform ourselves as to what a reasonable period is for that particular customer in those particular circumstances.
Has the way that ANZ uses lawyers in matters where a customer's in financial difficulty changed?
Yes, it has.
How has it changed?
We historically had a tendency to defer a lot of our matters to lawyers. And again, since the establishment of the agricultural team, the practice of our team is to not do that.
And when was that change made?
Well, that change came in with almost simultaneously with the commencement of the agricultural team in August 2014. So it was a change in behaviour and a change in practice in respect of the utilisation of lawyers.
Thank you.
You referred, Mr Steinberg, to the fact this file had a long history. Does the fact that it had a long history suggest that there might be even greater reason to act consistently and reasonably?
Yeah, I agree, Commissioner, that if you're working with a customer over a long period of time, that you should demonstrate consistency in the way you deal with those customers.
And it was a difficult file, you say, wouldn't you?
Yes.
Isn't that a further reason to be consistent and reasonable?
Yes, is my answer. I'd like to think that we're behaving in that way regardless of the length, but I agree with your proposition.
Ms Orr, how are we travelling?
I think it's an appropriate time for a break now, Commissioner, but I should let you know, Commissioner, that we are taking quite some time. We are running a bit behind, and I should also alert you, Commissioner, to the fact that at least one other party has informed me that they are considering their position on whether or not they will seek leave to cross-examine Mr Steinberg once I'm finished.
All right, well, it's important we do it properly. All right, 2 p.m.
Thank you, Commissioner.
Commissioner, can I just ask?
Just a moment.
Commissioner,
Yes, Mr Catter.
I wonder if I could ask, are we going to address why these things happen and what we could do about it to improve it in the future? Is the Commission going to address those issues? Or?
Mr Catter, I've indicated the course I will follow. At the moment we're hearing the evidence of particular cases. I've said, I think...
That Commissioner, we're not being critical in any way.
I understand that, Mr Catter, but I think all I will say to you is that we're looking at these things at the moment through the lens of particular case studies. And there's a deal of work that goes on behind the scenes, before, during and after. And ultimately, the fruits of that work are going to have to appear in my report, and that's the way I'm going to have to deal with it. Now, I understand your concern. You're not the only one who's concerned, Mr Catter. There's a lot of people out there concerned, and I know that.
I appreciate your comments, Commissioner.
Yeah. Thank you. 2 p.m.
All stand. The Royal Commission stands adjourned. Please be seated.
Just before we begin, Ms Orr, I want to say something about the conduct of the hearings and the topics that we're going to be able to address in the course of this particular hearing block. I've spoken with Council assisting about the timetable for the rest of this week and looking forward into next. And they tell me that developments over last day and a half mean that some of the farm finance case studies that we've selected and will continue to pursue will take longer than had been anticipated at the time that the plans were set. We've continued to receive information about the case studies in relation to farm financing, both in the form of supplementary statements and further production under notices to produce. And that's why, as a consequence, some of those studies are going to take longer than we'd first anticipated. But it's important that they're done and they're done properly. So given all that, I've decided, and Council agree, that the best way for us to proceed is for the natural disaster insurance case studies that were to be heard in the latter part of this week, spilling over into Darwin in the early part of next, to move those to a later hearing block. And that will, I think, give us enough time for the case studies, the farm finance case studies that are scheduled to be dealt with properly. And as I say, it is, of course, very important that they are. I recognise that the change will cause inconvenience, considerable inconvenience, to the consumers, to the experts, to the entities that we had told that their natural disaster-related case studies would be heard this week or next. So I'm sorry for that inconvenience. It's certainly not something we've done deliberately. I regret to say it's in the nature of all court and court-like proceedings that matters sometimes arise that cause changes to even what we hoped were the best laid plans. And it's perhaps all the more so in the case of a public inquiry with broad terms of reference and a lot of participants. Now, it's all very well to say that we're not going to do that this week and next. When are we going to do it? It's no good just saying we're going to shift natural disaster insurance out of this week. When are we going to do it? Well, I propose that we should deal with those cases in the 6th block of hearings, which will take place in Melbourne in September. And it's likely, I think, as best we can judge at the moment, that that 6th block will consider conduct of insurance companies, general and life, and their intermediaries in some respects, as well also as the natural disaster case studies that had been planned for this block. And other topics, or the topics of those hearings, will be announced in the ordinary way. But we are not putting them off into the never never. We're going to shift them out of this block into September in Melbourne. Now, it's my hope that in reordering our work in that way, it means that we can, that it will ensure that neither the farming work we're now looking at nor the natural disaster work that we've got to look at into the future needs to be in any way compressed by timetabling difficulties or pressures. Now, with the removal of natural disaster from this block, Ms. Orr, what's the anticipation about farming?
We hope, Commissioner, to finish most of the farming case studies this week. We think that one of the case studies may spill over into next week, and the bulk of next week will be filled with the cases relating to the third topic that we were dealing with in these modules, relating to interactions between financial services entities and Aboriginal and Torres Strait Islander people.
Yeah, okay. Well, we'll proceed in that way. I've had to make the call perhaps earlier than I would have liked to have made it. It's always very tempting in these things. Well, perhaps we've heard some evidence about this. It's tempting in these circumstances to wait and see what turns up, but rather than have people getting on aeroplanes, coming here and finding that they're not going to be heard, it's better that I pull the pin now and shift natural disaster over into September, give us enough time to deal properly with the farming issues. Now, Ms. Orr, anything that arises out of that or needs to be added to that?
Oh, no, just to say, Commissioner, that my team of counsel assisting and the solicitors instructing us appreciate the additional time. We feel that both topics, farm finance and natural disaster insurance, are important topics that involve multiple consumers and very detailed stories, and we are concerned to ensure that each of those stories is properly explained.
Yeah, thanks. Yes.
Now, Mr. Steinberg, I had been asking you some questions about the customers that you've dealt with in Annexure B to your statement. You're still in that?
Is it the one we were finishing on just before?
Yes, I had some further questions about those customers. Do you recall these were customers whose identities are the subject of a non-publication direction?
Yes, I do.
You have Annexure B?
Yes, I do.
Right. Now, we had finished by discussing the position that ANZ has these days in terms of instructing lawyers to assist it in enforcement action. I want to take you to another occasion in relation to these particular customers in January 2012, when the customers made an offer to ANZ to settle their indebtedness, and ANZ didn't accept that offer.
Yes.
Yes, and you say in your statement that, and I'm carefully going to quote you here because I'm going to ask you to explain this further. You say that while that decision was not inappropriate at the time, with the benefit of hindsight, it is possible to say that the offer should have been accepted, subject to the conclusion of acceptable terms.
Yes, can you just point me to that paragraph number, please?
Yes, I'm sorry, it's 93 in your statement, Mr. Steinberg. Now, I want to understand what you mean by that statement. The decision was not inappropriate at the time, and with the benefit of hindsight, it's possible to say that the offer should have been accepted. I want to understand whether your position is that the offer ought to have been accepted by ANZ or ought not. Okay, so
could I maybe take that in two parts, please? So in terms of why I don't think it was inappropriate, this offer in 2012 to settle for the amount of, and may I say the amount?
Yes, you can.
For the amount of $2 million to be financed by the National Australia Bank, came to the bank after a long series of negotiations and offers that were put by the customer to ANZ over quite a period of time. If I look through my statement, we had the October compromise, the November offer, the 17th of November offer, and each one of those offers were a reduction in the offer below that. And having accepted the offer before this, which was the 17th of November offer, deeds were prepared in order to bring that particular offer into effect, and those deeds weren't executed because this new offer was then put to us, which was a further reduction. So when I say in paragraph 93 that I don't believe it was inappropriate, in those circumstances where the offer had been continually reduced and where the offer of $2 million was quite a significant reduction on the debt that was due, I find that, well, in my words, not to be inappropriate. Coming to the second part of the question, Ms. Orr, the reason I think that, or the reason that I say that with the benefit of hindsight, it's possible to say it should have been accepted, The reason I made that observation is because ultimately we accepted an offer of, and I'm just looking, but it was less than that, 1.1 or $1.2 million was the offer that we ultimately accepted that
Yes.
in 2014.
Yes.
So with the benefit of hindsight and with the benefit of knowing that, it would have been better if we would have accepted the $2 million offer 2 years earlier.
If the offer should have been accepted, doesn't this case involve a failure by ANZ to accept a reasonable settlement offer like the Cheesemans?
No, I think it's different. As I say, I think each one of these needs to be looked at individually. I look at the unique circumstances that apply to each individual matter that I work on or that I assess. And each individual matter takes on its own, personality and its own set of facts and circumstances. And I don't believe that this is the same as the Cheesemans. It's a different arrangement as far as I interpret it and see it.
So the offer was to pay $2 million.
That's right, in 2012.
That's right,
yes.
the offer we're discussing.
That's right.
And if we go to Exhibit 50 to your statement, ANZ 03000010294.
Was that number 50?
50, yes, 50. We see there a diary note dated the 30th of January 2012 that appears to have been prepared after the settlement offer of $2 million was received.
Yes.
And on the second page, 0295, we see a schedule setting out the securities for the loan.
Yes.
And we see that it's been redacted, but you can disregard the redactions, your version doesn't have them. We see that the total market value of the securities was $2 million.
Yes.
And that the ERV referred to down the bottom of the page, the estimated recovery value was $1.6 million.
Yeah, yes.
And this is because the bank thought that it was most appropriate to have regard to the worst case ERV. Do you see that at the bottom of the page? The 80% is the worst case estimated recovery value.
Yes, that applies to the table in the middle of the page entitled Provision Assessment.
Yes.
Yes, that's right.
So at the time this decision was made to reject this offer, the most that the bank thought it could expect to recover through enforcement action was $1.6 million.
That is one way of looking at it. I think there are other ways of looking at it. So the questions that I would ask would be, what other security does the bank hold? So in this case, there was a stock mortgage, and we were holding a security over the livestock. And from recollection, again, can I say specifically what the stock was? Because that might, it was part of the livestock stock, included livestock and other stock.
Yes.
It wasn't actually livestock.
Yes.
That could have had a value, I don't think you can necessarily just have a look at the estimated realisable values of the freehold security as the only input in determining what your decision or recommendation might be.
Well, what I want to put to you is that when the estimated realisable value is $1.6 million and the customer's put to you an offer of $2 million,
Yes.
It's unreasonable to reject that offer.
I'm sorry, I didn't explain myself completely before. you will see that in that particular table we have the stock mortgage and the bill of sale over the stock,
Yes.
but we have a zero net realisable value.
Yes, you and I can see that. Unfortunately, others can't. But it's
Okay.
item D in the security schedule is the stock mortgage.
That's right. Now, the reason that has that particular value there is driven by the bank's policies around how we can extend that particular type of stock, but it doesn't take away from the fact that there is this particular stock there and it does have value. What this table is saying is that when we value that collateral for security indicator purposes, we are not able to take the value of that particular collateral into account. Part of that is driven by our prudential requirements, but there was in this particular enterprise potentially considerable value not only in the livestock but in the intangible stock that stood alongside it.
I understand. So you say the total estimated realisable value is in excess of 1.6 million, the figure in this document.
I'm saying that's a possibility,
Right.
yes.
Possibility because we don't know the value of the stock mortgage. It wasn't assigned a value.
It's not assigned a value, but you can get a picture, if you like, of what it might be worth by looking at the accounts for this particular enterprise. And this particular enterprise, again, I don't recall the numbers, but there are some material numbers around the stock and the particular type of stock that it is.
Mm-hmm. So in refusing this $2 million offer, did ANZ explain the reasons it was being refused or invite further negotiations with these farmers?
I'm not sure I can recall that. Ms. Are you able to take me to any documents to help me remember?
Yes, your statement, paragraph 93.
So 93 talks about the offer. Your question was whether we communicated that
Yes.
and how we did?
The last paragraph the last sentence of your paragraph 93 reads, in addition,
Oh, yes.
in refusing the January offer, it appears that ANZ did not explain the reasons for its refusal or invite further negotiations.
Yes, that's right.
And if we turn to Exhibit 51 of your statement, which is ANZ 030030315,
Yes,
we see the communication with the customers. Your offer of 25 January 2012 of 2 million as full and final settlement,
yes,
we advise that your offer above is not acceptable.
yes,
That's what the customers were told.
yes,
They weren't given any explanation of why it wasn't acceptable, nor were they invited to further negotiate with ANZ.
yes.
Is that something you regard as acceptable?
I think it would have been better to have provided some explanation. I wasn't involved in this deal at the time, and I wasn't involved in preparing this letter, so I can't say what the actual circumstances were that led to this type of communication. But I would, personally, I prefer to see a little bit of an explanation.
Is it now ANZ's position that when it refuses a settlement offer, it seeks to engage customers in further negotiations?
Yes.
And how does it do that?
One of our preferred ways of doing that is by offering farm debt mediation. But even in instances where farm debt mediation is not appropriate in a particular circumstance, we would reach out to our customer, have a meeting with them and try and understand what further discussions can occur.
Do you think the community expects that when you decline a settlement offer such as the one made by these customers, you would explain why you were doing that and indicate that you were open to further discussions?
Look, my response to that, Ms. Orr, is that we need to consider this in the context of everything that's happened on this file. So there's been a lot of negotiation by ANZ on this particular matter. There's been a lot of meetings and a lot of compromise reached relative to the value of the debt. I think that it is appropriate that in the particular circumstances, as I said in my paragraph 93, that it was not unreasonable that we didn't accept that offer. And what we've done here is we've communicated the non-acceptance of that to the customer. Whilst I'd prefer to see it done slightly differently, I think it's reasonable. In the circumstances, I think it's reasonable.
Can I go to the commercial sense of the rejection, and not by reference to the document on the screen, but by reference to the immediately preceding document we had up?
Yes.
The reference to which is, Ms. Orr?
ANZ 030010294.
And was that mine number 50?
Exhibit 50.
Yeah, thank you.
And I had taken you, I think, to 0295 within that document.
I just direct your attention to the block provision assessment.
Yes.
Date last calculated, provision held, FMV stands for what?
Fair market value?
Of the realty?
Yes.
Fair market value of the realty was 2 million. The offer was 2 million.
Yes.
Yeah. What was the commercial reasoning which would underpin rejection of an offer from the customer to pay the fair market value, not the realisable value, but the fair market value of the real property that the bank held under mortgage?
So looking back at this, Commissioner, and trying to put myself in the shoes of the people who made that decision, I would say they'd be looking at the value of the livestock and the other stock that accompanied the livestock. Am I able to say, Ms. Orr, what that is? Or does that give away too much information on this file?
I think you should treat this page as having no redactions in the first table or the second table. Or, I'm sorry. In the first table there are names.
Okay.
Other than that, no redactions.
So, Commissioner, in this particular case, there were stocks of semen, bull semen, and according to the balance sheet...
I thought that was it. Yeah, go on.
And according to the balance sheet, Commissioner, that the livestock and the semen stock were of value?
Yeah. Well, again, just come to the commercial reasoning. Because can I tell you where I'm going so that you see where the argument is going? Step one is, why is it commercially sensible to say no? Let it be assumed that you get to an answer which says, yes, it's commercially sensible to say no because livestock and stock of semen is such that there is more to realise. Why not go back to the client and say, look, yeah, you're offering us 2 mil, but we've got security interests over more than the land, and you've got very valuable assets there. Either you go back with a number or you don't go back with a number. It's a question of negotiating technique. But go back to the client and say, you've given us a figure that represents the land, but we hold more than that. What are you going to do about that? It's this notion of communicating to the client rather than just saying, oh, we've had a long history of discussions. The answer is no.
Yes, Commissioner, I accept that would have been the preferred way to handle it. It's very difficult for me to put myself in the shoes of these people when they were negotiating the deal, but all sorts of other factors potentially come in as to whether they felt that in this particular case that the customer may not have been dealing, in their opinion, fairly with them.
Be it so. Let's assume that the banker holds the deepest, darkest suspicions about
Yes.
the customer. They may be well-founded, they may be ill-founded, but assume them to hold these suspicions. What do you lose by saying to the customer, look, what you've offered us is land value. We hold other security. What are you going to do about that? How's the customer going to misuse that or twist that or work to the bank's disadvantage if the bank simply says that to them?
I agree, Commissioner. I don't see that there's a lot for the bank to lose by going back to the customer and saying, look, we don't accept the offer, but, you know, whatever the but is.
Accept the offer because.
Yeah.
It's the because
Yeah.
which is
Yeah.
often enough, I think, the thing that either persuades the customer to change or it doesn't. But at least put your card on the table.
Yeah, I accept that.
Yeah. Go on, Ms. Orr.
Those are the questions I wanted to ask you about this particular
Okay.
set of customers, Mr. Steinberg. I'd like to move to some questions dealing with your Annexure E. Annexure E of your statement,
Is that a named one?
yes, relates to Dimity and Michael Hurst.
Okay. Thank you.
Now, Mr. and Mrs. Hurst were farmers in northern Tasmania
Yes, that's right.
and they bred cattle and lambs.
Yes.
And from 2006, they began investing in the forestry industry in Tasmania.
That's right.
And in your statement, you've accepted that ANZ's conduct in relation to the Hursts fell below community standards and expectations.
That's right.
And you say that this was attributable to a number of aspects of ANZ's conduct in relation to the Hursts between 2011 and 2013.
Yes, that's right.
And one of the matters that you've referred to in your statement is that ANZ did not engage in farm debt mediation in relation to this case.
Yes, that's right.
A farm debt mediation was not compulsory in Tasmania at the time,
No, it wasn't.
but you now accept that ANZ should have engaged in farm debt mediation with the Hursts at an early stage and certainly before they entered into a deed of settlement and release with ANZ.
Yes, I do.
Why is that?
Because farm debt mediation would have provided a better forum for the bank and the Hursts to reach an amicable and fair arrangement.
In your view, what benefits can flow from early farm debt mediation?
So as a general proposition, I would put to you that the earlier we deal with companies that are facing financial difficulty, the greater the remedial options are. The later we wait and the deeper the problems become, so too then do the options available narrow.
Is it now ANZ's policy to conduct farm debt mediations in relation to all agricultural lending files prior to any enforcement steps being taken?
Yes.
And how long has that been ANZ's policy?
So you're testing me on the timing, but it would be 2016 or 2017. I'm sorry, I'm just not able to pin a date on it.
Now, I've mentioned the deed of settlement and release that ANZ entered into with the Hursts. You acknowledge that that deed provided ANZ with substantial enforcement rights. That's 116 of your statement.
Yes.
Mr. Steinberg. Is that correct?
Yes, that's correct.
And in that sense, it was similar to the asset management agreement that we saw ANZ had entered into with the Cheesemans.
So again, I struggle with the comparisons, Ms. Orr, because I look at each one individually. When I read the deed of settlement in relation to the Hearsts matter, I found that it was the obligations on the Hearsts were difficult.
Difficult in what sense?
Well, they were
Mr.
tough.
Steinberg?
They were tough.
Yes. You tell us in your statement that it provided for the sale of all secured assets by ANZ, the release of all claims by the Hearsts against ANZ, and an agreement by the Hearsts to default judgment in favour of ANZ for the balance of the debt.
Yes.
You say that was tough on the Hearsts?
Yes.
Would ANZ consider it appropriate to enter into a deed with terms like that today?
Look, today we would look at entering into an arrangement that had a little bit more flexibility, but again, Ms. Orr, it does come down to the individual circumstances of the case. But as a general rule, can I say that we do apply a different lens? Again, if I could use the word, showing empathy towards our customer, and with a general aim, where possible, for home retention.
You tell us in your statement that agreements reached with customers today ordinarily involve a greater degree of compromise by the bank than we see in your agreement with the Hearsts.
Yes.
There was insufficient compromise by the bank in its dealings with the Hearsts, wasn't there?
Yes.
Was there any?
Commissioner, the forbearance from enforcement, but I'm not justifying that was sufficient, but that was one forbearance or compromise that the bank made.
Well, sale of all securities, blanket releases, default judgment for the balance. The compromise is not immediately apparent to me.
Yes.
Can I, just to be sure of it, what did the bank give up?
So I think the main right that the bank gave up was to enforce its securities at that time.
Yes.
Delay in enforcing.
A delay, that's right.
Another matter that you've mentioned in relation to the Hearsts is that ANZ increased the interest rates on the Hearsts facilities at a time when they were known by ANZ to be under financial stress.
Yes.
And you acknowledge that while the interest rate increase reflected the bank's increased cost of capital, it placed an additional financial burden on the Hearsts at a time when they were under financial stress.
Yes.
Would ANZ do that today?
No.
What would it do in that situation today?
So in many cases that we deal with in lending services, we either leave the pricing unchanged, or in some cases we are now reducing the pricing.
In what circumstances are you reducing the price?
Generally in circumstances where the customer is unable to afford the pricing that's currently on offer, and to try and make the pricing more affordable if possible.
You refer in your statement to the fact that ANZ obtained valuations of the Hearsts properties but didn't give them to the Hearsts.
Yes.
And you've already acknowledged that in your statement that if valuations had been obtained and given to the Hearsts, it might have been possible to facilitate what you describe as a frank early discussion with the Hearsts about the possibility of an asset realisation strategy being adopted.
Yes.
And could an ANZ customer facing a similar situation to the Hearsts today expect to be provided with a copy of those valuations?
Yes.
You've also mentioned in your statement that the Hearsts case was the subject of an independent evaluation conducted by the Honourable Susan Crennan, a former High Court judge.
Yes.
And you've annexed a copy of that evaluation to your statement.
Yes.
And as a result of recommendations made in that evaluation, ANZ paid the Hearsts an amount of money.
Yes, that's right.
How much did ANZ pay to the Hearsts?
It was $500,000 plus interest, which brought the total to $684,000.
And have the cases of other former Landmark customers also been the subject of independent evaluations?
No.
Why not?
So the Hearsts was the first time that we had utilised this as a mechanism for dispute resolution. What we found, Ms. Orr, is that it took a long time. It took well over 12 months to resolve, and the view that we formed, having gone through it, is that we could achieve a quicker outcome through a found debt mediation that would hopefully come with less emotional stress for our customer.
And why did ANZ choose to do an independent evaluation with the Hearsts?
The reason was that the Hearsts were actually being managed by our customer advocate's office, and we had made an offer of compromise to the Hearsts initially by forgiving the balance of the debt that was due to the bank of approximately $4.8 million, and the Hearsts were not happy with that offer, and so my understanding is that through discussions with our customer advocate, that the idea was floated of using a retired an eminent person to conduct an evaluation, and that's how it came about.
In an earlier version of your first statement, the statement that dealt with the acquisition generally and contained the tables of acknowledged conduct falling below community standards and expectations, in an earlier version prior to the final version, you accepted that ANZ had breached clause 2.2 of the Code of Banking Practice in relation to the Hearsts.
Yes, that's right.
That being the provision with the obligation to act fairly and reasonably towards a customer in a consistent and ethical manner.
Yes.
You also described ANZ's conduct in that earlier version of your statement as conduct that involved encouraging and granting increased loans to the Hearsts when the bank had not also informed the Hearsts that it disapproved of their property investment model or obtained updated valuations. Do you recall that?
Yes. Can you remind me, is that in my original 401 statement? Yes.
Do you recall that?
Yes.
Yes. And was that the conduct I've just described to you of encouraging and granting increased loans, not telling the Hearsts that you disapproved of their property investment model and not obtaining updated valuations, was that the conduct that you initially regarded as being in breach of clause 2.2 of the Code of Banking Practice?
It was the cumulative effect of all of those.
So the cumulative effect of those things was that ANZ had not acted fairly and reasonably towards the Hearsts in a consistent and ethical manner.
Yes.
That's the view you formed?
Yes, that's the view I formed, and can I again just add a little bit more to that? It was informed for my part, in any event, rightly or wrongly, by the determination by Ms Crennan.
So that was the view you formed at that time, but in the final version of the statement you provided to the Commission, you've resiled from that position. You've removed the hearse from the table containing customers for whom you acknowledge there was a breach of the Code of Banking Practice, and you've moved them across into your table about conduct that fell below community standards and expectations.
Yes.
Why did you do that? I had a further look at Ms Crennan's evaluation, and on reflection, when I had a more detailed look at her evaluation, I found that there were parts of her findings that I didn't agree with. We have accepted the outcome and the recommendations, but there were some of the findings that I didn't agree with respect, of course. So now you see the conduct as falling into a less serious category, if I can put it that way, of being conduct that falls below community standards and expectations but doesn't breach the Code of Banking Practice.
Yes.
And what is the conduct that you now regard as falling below community standards and expectations?
So it's a cumulative effect of a number of issues. Firstly, the farm debt mediation issue, which you've already raised. Second of all, Ms Crennan, in her evaluation, describes a particular meeting that was held with the Hearsts and their new relationship manager in approximately August 2011. And based on the description of that particular meeting, so that was the second input. The fact that we had increased the interest rates, which is, as I've said earlier, something we wouldn't do today. The fact that we didn't provide the valuations to the Hearsts. So the cumulative effect of all of those matters led me to the conclusion that we had breached community standards and expectations.
And what about the conduct you described in the earlier version of the statement as encouraging and granting increased loans to the Hearsts without telling them that ANZ disapproved of their property investment model? Was that part of your consideration?
Yes, it was. Yes.
Part of the conduct that you say fell below community standards and expectations?
Yes.
Thank you. Could I turn to another of the sets of customers that you've dealt with in your statements, Mr Steinberg, the Harleys, who are dealt with in Annexure D to your statement. So this annexure to your statement relates to Stephen and Janine Harley and their company Warwick McAllendon Proprietary Limited.
Yes, it does.
And the Harleys ran a sheep farm in Western Australia.
Yes, they did.
And their farm was on a property that you've referred to in your statement as the McAllendon property.
Yes.
And that was around 230 kilometres south of Perth.
Yes, that's right.
And by 2013, the farm had been operating on that property for over 100 years, for 3 generations.
Well, can you help me with that one, Ms Orr? Did I make that comment in my statement?
No, it's in one of the documents annexed to your statement, Mr Steinberg, Exhibit 11.
Thank you. I'm sure that's right, but it's...
Yes, if you'd like to look at it, it's ANZ 800 644 0219.
Is this the diary note dated the 14th of February?
Yes, it is.
Can you take me to a line or?
Oh, I'm sorry, it's the next page into that exhibit, I'm sorry.
That's all right.
Again, with this statement, you have multiple documents behind tabs. It's the one after that, which is the email from Rod Grieve dated 24 April 2013. Do you see number 1? Business operating at
yes.
current location for 107 years, currently 2 families living on the property.
Yes, so on that basis I accept that. That's it, yes.
Thank you. So the Harleys also lived on the property,
Yes.
and in 2013 there were 2 families living on the property. Is that right?
I wasn't aware of that.
Okay. That's in the same document. We'll bring it up on the screen to help others. ANZ 800 678 5198.
And can you take me to a line or a...
The second point in the
Oh,
email.
yes.
Currently 2 families living on the property.
Yep, sorry, there's a lot of detail in all of these. I can't remember
Yes,
it all.
yes, there certainly is, Mr. Steinberg. Now, the McAllendon property was made up of a number of different parcels of land,
Yes, that's right.
and in 2010 we see from the documents you've given us that there were 6 parcels of land.
Can you take me to that part of my... Oh, yes,
Yes.
1, 2, 3.
If we look at the table in your statement at paragraph 64,
Yep. Okay, so we'll need to break that up, but I accept that it's probably 6, yes.
yes, and in February 2013, one of those 6 parcels was subdivided into 4 different parcels.
Yes, that's right.
So there were a total then of 9 parcels of
Yes,
land.
that's right.
And how many of those parcels of land do the Harleys own now?
I don't believe they own any of them.
They own none,
Yes.
yes. And the Harleys, do they still live on the property?
I don't know where they live.
Now, in your statement you say that you've considered ANZ's conduct in relation to the Harleys, and in your view ANZ did not engage in misconduct or conduct falling below community standards and expectations in its dealings with the Harleys. That's your position?
Yes, it is.
But you've accepted that there were some aspects of ANZ's management of its relationship with the Harleys that ANZ could have handled better.
Yes.
We'll come to those, but again, I want to understand some of the decisions that ANZ made in relation to the Harleys by going back to the acquisition of their loan from Landmark in 2010.
Yes.
You tell us in your statement that they've been clients of Landmark since around March 2004.
That's right.
And at the time ANZ acquired the Landmark loan book, the Harleys had a term loan facility in the amount of 2.05 million.
That's correct.
And they had an overdraft of 450,000.
Yes, that's right.
Now, at the time of the acquisition, the Harleys were already under financial pressure.
Yes, that's right.
You tell us in your statement that they'd had consecutive trading losses for about 5 years.
That's right.
And they recognised that they'd need to sell some of their land in order to improve their financial position.
Yes.
And at the time of the acquisition, the Harleys were taking steps to subdivide one of the parcels.
That's right.
And did ANZ identify before the acquisition that the Harleys were under financial pressure?
I'm not sure I've seen anything that indicated that, so I don't know is the answer. Is there anything in my... No. Look, I know that there was 5 years of consecutive losses, so clearly they were having financial difficulties pre the acquisition. What I can't say is at the point at which ANZ became aware of that, whether that was during the due diligence or whether it was post the acquisition. I just don't know.
Do you know if ANZ met with the Harleys to discuss the acquisition and to tell them about the sort of steps that ANZ would take if their financial difficulties continued?
The earliest I can pick up, Ms. Orr, is when the file was transferred to Lending Services in July 2011.
So does that mean, Mr. Steinberg, that you don't know if ANZ met with the Harleys to talk these things through with them, given their financial position when the acquisition occurred?
Yes, I don't know.
You haven't seen anything to suggest that they did?
I might have. I'm just not able to recall it right now.
So ANZ takes the Harleys on as customers in March 2010 as part of the acquisition, and within about 6 months, in September of that year, ANZ's considering the transfer of their file across to Lending Services. You tell us that in paragraph 13 of your statement.
Yes, that's right.
And the file wasn't transferred at that time. In April 2011, ANZ prepared a credit memorandum in relation to the Harleys.
In April 2011?
Yes.
Can you take me to the section in my statement?
I'll take you to the document, which is the credit memorandum, Mr. Steinberg, which is behind your Exhibit 51, the second document, ANZ 023 005 0105.
Is that dated 29th of April?
Yes, it is. Do you see from the final document, the final page of that document, that this was prepared by the Harleys relationship manager at ANZ, Ms. Marston? I assume Ms. Marston, Kim Marston.
Yes, that's right.
And we see at 0114, a couple of pages from the back, under the heading Management Profile,
Yes.
that the credit memorandum recorded that the Harleys had an excessively high debt load accumulated from continual losses.
Yes.
We see also on that page, next paragraph down, that their property had subdivision approval to enable the sell-off of 400 hectares in 4 parcels, but the view there'd been limited to that.
Yes, I do.
And on the we see that the relationship manager for 12 months. Read with the 5th paragraph. Recommendation to because of the potential need for an asset sale to reduce debt to more manageable levels.
Yes.
Now that recommendation was implemented.
It was transferred to Lending Services, yes.
Yes, and the request for further support for 12 months
Yes, it was.
accepted.
Yes.
And in May 2011, so the following month, ANZ sent the Harleys a new letter of offer, giving effect to that.
Yes.
And under that letter of offer, which if you'd like to have it in front of you, is
Yes.
your Exhibit 51 first document. ANZ 800 670 003 001,
Yes.
ANZ offered the Harleys a loan of $2.3 million, expiring in March 2012, so about 10 months later, and an overdraft facility of $250,000, expiring in February 2012.
Yes.
Sorry, I may have got the number incorrect. 800 670 0003 0001. I apologise. So $2.3 million facility expiring in about 10 months, and an overdraft of $250,000 expiring in about 9 months.
That's correct.
And this was secured by the McAllendon property and guarantees from the Harleys.
That's right.
And under this letter of offer, ANZ required the Harleys to provide certain financial information to ANZ.
Yes.
And ANZ made clear in this letter of offer that a failure to provide that information would be a default. Do you see that on 0004?
Yes, I can see that.
And again, I think as you've already said, consistently with the recommendation made by the relationship manager, in July 2011, ANZ transferred the Harleys file across to Lending Services.
Yes.
And the reasons for that decision, which you've referred to in your statement, included the fact that they were about 15 days in arrears with their interest payments. This is 18 and 19 of your statement.
Yes, so 18 and 19 record a range of reasons.
So they include, firstly, that they're about 15 days in arrears with their interest payments. They've had consecutive trading losses since 2005, and they haven't provided the bank with some of the information that they were required to provide about their business.
Yes, and where do I refer to the 15 days?
I'll find that for you,
Thank
Mr.
you.
Steinberg. We'll find that for you.
Okay,
What
thank
you
you.
say is that they were in arrears.
I
We'll
say
see
they
if
were in
we
arrears.
can locate whether we're correct in that it was 15 days. But
Yep.
but you include the fact that they were in arrears
That's-
on their
that's
interest
correct.
payments. Thank you. So the credit memorandum, having been obtained in July 2011, the transfer to Lending Services having been in July 2011, I apologise, in August 2011, ANZ told the Harleys that their file was moving across to Lending Services.
That's right.
And on the 16th of August 2011, the Harleys' new relationship manager, Mr. Davis, prepared a takeover diary note summarising the situation for the Harleys, which you've exhibited as Exhibit 7 to your statement, ANZ 023 005 0079.
Yes.
It's where we find the 15 days, Mr. Steinberg. So
Okay.
the current position, which we see halfway down the page, as recorded in this diary note, is that as at the date of transfer, the following out-of-order positions were identified. ABL interest arrears of $41,764, 15 days.
Yes.
Funds are now available in the OD, the overdraft,
That's right.
to cover, but will hold off making a manual payment and maintain the default for now.
Yes.
So this is the monetary default that you refer to at this point in your statement, is that right?
Yes, it is.
And the current position also includes that the customers have failed to table quarterly data and property sales update by the due date of 15 July.
That's right.
And that's the non-monetary default that you refer to as having happened at this point in your statement.
Yes.
Now, can I ask you before we move on, why would ANZ hold off on making a manual payment of the interest arrears from the overdraft and maintain the default?
Yeah. I'm looking back and assuming what the relationship manager was had in mind when that decision was made, and what I believe he was thinking was that he didn't want to debit the customer's overdraft account without getting their authority to do so. That's what I believe is behind that particular comment.
Which resulted in the Harleys remaining in financial default.
It did result in that happening, but my understanding is that at a point in time, I'm not exactly sure when, but very shortly after this, that transfer did happen. So what I believe was behind this decision was more a desire or a need to get the customer's authority,
Yes.
rather than, as it appears, trying to subsist the default.
I see.
That's my understanding.
Can I ask you to turn to the following page, 0080, where we see the relationship manager setting out the history of this file to date?
Yes.
And can I point to a number of the matters that he refers to under the heading Brief History? We see there that includes a note that the sheep flock has been progressively reduced over the past few years to fund losses and interest costs on the loans.
Yes, I see that.
The relationship manager also sets out his views of the Harleys' attempts to sell their land.
Yes.
And in the 8th bullet point down, he sets out the current prices at which the lots are listed for sale and the amounts that the Harleys are willing to accept for them.
Yes.
And underneath that, he expresses the view that the Harleys may be unwilling to sell at market value or consider any real offers put forward. Do you see that?
I do.
And a few pages over at 0083, we see a part of the document headed Safety Assessment, which records that there was a security shortfall. The LVR is high at 80% against land values alone.
Yes.
And the Harleys' equity, after adjustments to reflect the bank land values, was 39%, which was described as at or below the critical threshold, and based on industry guidelines is unviable.
Yes, I see that.
And over the page at 0084, we see a summary of, firstly, the customer's strategy for dealing with this situation, which was to go ahead and pursue the subdivision and land sales as a means to reduce or clear the debt.
Yes.
And underneath that, there's a summary of the options available to the bank, which again include, well, again are retain, upgrade and exit. And retain is described as allowing the Harleys one final opportunity to take control of the matters themselves on the provision that they meet all their bank obligations.
Yes.
And exit is described as exit on the basis of the monetary or non-monetary defaults and sell the security properties. You see around the sale of the security
Yes.
properties in the last
Yes, I see
part
that.
there.
Yes, I do.
And underneath we see the recommendation, which is provided customers promptly address the current defaults, then willing to allow them time to effect the land sales under their own control.
Yes.
Should that not occur, then we will need to consider moving to an exit strategy.
Yes.
So can I put to you that the key themes that emerge from this document are that land sales were necessary to reduce the debt.
Yes,
ANZ was willing to give the Harleys an opportunity to sell the land themselves,
that's right.
but ANZ believed the Harleys had unrealistic expectations about the value of their land in the current market.
Yes,
Did ANZ meet with the Harleys to discuss this position or to discuss the transfer of their file across to lending services?
there was no face-to-face meeting. There were a number of telephone conversations.
Should there have been a face-to-face meeting?
Yes,
And then in September 2011, that diary note is 16 August that we're moving on from, 16 August 2011.
so which tab?
I'm sorry, I'm just moving on in time first, and then I'll show you. You said that there were phone contacts. What I want to suggest to you is that one of those phone contacts was in September, and there's a diary note which is Exhibit 39 to your statement, dated 26 September 2011, that deals with that phone conversation. ANZ 800 644 0260. Can you see in the background section there that Mr Davis from the bank had spoken to Rod Grieve, who was the Harleys agricultural consultant or farm advisor,
Yes, I can.
and they discussed a potential meeting between the ANZ and the Harleys. And Mr Davis records that he decided to ring the Harleys directly to discuss the meeting, the proposed meeting. But
Yes.
he was unable to travel to the farm to meet with the Harleys. He said he was happy to meet them in Perth.
That's right.
And did Mr Davis ever travel to the farm to meet with the Harleys?
I don't believe he did. No,
Was that acceptable?
no.
There's then a reference to a phone call between Mr Davis and Mrs Harley underneath this. They discussed the Harleys' financial position and the bank's requirement, which we saw from the letter of offer that I showed you, that the Harleys repay their $2.3 million loan by the end of March 2012.
Can you take me to a bullet point on that one,
Yes,
please?
it's the sixth bullet point down.
Yes, I can see that.
So they discussed the bank's requirement that they repay their $2.3 million loan by the end of March 2012, which at this stage is about 6 months away.
Yes,
And they discussed three possible options, which we see over the page at 0261. Three possible options to meet the deadline. And they were asset sales, refinance, or assistance from the Harleys' extended family.
yes,
And Mrs Harley told Mr Davis that they'd attempted to refinance, but that had been unsuccessful. Do you see that, about halfway down? Regarding refinance.
yes,
And you see that she also told Mr Davis that their extended family weren't in a position to assist them financially. Second dot point from the bottom.
yeah. Can I just clarify the point before regarding the refinance? So what Janine said was that they had attempted this late last year.
Yes.
Yes,
I take from that they attempted unsuccessfully because they were still with ANZ at this point.
that's possible. Yeah,
Yes. So refinancing wasn't going to work. Extended family didn't have money to assist. You see that?
that's right. Yes,
So that left the final option, which was asset sales.
yes,
And Mr Davis told Mrs Harley that if the properties were fairly priced for the current market, there should be buyers in the market, particularly post-harvest.
that's right.
And Mr Davis said in conclusion at the bottom that in the event that all options had been fully explored and failed to materialise, then ANZ would need to consider its position. This could be that an extension is necessary, and if that was the case, I forewarned that I would require external valuations at their cost and that their interest rate margins would be reviewed upwards. No commitment was given as to supporting any extension.
Yes,
That was the position expressed to Mrs. Harley by Mr. Davis at this time.
yes, that's right.
What do you say to that, Mr. Steinberg? Was that an acceptable position for the bank to be taking and conveying to Mrs. Harley?
Well, looking back on it as if we were doing this today, we would be taking a different position. As I said earlier, back in 2011, it was not uncommon that we would increase interest rates, so it was in accordance with the practices that were being undertaken at the time. But I accept that today that wouldn't happen. In regard to his comment about not giving any commitment to supporting an extension, look, it's a difficult message to communicate. Another way of looking at that is that it's just complete honesty and transparency with the customer. You're just telling the customer the truth. But I can accept that it's a hard message for the Harleys to receive.
And then a few months later, in February, ANZ had the parcels making up the property valued.
Can you take me to that?
That's paragraph 64 of your statement.
Yes, that's right.
Did ANZ charge the Harleys the cost of those valuations?
Yes, we did.
And did ANZ provide the valuations to the Harleys?
I don't believe we did, no.
But in the phone call we've seen reference to in September 2011, Mr. Davis had emphasised to Mrs. Harley the importance of ensuring the land was fairly priced, hadn't he?
Yes, he had.
And wouldn't it have helped the Harleys to do that if they'd been given copies of the valuations they'd paid for?
Yes, it would have.
And you accept that ANZ should have provided them with those valuations?
It wasn't in accordance with the practice at the time, but certainly if this was being done today, then yes, I agree with that.
And do you accept that ANZ should, at this time, irrespective of the practice, because of the circumstances of this case and the discussions that were being had about the importance of pricing, ANZ should have provided those valuations to the Harleys?
I mean, that's a difficult question for me to answer because I know what the practice was in those days, and I know that it was something that was just not done in those days. But of course, when you put that question to me, it sounds sensible that you would give it. But your question's a little bit different. It's when he was sitting there in that moment, should he have done it? And he didn't do it, and I know why he didn't do it. And most other people in his position would not have done that as well. So on that basis, I can understand why he did not do that.
It wasn't the practice or the
That's
policy
right.
to do so, and
That's
he would
right.
have acted consistently with the practice and policy,
That's right.
which put the Harleys at a disadvantage because they were expected to price these properties fairly, but they weren't told what value the valuer had given them.
I think that comment just needs to be balanced with the possibility that the Harleys could have undertaken their own valuation, or they could have obtained an appraisal of value from a real estate agent. So there were other avenues.
But they had paid for the valuations that you already had. So
Yes.
you think they should have paid for additional valuations?
I'm only putting out some possibilities, and I guess it was also open to the Harleys, and perhaps they did, but they could have asked the bank or Roland for a copy of the valuations, and maybe they did do that, I don't know, but that was something that was open to them to do. But with a real estate agent working for them, I would imagine that assessment of value would have been given to them by a real estate agent.
So the Harleys were charged close to $3,000 for the valuations that ANZ obtained.
Yes. Yes.
And later that month, with the benefit of the valuation reports, Mr Davis prepared another credit memorandum in relation to the Harleys, which you've annexed to your statement as Exhibit 39. ANZ 800 644 0260. And on the first page there,
Is this the one dated the 27th of February 2012?
I'm sorry, I keep getting tripped up by the fact there are multiple documents behind many of your tabs, Mr Steinberg. We need to turn to the second document behind that tab. The document ID is ANZ 023 005 0045.
Yep.
And we see that the purpose of this credit memorandum is described on the first page. One of the purposes is to conduct an annual review and seek to extend for a further 12 months pending asset sales.
Yes.
And later on at 0053, we see the conclusions and recommendations of the relationship manager who prepared this credit memorandum.
Yes.
They were to extend the facility for 12 months until the 31st of March 2013 to allow the asset sales to occur and debts to be repaid.
Yes, I see that.
You see that? The
Yes.
conclusions on face value, and by looking at the financial data, we can see that the customer's position is not strong. And further down, the only way principal debt reductions can be achieved is by way of asset sales.
I'm afraid I'm not with you now. Are you still under the conclusions and recommendations?
I am. I went from the first one down to
To the top one?
to the fourth one.
The only way principal debt reduction can be achieved. Yes, I can see that.
You see that? And then a couple more down, as no sales have been forthcoming and property sales being the only means to achieve debt reductions, will be to extend the facilities as now proposed, other than commencing formal recovery action.
Yes.
You see that? So a further period of time was given to the Harleys to continue to attempt to sell the land. Is
That's
that right?
Yes, it is.
Because they had been unable to sell it by the deadline.
Yes.
So this recommendation was accepted by ANZ, and there was a new letter of offer sent to the Harleys a couple of weeks later in March, which you've annexed to your statement as Exhibit 12. That's ANZ 034 001 0062. And under that letter of offer, ANZ gave the Harleys a $2.55 million facility that expired a year later on the 31st of March 2013.
Yes.
And it was again secured over their property and by guarantees from the Harleys.
That's right.
And over the following year, to meet this deadline, the Harleys made efforts to sell their properties and their flock of sheep.
Yes, that's right.
In July 2012, they sold one of their parcels of land for $170,000 and used that to pay down the debt.
Which paragraph of my statement are we at?
That's 35 of your statement.
Yes, that's right.
And in October 2012, Mr. Harley underwent back surgery after being diagnosed with a nerve condition.
I was aware that he was diagnosed with a nerve condition. Can you take me to, I wasn't aware of him having
Dealt
had
with in
back surgery.
Exhibit 54 of your statement, Mr. Steinberg, which is a diary note dated the 22nd of October 2012. It's a few documents in that tab. ANZ 034 001 0034.
And what's the date of that document, Ms. Hall?
It's the 22nd of October 2012.
Okay, just got it on the screen.
If we turn to the second page of that, 0035, and I ask you to look at the heading customer request and the information under there.
Yes, I recall that now.
Yes, so in October 2012, Mr Harley had back surgery, he'd been diagnosed with a nerve condition and he was hospitalised, wasn't he?
Yes, he was.
And he was subsequently diagnosed with pneumonia.
Yes,
And Mrs Harley told ANZ that Mr Harley may never be able to return to his previous level of involvement with the farm.
yes,
And a few months later, after this had happened, in January 2013, the Harleys held an auction of their sheep,
yes,
but that was unsuccessful.
that's right.
And the following month, in February 2013, with ANZ's consent, they succeeded in subdividing one of their parcels of land into 4 separate titles.
That's right.
And the following month, March 2013, they put their property up for auction.
Can you take me to that paragraph, please?
77.
Yes, that's right.
And they didn't receive any bids at the
Yes.
auction, did they?
That's right.
So despite having tried to sell their flock of sheep and their property, the Harleys weren't able to repay the entirety of their debt to ANZ by the 31st of March 2013 as they were required to do.
Yes,
And in April 2013, Mr Davis and another ANZ staff member spoke with the Harleys on the phone. We know that from your Exhibit 41. ANZ 800 644 0229. And we see third paragraph down. This is a phone call with Janine and Steve Harley. Manager Davis confirmed we're following up on his discussions with Janine where they discussed the auction outcome, no bids at all, whether they have obtained advice on solvency and generally seeking an update on their financial situation.
yes,
4 paragraphs down, Manager Davis reconfirmed that the facility has expired and is therefore in default, but made it very clear that at this time the bank doesn't have any immediate plans to take enforcement action.
that's right.
Manager Davis advised that as a consequence of the debt not being repaid by expiry and or via the property auction, we would need to consider their budgets already tabled and consider any extension.
Yes,
And Manager Davis advised that their property will need to be revalued as part of this process. And someone's provided a quote of 2.2, including GST. And another member of the bank's going to email them a valuation authority for them to sign and return.
that's right.
And the following month, in May, there were some emails between the Harleys and ANZ. If we turn to your Exhibit 42, ANZ 023 005 0260. And we look at the email at the bottom of that page. On the 11th of May, Mrs Harley emailed Mr Davis, "Hi Roland, just wanted to let you know that Stephen has had a heart attack and was transferred to Perth on Friday by RFDS and will be operated on Monday 13th of May 2013. I hope you can now understand the pressure we have been under in the last 2 years trying to resolve our financial issues. The last few weeks waiting for a decision has been extremely stressful on Stephen and myself, and we ask that the bank take this into consideration when a decision is made. We look forward to hearing from you with the bank's decision and hope the outcome is what is best for both parties. Regards, Janine Harley." We see Mr Davis's response at the top of that page, passing on his best wishes for Stephen, you and the family at this time.
Yes,
Now, less than a month after this, ANZ sent the Harleys a letter, which you've annexed as Exhibit 43 to your statement, ANZ 800 644 0718. So it's the 10th of June, and ANZ writes to the Harleys, Mr Davis writes to the Harleys, advising them that they're in default and the bank is now entitled to exercise the rights given to it upon default. You see that?
Yes, I do.
Do you think it was appropriate for the bank to send a default letter to the Harleys within a few weeks after Mr Harley's heart attack?
I think it would have been better if that notice would not have gone out when it did. I'd just like to put a little bit of context around it, but again, not justification, that on the 10th of June, Mr Davis did have a discussion with the Harleys lawyer, and during that discussion he let the Harleys lawyer know that he was going to issue the notice of default, so a pre-warning, if you like. I'm assuming that one of the reasons that Mr Davis felt it was important to issue that notice was to make sure that the bank's rights were at least reserved and not waived. But in direct response to your question, I'd prefer to have seen a longer period of time and a better understanding of Mr Harley's health.
This was about getting the enforcement process moving, wasn't it? It's a default notice,
Yes,
and the Harleys have been told that enforcement action will be taken upon further default.
there's nothing in that notice that refers to enforcement action. Based on what's in front of me, I'm not agreeing with that suggestion.
All right. So later that month, this is the 10th of June, later in June, ANZ proceeded with a further valuation of the parcels that made up the property. That's paragraph 64 of your statement.
Yes, that's correct.
And the cost of those valuations was again charged to the Harleys?
That's correct.
And were the valuations provided to the Harleys?
Not to my knowledge.
And in June 2013, with the benefit of those valuations, Mr Davis prepared another credit memorandum in relation to the Harleys.
Yes,
And you've annexed that as Exhibit 44 to your statement, ANZ 023 005 0005. And we see, if we could blow up the first box on the page, that the purpose of the credit memorandum was to document the customer's failure to repay the debt in full by the expiry date, document their request for an extension, conduct an annual review, and document change of bank strategy from retain to exit.
yes,
And on the second page, which is the second box on this page, we see half a dozen points down that Mr Davis records that Janine Harley is quite difficult to deal with, as she becomes very emotional during most conversations, especially with me. She and her farm consultant have at various times complained about me, the bank, and how they feel they have been treated. I have and continue to reject any such accusations, whilst noting that the subject of our conversations are difficult given their financial circumstances. Do you see that?
yes, I do.
And did anyone at ANZ investigate these complaints that Mrs Harley was making about Mr Davis?
The only escalation of this matter that I'm aware of is that Mr Davis did inform his direct manager, Keith Waybury, of this particular matter. I'm not sure what investigations he undertook in relation to it, but it was escalated to Mr Davis's immediate manager.
But have you seen any documents that suggest that Mr Davis's manager investigated the complaints?
No, I haven't seen anything, no.
So ANZ left it to Mr Davis to deal with the complaints that had been made against him.
Look, all I can say is that it was escalated. Mr Waybury's no longer with the bank, so I'm not able to make inquiries of him. That's what I know about the matter.
Okay. So if we turn to 0013 in this document, we see Mr Davis's recommendations in this credit memorandum. You see about halfway down in the first box, halfway down under conclusions and recommendations, Mr Davis says options are essentially 1, extend again via another letter of offer, 2, extend but under a formalised deed, an asset management agreement or forbearance, or option 3, commence recovery action, which could include R&M, receiver and manager,
That's right.
being appointed.
Yes.
Option 1 not considered appropriate in the circumstances given the repeated inability to meet the expiry dates. Option 2 considered as a fair outcome for the reasons that are listed there. And option 3 contrary to points raised in option. So the recommendation made by Mr Davis was option 2, extend but under a formalised deed.
That's correct.
And was that recommendation accepted?
Yes, it was.
And in August 2013, a couple of months later, ANZ issued notices of demand to the Harleys.
Can you please take me to that paragraph,
Yes, I
Ms.
can.
Wall?
It's not in your statement. ANZ 800 705 0249. Do you see that letter from ANZ's lawyers?
So this is after the expiry of the deed. Is that right?
No. Oh, I'm sorry. Yes, this is, but I want to take you to a reference within the letter. First dot point down, our client issued notices of demand on 5 August 2013 and to Mr Stephen Harley and Janine Harley on 15 August 2013.
Yes.
So based on that, do you accept that in August 2013 the Harleys were issued with notices of demand?
Yes, I do. And Ms. Wall, if I could just give you some context as to what I understand about this.
Yes.
So I'm not a lawyer, but it appears to me from reading the file that the way that this deed was set up was to obtain the ability to obtain an immediate judgment against the Harleys if they failed to meet the terms of the deed, and that this demand that you're referring to now was that procedural, the procedural side of setting up the deed for that.
Yes, that's right.
Yeah.
So this is step 1, the letter of demand, which is referred to in this letter.
Yes, the point I'm making is that that was to be held in escrow. It wasn't, as I understand it, it wasn't a demand that was issued on them that they were expected to deal with in 2013.
Yes.
It was to be held in escrow.
Yes, I see. The letter of demand, do you know if it made that clear?
Look, I can't say whether the Harleys understood it. My understanding is that they were represented. They had legal representation, so on that basis I can only assume that it was explained to them.
Yes, I understand. Could I tender that letter, Commissioner?
Exhibit 4.19, letter cause Chambers Westgarth re farm debt mediation, 21 May 2014.
And in September 2013, so a month later, ANZ entered into a settlement deed with the Harleys.
Yes, that's right.
And you've annexed that as Exhibit 19 to your statement.
Yes, I have.
ANZ 800 644 0421. And if we turn to 0424, we see that the deed recites that the Harleys were in default. The bank was immediately entitled to exercise its rights and entitlements under the documents, and the bank had commenced legal proceedings.
Yes.
Now, essentially under this deed, the Harleys agreed to repay their debt before the 31st of March 2014, which was 6 months later. Is that right?
Yes, that's right.
And if they repaid the debt before that date, ANZ agreed to release them from all claims and refrain from taking any steps to enforce its rights.
That's right.
But if they failed to pay the debt within that 6 month period, they were required to give ANZ vacant possession of their properties by the 1st of April 2014.
That's right.
So they were required to repay by the 31st of March 2014, and if they couldn't pay on the 31st of March 2014, they were required to give vacant possession by the following day, the 1st of April.
Can you take me to that particular clause,
Yes,
please?
clause 8 at 0432.
By 1 April?
Do you see there,
Yes,
the
I see that.
obligers agreed to deliver up vacant
Yes.
possession of the properties by 1 April 2014?
Yes, I do.
And ANZ was permitted at that time to file orders in the Supreme Court of Western Australia under which judgment could be entered against the Harleys.
Yes, that's right.
So under this deed, the Harleys had 1 day to give ANZ vacant possession of their property if they couldn't pay the debt by the 31st of March, which was 6 months later.
That's a literal interpretation. I think it's important, Ms. Orr, to put some context to this. So, yes, you're right. If they didn't make the payment, then they'd have to give up possession on the 1st of April. There was a 6 month lead up in this particular agreement, but I also think importantly or relevantly, this had been an asset sale process that had been going on for some years. So from the acquisition date and even before that, but from the 1st of March 2010, we then have the file that transferred into lending services in 2011, and then there's another, almost 3 years of attempts at asset sales in order to repay the debt. So I just want to give that context in accepting that this does say what you're suggesting it says, that there is some context behind that.
Well, it's not just what I'm suggesting it says, Mr. Steinberg. This is a legal document that the bank asked the Harleys to sign.
Yes, no, I agree, and I accept that. It does say that.
Yes.
But I'm just putting that in the context of having been on a program for, let's say, 3 years or longer, in order to get to that particular point. That's just the point I'm wanting to make.
I've spent a bit of time taking you through those 3 years, Mr. Steinberg, because what we see is that the Harleys were attempting to sell their properties. They were attempting to sell their flock. They were trying to price the properties without the benefit of the valuations that at 2 different stages ANZ obtained and didn't provide to them. And they were dealing with the ill health of Mr. Harley.
Yes.
And you asked them to sign a legal agreement which gave them 6 months to pay the entirety of the debt, and if they couldn't pay it within 6 months, they had to provide vacant possession the following day.
That's right.
Was that appropriate, Mr. Steinberg?
Again, I think if it's put into the context that I've put it in.
Well, you'll need to explain to me why the context leads to some relevant conclusion. I understand what you refer to when you speak about the context. Why does that bear upon whether 24 hours is the right period between due date for payment and vacant possession?
I guess what I'm suggesting, Commissioner, is that the Harleys were aware for 6 months that by the 31st of March they had their obligation to repay this amount, and aware of the the ramifications of not meeting that obligation. So leading up to it, they would have been aware, if they weren't going to meet that they would have to vacate. I would prefer to see a longer period of time in here, there's no doubt about that. But again, I'm just trying to put a bit of context so that it's understood that this falls at the back of a very long asset realisation program that hadn't, up until this point, been successful.
I understand the length of period involved. Was 1 day a reasonable period?
Commissioner, in an environment where we've executed an agreement with a customer who's been advised of the ramifications of the agreement, I believe it is reasonable.
Well, that's premised on the understanding that the client's got some choice, the customer's got some choice. What choice did the customer have except to sign on the terms proffered by the bank?
So again, Commissioner, if I could refer to the conversation that the bank had with the Harleys lawyers in June 2013, my recollection of that particular meeting was that the lawyers acting for the Harleys acknowledged and accepted that this had been going on for some time and that the Harleys had to repay their debts to the bank. So on the basis that they had the opportunity to be advised and to have a long...
Gave them a further 6 months to pay. Let's not debate whether that's good, bad or indifferent. Let's start accepting that the bank is giving them, the bank would say, another 6 months to pay. My focus is on end of period, out next day.
Yeah.
Was that bit of the agreement reasonable?
Very difficult question for me to say yes to, Commissioner. Yeah, but you've heard what my view is on this. You know,
Look,
I can only have a view and express it to you. You know.
Be so, and I want to be quite sure that you've had your chance to express your view about whether you think it's reasonable. If you think it's reasonable, you tell me that.
Yep.
And I may accept that, I may not. I've got to make a call at some time, I've got to write something down.
Yep.
But you have your view. I'm not seeking to change your view. I
Yep.
just want to understand what your view is.
Yep. So again, if I could just be bold for one moment, Commissioner, and say to you that in the context of I know you don't like it when I say that, but in the context of everything that happened, which is how I believe these things need to be analysed, I hear your question, which tries to focus me on that one particular moment in time. I don't accept that that is the right way for me to make my assessment. I make my assessment based on the entire context of the story, and on that basis I form my view.
Yes, thank you.
Was it appropriate, Mr Steinberg, for ANZ to make it a condition of deferring any enforcement action that it could immediately take steps to enforce if the Harleys didn't pay by the deadline?
Are you referring to then the judgment in the Supreme Court?
All aspects of enforcing. They were to occur immediately.
Again, I think the answer to that, the answer is I believe it was reasonable for the same reasons as I gave before.
I wanted to put the question to you that different way because I'd like to understand why this situation differs from a situation you've dealt with in another statement, which is the statement that I mentioned right at the start of your evidence, which had not yet been tendered. And I have had some discussions with Dr. Collins and I will tender that statement. So you have one more original statement that you've provided
yes,
to
I
the
do.
Commission, which was in response to rubric
417.
417,
Yeah.
a statement dated the 18th of June 2018.
Yes,
And the contents of that statement are true and correct.
yes.
Yes, I'll tender that statement, Commissioner.
But 4.20, statement of Steinberg, 18 June 18, concerning rubric 4-17.
And do you have a copy of that statement there, Mr. Steinberg?
Yes, I do.
And could I ask you to turn to paragraph 82?
80 which, I'm sorry?
82 in the statement, which is at ANZ 99901000067. And I should just point out to you, I'm sure you're aware, Mr. Steinberg, that there is a non-publication direction over the name of the customer to which
Okay.
this statement relates. This was not a landmark customer. This
Yes.
was another customer that we asked ANZ to provide a statement on, and you provided that statement. So in relation to this particular customer, you said in the last sentence that ANZ, through its solicitors, should also not have proposed to the customer, as a condition of the deferral, that ANZ could immediately take steps to enforce its securities in respect of the facilities before ANZ had exhausted other alternatives. You see that? That
Yes, I
was
do.
your position in relation to this customer.
Yes.
Why do you not hold the same view in relation to the Harleys?
So that question, Ms. Orr, requires me to remember the particular circumstances of this particular case study, and as you know, I look at each one individually, so I keep struggling with your request for me to make comparisons because I don't believe you always can. But in this particular case, my recollection is that we offered a facility to this particular customer, and 12 months later that facility expired, and there was a much shorter horizon, if I could call it, between the acquisition of this customer in approximately 2014 and the events that I describe in paragraph 82, whereas in the case of the previous file, can I mention that name?
Yes,
The
in relation to
Harleys?
the Harleys, yes.
In respect to the Harleys, as I said earlier, we were on a program that had gone for a number of years, and so there was a, if you like, a consistency in the messaging and in the manner in which we were dealing with that customer. So in this case, I felt that more time could have been given.
Okay, so it's about the time, about the history of the matter prior to that happening.
I think
Is
that's
that the
one of.
distinction you
I think
draw?
that's one of the elements. But as I keep saying, every file has got its own unique circumstances. I don't mean to make things difficult for you by saying that, but I honestly believe that.
And if we're back in the Harleys now,
Yep.
if the Harleys circumstances arose today, would ANZ ask the Harleys to enter into a deed in these terms?
I don't believe we would know.
And why not?
Because in today's environment, we would probably look at the 1 day to vacate, and we would, when something like that would come to me for approval, I would look at that and say, and suggest or require that we make that period longer.
And would you do that because one day isn't fair, is it, Mr. Steinberg?
No, fair is not the word that I would use. I have said before that I think what happened here was fair in the circumstances. I wouldn't do it because in our current under our current culture, the focus is on having more empathy for our customers and giving them more time and more opportunity and more flexibility in the way that we manage our solutions.
Your current culture is a fairer culture, isn't it, Mr. Steinberg, than the culture you had in place at this time that permitted the bank to engage with the Harleys in this way?
It's a different culture, and it results in outcomes that I believe are fairer for the customers.
After this deed was entered into, Mr. Steinberg, the Harleys had some success in selling their parcels of land, didn't they?
Yes, they did.
They sold one of their parcels in September 2013 for $224,000 and they applied that to pay down the debt. That's paragraph 37 of your statement.
That's right, yes.
And in December 2013, they sold another two parcels of land for a combined total of $780,000.
Yes.
And a third parcel for $500,000, and they applied the available proceeds from both of those sales to pay down the debt.
Yes, that's right.
So by that time, they'd sold 5 of the 9 parcels of land.
That's correct.
And between January and March of the following year, 2014, in the months prior to the payment deadline under the deed of settlement, they sold more than $15,000 of their livestock, didn't they?
Yes.
And they also applied all of that to pay down their debt.
That's right.
So by that time, they'd sold enough properties and enough livestock to pay down around $1.6 million of their $2.5 million debt.
Yes.
And a few days before the deadline, on the 31st of March 2014, the Harleys' lawyer sent an email to ANZ's lawyer, which you've annexed as Exhibit 45 to your statement, ANZ 800 644 0387.
And which paragraph as well, Ms. Orr, are we referring to in my statement? Can you take me to the...
I'm referring to an exhibit to your statement, which is
Okay.
Exhibit 45. Perhaps if we could have, while you're looking for that paragraph and the Commissioner's reading the document, the relevant pages are 0388, which could be on the screen with 0389. You're concerned, Mr. Steinberg, to see what you said about this exhibit in your statement?
It just helps me bring my
Yes.
recollection back, and I
Yes.
don't have the same agility to work around the documents as you do, so... But I've got the exhibits. I've got that.
You've got the
Yes,
exhibit?
I do.
Well, can I just direct you to the email and see how we
Yes,
go?
yes.
So it's an email that starts at 0388 and runs over onto 0389.
Yes,
And we can see from that email that the Harleys sought an extension of time. So this is the 27th of March, 4 days before the deadline. They sought an extension of time to the end of the year, 31st of December 2014, on the basis that this would take them through spring when there is the most interest in sales before it gets too hot. You see that?
yes,
And their lawyer points out that whilst they are in default of the loan, they've sold 5 of the 9 lots, and he gives the prices that they got for those lots. And he points out that those lots included the lots that they considered would be the most difficult to sell. Do you see that?
Yes, I do.
And he then lists the remaining lots for sale, which included the lot on which the Harleys' house was located.
Yes, that's right.
And over the page at 0389, we see that he says towards the end of the email, given that 5 of 9 lots have sold within about 12 months without substantial discounting, we consider that our client's efforts are genuine and do not present substantial risk of loss to your client. The current sales strategy gives substantial impetus to our clients to achieve the remaining sales and still have equity in remaining property or surplus sale proceeds. Do you see that?
Yes, I do.
Now, ANZ didn't provide a response to this request for an extension for about a month, until the 28th of April 2014, which we see over the page at 0387. There was a communication in the meantime in which the lawyers said they were seeking instructions.
Yes.
And the instructions are provided and conveyed on the 28th of April. And on that date, ANZ's lawyer said, I am instructed to advise that my client is not prepared to agree to the requested extension of time until 31st of December 2014
Yep.
or any extension at all. Accordingly, as your clients are in default under the terms of the settlement deed and have failed to pay the debt, my client intends to exercise its rights. Please confirm by return email that your clients will now provide vacant possession of the lots which remain unsold, which based on your email below I understand are the particular lots,
Yes,
including the lot with the house in which the Harleys were living.
that's right.
Why did ANZ decline this request, Mr. Steinberg?
Well, my assessment is that the bank took the view that this matter had gone on for a very long time and reached a point where it needed to be concluded, and it felt that it had given the Harleys sufficient time through extensions and of facilities, and at a point in time had to come where a decision was made to enforce and have the bank's debt repaid.
Despite the fact that the Harleys were asking for a relatively short extension to get them to the part of the year where there was the most interest in sales, and they'd already sold the lots that they regarded as difficult to sell.
Yeah, it's a difficult decision to make, Ms. Orr, but at some point a line in the sand needs to be drawn, and the decision has to be made at some point, and for the people who are making this decision, they felt that at this point they had reached that position.
I see. There's a briefing
Can you
note.
explain to me why you get to a point where you stop considering it and just say enough's enough? Why?
It's a combination of reasons, Commissioner. First of all, there's bank issues in terms of the cost to the bank to carry the loan and the additional capital that we have to set aside in order to support the loan. It's the fact that at some point the bank needs to simply recover the money that's owed to it.
Well, they're commercial considerations which all have a value. Let it be assumed the chopper comes down on the day you state. Bank then has to set about realising. That takes time. Realisation takes money. And then you get a price according to the time at which you sell and the level of interest that is then there. Are those matters that bear upon whether the bank is right to say enough is enough? Or are they simply irrelevant?
So I think that that question, I think the answer to that question today would be yes, I agree that a greater value would be placed on the human and the emotional impact of these decisions.
My questions must have been artlessly framed because I was concerned to focus only on pure commercial matters, leaving aside mere matters of humanity, Mr. Steinberg. Let's just look at dollars and cents. If the bank says stop, enough, we're
Yes.
taking possession today,
Yeah,
which is the consequence of saying enough's enough. Am
Yes.
I right so far?
yes,
Then the bank has to realise. That takes time, yes,
that's right.
takes money,
Yes,
and puts the bank into a market at a particular time.
that's right.
Are those considerations looked at purely in terms of dollars and cents, considerations that bear upon whether the bank should say, today's the day, stop, enough?
I think the one other factor, Commissioner, is certainty, that when the bank enforces, then we know that there's a very high likelihood that the collateral will be sold and the bank's debt will be paid. If, on the other hand,
And the bank's debt will be paid?
well, or it'll be reduced at least.
Just so.
Yes,
And there is a real and radical difference, isn't there, between and the bank's debt will be paid, one outcome,
yes,
and the bank's debt will be reduced, radically separate outcome. And
Yeah.
what I'm inviting attention to
yep,
is whether those are questions that bear upon whether, as I've said, today's the day, we move today.
yeah, and I think using the terminology debt will be reduced is probably the more appropriate terminology, because in most of these cases we are losing money.
Yep.
But as I was saying, what it brings us is the certainty of knowing it's going to happen. If, on the other hand, we extended the facilities to, I think it was a 9-month extension that was being requested in this particular case, then there's always the possibility that we'll get to 9 months, still find ourselves in the same position, and then be in the position that we're making, that you and I were just contemplating, but 9 months down the track. And then, of course, the same question presents itself again. Do you then give another 9 months? And so I'm not sure if that answers your question, but that's the analysis that goes through our mind when we're making these decisions.
Yes.
You've annexed to your statement a briefing note dealing with the decision to decline the Harley's request for an extension. That's Exhibit 45 ANZ 800 644 0707.
What exhibit number was it?
45.
Yes.
You see the first page of that records a history of the matter and the fact that the customers had sought an extension of time until the 31st of December 14, and that request was assessed and declined. And we see references to 2 representatives of the bank there next to that, the second last dot point in the first block.
Yes, I see that.
And over the page at 0708, the reasons for the decision are set out. The customers have already been provided time and opportunity to repay the bank in full. Deed arrangements confirm this. Bank has been entirely clear on what was expected. Sale of the remaining properties will not see the bank cleared in full. Suggestions of refinance to another bank is not yet substantiated and likely to be at least 6 months away. Is regrettable that the customers have been unable or unwilling to complete per the deed requirements. And then we see the proposal, which is that the bank is to appoint an insolvency firm to act on its behalf to take control of the assets and sell in a timely manner. You see that?
Yes, I do.
Now, That was the recommendation. We see that down the bottom. RSM to be appointed as soon as practicable as agent to secure and then sell the property.
Yes,
Was that recommendation approved?
yes it was.
Who approved it?
I was one of the approvers.
It was your decision, wasn't it, Mr. Steinberg?
Yes, it was.
You didn't mention your involvement in this decision in your statement. Was there a reason for that?
Yeah, to be honest, I didn't realise writing the statement. I hadn't recalled that I had made that decision, and then when I was going through documents later on, that became clear to me.
I see. They may include the document that I'm going to ask you to look at, which is ANZ 800 654 0968.
That's not one that I have, is it?
I think it will be in your, what you've been referring to as your tender
okay, I'll look at it.
bundle.
Yeah, then.
Sorry. Now it's an email chain that shows at 0968 that you were sent the briefing note by Mr. Saliba, is it?
Yes, that's right.
On the 22nd of April 2014.
Yes,
And you approved the appointment of the insolvency firm subject to dual approval from Mr. Beggs.
that's correct.
Who gave that approval?
Mr. Beggs did.
Yes, sorry, I mean, who did give that approval, Mr. Beggs?
That's right,
Sorry,
yes.
poorly put question.
Yes,
You told Mr. Beggs here that this was an ex-landmark connection that is an exit, and we have provided more than sufficient time for the borrowers to sell the properties themselves, which they have not done. You see that there?
yes, I do.
Now, do you stand by this decision, Mr. Steinberg?
Yes, I do.
You say this was the right thing for the bank to have done, to have appointed external agents to sell the property in these circumstances?
Yes,
In your statement, you say that in the circumstances of the Harleys' request for an extension, which included the fact that they demonstrated some commitment to and success with sale of assets, and that Mr. Harley had suffered ill health, today ANZ would be more likely to grant the extension or consider some other flexible solutions such as debt restructuring. That's 96. Do you remember saying that?
yes, I do.
So a different decision would be made today.
Yes,
So when I ask you if you stand by this decision, do you mean by that that you stand by it at the time that you made it, but today you would make a different one?
yes.
And what's the decision you would make today?
In the circumstances of the Harleys having sold 5 out of the 9 properties, my decision today would be more likely to extend some additional time.
The Harleys had clearly demonstrated their willingness to sell their properties and their livestock, hadn't they?
Yes, they had.
And they'd had some success in achieving those sales.
They had success over a long period of time, yes.
Well, in the period since they entered into the settlement deed, they had considerable success. They sold a number of properties.
Yes,
And this had all occurred in a period when Mr. Harley was recovering from a heart attack.
yes,
And requiring the Harleys to give ANZ vacant possession of their land was likely to cause distress to the Harleys, wasn't it?
yes,
As was requiring the Harleys to pay the enforcement costs incurred by the agents for the mortgagee in possession.
yes. To be clear, those costs would have been paid out of the proceeds from the sale of the property, but I understand that ultimately they are borne by the customers.
Yes.
Yes.
And that would have caused them distress, wouldn't it?
Yes.
And it would have caused them distress that you were moving to obtain judgment against them in the legal proceedings in the sum of $2.579 million plus interest.
Yes, that would.
So was there any reason for ANZ to think that agents for a mortgagee in possession could achieve a better price for the sale of the remaining parcels of land than the Harleys could?
What we were looking for, Ms. Orr, at this point in time was to bring this matter to a conclusion and certainty. They were drivers behind this particular decision, and as I've said before, this matter had been going on since 2010 and before, and a point had to come where this decision was made, and with the certainty being needed, that's when that decision was made.
Well, I don't think that's answered my question. My question was there any reason for ANZ to think that agents for a mortgagee in possession could get a better price for the sale of the remaining parcels than the Harleys could have?
So perhaps the answer to that is I don't know, but I guess another part of the answer to that is that at that point the Harleys hadn't sold those remaining properties.
No?
So in that respect, what the mortgagee in possession would achieve for us would be to actually get those properties sold.
But the Harleys were only asking for a matter of months to try and sell them themselves, weren't they?
Yes, but we had already given them a number of years to achieve this.
I see. Well, in the circumstances I've just outlined to you about you accepted that they were willing to sell the properties, they'd had some success, that Mr. Harley was recovering from his heart attack. Do you accept that the community would expect ANZ to have explored alternatives to enforcement action at this point?
So my response to that is that I believe we have met community standards and expectations in the manner in which we've managed this file.
Did you ask the Harleys to engage in a mediation?
No?
Did you explore alternatives to enforcement action before this decision was made in April 2014?
Yes, I believe we did.
What alternatives do you believe you explored?
Well, during the course of the management of this file, Mr. Davis provided a number of extensions to the facilities. There is a record on his credit memorandums of him specifically considering alternatives like enforcement or extensions, but instead, at the earlier part of this file, deciding to go for extension of facilities. There is aspects where, or times when the Harleys weren't able to pay their interest, and Mr. Davis provided them with some forbearance to cover that. There was a period where the Harleys weren't able to meet the payment for a particular vehicle, and so I've actually now forgotten what your question was, but
About exploring alternatives
that's
to
right.
enforcement action.
So I think, Ms. Orr, that alternatives were explored to enforcement action, and the enforcement action came after a number of years of trying to get the debt repaid.
Why not have a mediation?
Well, this is in Western Australia, where there is no mandatory mediation, but today we would have a mediation.
And at that time there was voluntary mediation in Western Australia, wasn't there?
Yes, there was.
You could have had a farm debt mediation with
Yes,
the Harleys, but
we could have had,
you
yes.
chose not to consider that.
Yes, and I expect part of the reason for that was that Mr. Davis was engaging with the Harleys' lawyers, and the deed was negotiated and prepared, but I accept today we would have a farm debt mediation.
Yes, Commissioner, I attended that email chain.
Emails between Steinberg, Saliba and others, 23 April 14, ANZ 800 654 0968, Exhibit 4.21.
And in August 2014, the agents sold the remaining 4 parcels of land, didn't they?
Yes, they did.
And that included the parcel on which the Harleys' home was located.
That's correct.
Now, before I come to deal with that, I just want to ask you a little bit more about enforcement action, because you told us in the statement that I attended earlier, and you may have heard me say in the opening statement, that the evidence is that since 2015, ANZ's taken enforcement action in 30 cases involving agricultural customers. That's
Yes.
at paragraph 38 of that statement.
Yep.
And you'll see there that you refer to there being 11 instances of enforcement action in 2015 and 12 in 2016.
That's right.
Then 4 in 2017 and 3 in 2018.
That's right.
And you tell us in your statement that ANZ doesn't have any reliable historical data in relation to the number of enforcement actions taken before 2015.
That's right.
But you were working in lending services at ANZ before 2015,
Yes.
and you were involved in making decisions about enforcement action at that time.
Yes.
And is it likely that there would have been more enforcement action taken before 2015 compared to the years that you've told us about in your statement?
So if I could refer maybe to some submissions that we made to the parliamentary inquiry that might help me answer that question. In March 2015, we, in preparation for appearance at the parliamentary inquiry, prepared some data on...
I think I was waiting for your lawyers to interject, but I may do it instead to protect you, Mr. Steinberg. I don't think it's wise for you to refer to submissions that you made to
Parliamentary
a parliamentary
privilege
inquiry
intrudes, Mr.
because of
Steinberg.
parliamentary privilege.
Okay. So your question is, would there have been more enforcements?
Yes, I'm asking you based on your experience in lending
Yes.
services before 2015, and if you could perhaps refer to this without thinking about what you told
Yeah.
a parliamentary inquiry.
I would say there would have been more enforcements on an
Thank
annual
you.
basis.
Thank you. And what led to the drop in enforcement action then in 2016 and 2017?
So there's a couple of matters that have contributed. The first is the establishment of the specialist agri team in lending services, and the second would be the bringing in of our lending services purpose, which changes the way in which we manage these accounts.
And what's different about the way that members of that specialist team that you've referred to make the decision to use enforcement action compared to how lending services used to deal with the situation before that team existed?
Again, there's a couple of things there. The first is that those people in the agri team have got, in many cases, agricultural experience and have either worked or lived on the land before, so have got the a better connection with our customers. Can you again remind me of the question, Ms. Orr?
What's different about how they make the decision to engage in enforcement action to the way it used to be?
Yeah, so that's the first reason. The second reason is, you know, we've brought a lot more, you know, empathy in the way that we look at these, and finally the lending services purpose, which is, you know, a big change to the way we interact, behave on a daily basis.
And in what circumstances now does ANZ appoint receivers?
It's difficult to sort of prescribe. There's no prescribed events that lead to it. It's all based on the individual circumstances. but in many of the cases where we enforce today, we have a consensual arrangement with our customer to do that. In some cases, we have an invitation, a written invitation from our customer to enforce such invitation given after our customer has received accounting, financial and legal advice.
About the circumstances where you don't have an invitation from the customer, when then do you appoint receivers?
So there might be instances where there's been an insolvency, so a liquidation of a company or the bankruptcy of an individual. Outside of that, at the moment, it's fairly rare.
Fairly rare, did
That's
you
right.
say?
Well, if you have a look at 2017, we've only had 4 enforcements. In 2018, so far 3. So the number of these occurring is rare.
And have the circumstances in which ANZ proceeds to appoint a receiver changed since 2010 when ANZ took over the landmark loan book?
Yes, it has.
How?
So in 2015, I believe, we established, if I could just call it a panel,
Yes.
a service provider panel,
Yes.
where all of our insolvency providers have signed up to a consistent set of terms and conditions. Part of our dealings with them now is that we expect that they, in the conduct of their duties, do so with ANZ's values as part of the feeder into their decision-making process.
This is a panel of who, I'm sorry?
The panel of insolvency providers.
So you have a panel, but you talk to them about ANZ's values and you require those values to inform the way they conduct their work?
Well, to the extent that it doesn't impinge on their statutory
Yes.
duties.
Yes. And do you know how many of the 30 cases of enforcement action that you've referred to in your statement involved the appointment of a receiver?
No, I don't. Not as I sit here, I don't know. I mean, intuitively, I think a larger number of them are MIPs, mortgagees in possession, but there would be amongst those some receivers, and some of those receivers will either be receivers and managers over corporate entities, and some of those might be receivers over freehold land under a property instrument as opposed to a mortgage debenture.
You heard the evidence of Mr. Wheatcroft from the Rural Financial Counselling Service yesterday?
I was in the room, yes, when...
Yes. And do you recall his evidence that where receivers are appointed in cases involving agribusiness lending, in his words, it never benefits the client and almost never benefits the bank? Did you hear that evidence?
Yes, I did.
And what's your response to that evidence, Mr. Steinberg?
I don't agree with it. The reason that the bank makes that decision is because it's reached a point where it feels that that decision will benefit it in a way, depending on the individual circumstances. I think the other factor to take into account, Ms. Orr, is that in my experience, I've had and become aware of situations where receivers are appointed to a particular enterprise, and the people in the community respond to that in a favourable way, in the sense that we've had feedback before from suppliers to those particular enterprises, and those suppliers are giving us feedback that once the receiver's in there, they are getting paid for the product or the services that they are delivering. So I'll just make that as an additional observation.
Did you hear Mr. Week?
Just a moment, is that an observation that you've ever encountered in relation to an agri-business, as distinct from a non-agri-business?
Yes.
What was that case?
Look, it doesn't come to mind now, Commissioner. It's feedback that I'm getting from my staff members.
If we look more generally at external administrators, including in those agents for mortgagee and possession, receivers and managers, liquidators, administrators under deeds of company arrangement, I'm sure there are other species, but those 4 species of external administrator. Across the whole range of businesses with which lending services deals, how often have you encountered a case where an external administrator has conducted the affairs to a point where the bank has been repaid in full?
It's a question that I haven't come here prepared to
Understand
answer.
that. The premise for my question, and you should challenge the premise, is that I think you might count them on the fingers of one hand, the cases where an external administrator has gone in and the bank has been paid in full by that external administrator before the administrator's withdrawn.
Yeah, so I agree with that. I wouldn't challenge that suggestion.
And that, if that is the circumstance where the bank is not paid, it is inevitable that the customer will suffer loss. Would you accept that? In isolation, I do, Commissioner, and the only reason I say that is that currently in our practice, where we have arrangements with our customers who either voluntarily surrender property or invite us to a point, we sometimes, in some circumstances, will provide them with something to move on with their lives with. So there will be something there that makes it a little bit different to how it would have been done before. But external administrators, if appointed, are appointed in circumstances where a consideration will be stopping greater loss rather than avoiding loss. Do you accept that?
Yes.
Now, apply it to this case. An external administrator was appointed, agent of mortgagee in possession, is that right?
That's right.
Realised the properties in August
Yes.
at one set of auctions?
I believe so, yes.
And what had the customer wanted to do about selling?
So the customer was seeking a 9-month extension.
Try to sell in spring, that right?
Yes.
Before the heat hit.
Yes.
So we're talking a couple of months. Are we? Or am I miscounting?
No, I think that's right, Commissioner, but the only piece that I'd add into that is that we continue to have the uncertainty in that particular scenario, that we might wait the 9 months, then find it doesn't happen, and then find ourselves at the start of the process again.
Yes.
Commissioner, I see the time. Despite my best endeavours, I won't be able to complete Mr.
Despite my
Steinberg,
interruptions,
so-
is what you're saying.
No.
Ms. Orr, should be. What's the likely time? I mean, Mr. Steinberg needs to stop now. He's had a
Yes.
long afternoon too.
Yes.
But what's your estimate of time?
I think I've got about another hour, Commissioner.
Right. Okay, well, is
Commissioner, if it's any
9:45
help, I'm happy to keep going if that's of any help. Otherwise, I'll leave it in your hands, but I'll just throw it in there.
I was transferring you to the blame for the fact that I'm starting to wilt, Mr. Steinberg. Don't deprive me of my excuse. But if we start at 9:45 or 9:30, do you think?
I think we can start at 9:45, Commissioner.
All right, 9:45 it is.
Thank you, Commissioner.
Royal Commission stands adjourned until 9:45. The Royal Commission is now in session. Please be seated.
Yes, Ms. Orr.
Mr. Steinberg, yesterday afternoon I was asking you questions in relation to the Harleys,
Yes.
who you dealt with in Annexure D to your statement, and we had seen that in April 2014,
Yes.
ANZ had refused the Harleys' request for additional time to sell their properties.
Yes.
And we had discussed how ANZ had appointed agents for a mortgagee in possession instead.
Yes.
And you said yesterday that you didn't know if there was any reason for ANZ to think that agents for a mortgagee in possession would achieve a better price for the sale of the remaining parcels of land than the Harleys could.
Yes.
And you said that what the mortgagee in possession would achieve for ANZ was to actually get the properties sold. Do you recall that?
Yes. Although my recollection is that that was a discussion I had with the Commissioner.
Yes.
And it was as I saw it, a general discussion.
Yes.
Yes.
But was it also applicable there? The agent for the mortgagee in possession would get these properties sold.
Yes.
And it would bring certainty, you said?
Yes.
And it would allow you to close the Harleys file or transfer the file out of lending services.
Yes.
Now, as we've heard, you've been the head of lending services, corporate and commercial, since 2013.
Yes.
And what do you think are the qualities of an effective member of the lending services team?
So I believe emotional intelligence. I believe empathy. I believe some commercial and technical skills. I think there's four.
Therefore, that
Yes.
you say are qualities of an effective member of the lending services team?
That's right.
And are those qualities reflected in the KPIs, the key performance indicators for staff in lending services?
So I'll just run through what some of our indicators for assessing performance are.
Yes.
There's performance metrics around us being well managed. So well managed relates to how well we look after the I guess the prudential and customer engagement part of the work we do. We have some financial metrics which are around the number of files that we manage and how efficiently we manage those files. We have people measuring skills, which deals with how we lead our people, how our people conduct themselves. So my response would be that in the way we assess our people, things such as the lending services purpose and the the matters that I've spoken about in the last 2 days, like empathy, are taken into account, as well as other metrics like the well-managed and the financial.
So you say the people skills KPI is a measure of matters such as emotional intelligence and empathy?
I can't recall exactly in our document what's under the people skill category. I can't recall seeing those particular words there that you're putting to me, but I would suggest that as a person who does some of these, that I do take that into account when I'm assessing my people, and certainly when we're assessing the performance of our broader team people. We have group discussions at a senior leadership level where the behaviours of our staff and the way that they conduct themselves are discussed and taken into account.
What about the financial metrics? You talked about the number of files and how efficiently you deal with the files. What do you mean by that? What is efficiency in lending services?
It's actually not defined, so there's no way that we can define financial metrics in an area like lending services. We don't have any financial targets, so we don't have any sales targets. We don't have any targets, for example, for the number of refinances that we should achieve or for the number of file closures. So we actually don't have any measurable financial targets in lending services.
So what happens with that KPI then, the financial metrics KPI? How is performance measured against it?
Well, it's not a big factor in the way that performance is assessed, because financial performance is actually not there's no budget or KPI that we can set ourselves. For example, you can't estimate or budget what a particular relationship manager's provisioning levels, for example, should be over a period of time. It's not something that we can budget or forecast, and therefore we don't set KPIs around it.
So at any time since you've been the head of lending services, since
Yes.
2013, has one of the measures of performance for a member of the lending services team been the number of files closed or transferred out of lending services?
No, it hasn't been. We certainly keep track of that particular metric at a business level. So in terms of my entire portfolio, I do keep metrics in relation to the number of files that come in month by month, the number of files that go out month by month, and then for the files that go out month by month, the event that causes them to go out. So, for example, it could be a refinance, it could be the fact that a customer's just paid their exposure down. So we record that, and then on both sides of that, I have the opening number of files, the ups and the downs, and then the closing number of files. So I report that to my stakeholders on a monthly basis.
And why is that reported to your stakeholders?
It's so that they know what the activity levels are in lending services. So predominantly those files that are coming in and going out are files that have come from their business units. And so it gives those stakeholders an opportunity to understand what number of their files are coming into lending services and the ones that are going back. And they tend to have a particular interest in the ones that are coming back to them, because they've got a strong desire to want to get the files that come into lending services, they've got a strong desire to want to get them back so that they can keep them as ongoing customers.
All right. Could I ask you to look at a document, Mr. Steinberg, which you won't have there with you, but it will be brought up on the screen. It's ANZ 800 766 2348. And I'm sorry, this document has quite significant redactions in it, but I want to show you, what I mean by that is it's a multi-page document and there are pages within it with significant redactions. Can I show you the first page so you understand what the document is? ANZ 800... You don't have the first page?
It's a collection of documents.
It seems it will be redacted, the first page.
Pretty confidential title to the document, is it?
It seems. Perhaps if your counsel could pass you a copy of the document so you're able to see what it is, because
Would we
unfortunately...
be let into the secret?
What is the first page?
Thank you.
We have one for you
Now-
too, Commissioner.
Let's have it.
So,
I'm happy to be let into the secret, but I think there are others present as well. Is there
Could-
anything
could we-
secret about the title of this document?
no.
No.
Could we bring up the title to the relevant... What I want to put to you is the relevant part of the document, which is ANZ 800 766 2376. This forms part of a larger document, but what I want to take you to is the strategic plan for lending services for the year ending September 2015. Do you see that, Mr. Steinberg?
Yes, I do.
So this would have been not long after the agents for a mortgagee in possession were appointed in relation to the Harleys property in April or May 2014.
Yes.
And could I ask you to look at 2377? And we see there on the second bullet point of the page the 4 pillars that define our strategy in lending services, corporate and commercial. Do you see that?
Yes, I do.
And they are being a trusted advisor, revenue, cost, capital,
Yes.
people,
Yes.
and well managed.
That's right.
Now, do they remain the 4 pillars that define the strategy in lending services, corporate and commercial?
No, they don't.
What are the current pillars that define the strategy of lending services, corporate and commercial?
So number 1 is customer. Number 2 is people and well managed, and then number 3 is well managed. And Ms. Orr, I'm going to embarrass myself because I can't quite remember the 4th, even though I do talk about it quite a lot in my role. So there is a 4th.
Perhaps it will come to you, Mr. Steinberg, and you'll
Yes.
let me know if it does.
Yeah.
Now, at this time, in 2015, these were the 4 pillars, and this was the time relevant to the Harleys.
Yes.
And each of these 4 pillars is explained in more detail on subsequent pages of this document. You'll be able to see that from your copy there. And can I take you to the explanation of the second pillar, revenue, cost, capital,
Yes.
which is at 2380. Do you see at the top of the page, how do we get there?
Yes.
Then capital,
Yes.
and under that, target 18 to 24 months for file churn for non-agri files and 24 to 30 months for agri files.
Yes.
What does that mean, Mr. Steinberg?
So what that means is that at that time we had, I wouldn't call it a performance measure, but we had a guide that we should be aiming to look at moving our files in and out of lending services in the case of a non-agri file in 18 to 24 months, and in the case of a agri file in 24 to 30 months. So what that would encourage was that where we had implemented a remedial strategy for a customer, the philosophy, if you like, was after 12 months, that if it appeared that that remedial strategy was not working, that we would then reset the strategy and try and find a new strategy, again with the aim making sure that we were having a churn. So, as I was saying before, we have our ups and our downs every month.
But you accept that in 2015 your lending services staff were told that they should be aiming to move the agricultural files out of lending services to have them resolved in some way within 24 to 30 months.
Yes, I agree, but this was as much as remediating these files and getting them back to the front line as it was about doing anything else with them. So this...
Well, it was about getting them out of lending services, one way or the other, wasn't it?
Well, I wouldn't put it that way because there was no KPI around it. We actually didn't, if you like, sit down with each relationship manager every half when we did their performance reviews, and we didn't actually have a quantifiable discussion around this. So it was there as a guide to let our people know, philosophically speaking, how long a remediation strategy for a particular customer should take. That was, as I delivered it to my people, that's how it was.
It was an expectation of them that they would get the file out within 24 to 30 months.
I think putting the word expectation is would be overstating it. It was a guide.
Well, it's here in the document, Mr. Steinberg. It's what they were told to do, isn't it?
No, look, I would not say that there was ever any communication of the message by me as the leader of the business that there was a hardcore requirement or a drop-dead requirement to churn files in a 24 to 30 month period. I would describe it as a guide to our people to let them know, philosophically speaking, how long a restructure ought to take.
Well, let's look at the guidance offered by you as the leader of lending services at this time, Mr. Steinberg, because this document contains a document produced by you. If we turn to 2384 within the document, we see Australia Risk Function Lending Services 2015 Strategic Direction, Ben Steinberg, November 2014.
Yes, I see that.
So you're the author of this document?
Yes, I am.
And if we turn to 2388, we see there the third bullet point on that page for FY 2015 priorities, Lending Services Australia Risk. The third bullet point on that page that you've written is look to improve churn in the portfolio, which in turn reduces RWA. What's RWA?
That's risk-weighted assets.
Which in turn reduces risk-weighted assets and hence capital usage or cost. Aim for 18 to 24 months for non-agri files and 24 to 30 months for agri files.
Yes, that's right.
So this was your direction to your staff, Mr. Steinberg?
Well, this is a document that I prepared for actually presentation to the Chief Risk Officer of the Australia Division. It's not a document that I presented to my staff. Having said that, I agree with what that bullet point says, that we were looking to improve the churn in the portfolio, and we were aiming for those guidelines that I've outlined before.
So that was what you wanted your staff to do?
As I said earlier, this was a guide for our staff so that they would have an understanding philosophically as to how long a restructure should be. And it was as much about getting our files upgraded and returned to the front line. So to bring a little bit of understanding to risk-weighted assets. One of the drivers of our risk-weighted assets in the bank is our CCR and security indicator. So the sooner we can upgrade our files to higher security indicators and higher risk grades, the better the improvement on our risk-weighted assets. So this is as much as doing that as it is about doing anything else.
Well, the Harley's file was transferred into lending services in July 2011.
That's right.
And the agents for mortgagee in possession were appointed in April 2014.
That's right.
So just over 30 months
That's correct.
after the file had come into lending services,
Yes, that's correct.
in line with these targets.
Ms. Ora, I would suggest that that's coincidental.
It's coincidental, Mr. Steinberg.
Yes, it is.
What makes you say it's coincidental?
Well, because none of our strategies are hardcore guided by what I'm reading in front of me. So, as I said, and as you said, I am the person who has run this business. So I know what I've written here, and I know how I've directed my staff, and I'm very confident in the answers that I've given you at the moment.
So it's a coincidence that it happened to be in line with the outer part of the timeline referred to in these documents. The decision was finally made to engage mortgagees in possession to sell the properties.
Yes, that's right.
I see. Mr. Steinberg, what is the objective of dealing with a file in lending services?
So the main objective is to help our customers get back on track. I mean, when you have a look at what we do, we manage the bank's high-risk customers. We have a purpose that I've spoken about. Our job is to develop a strategy for each particular file on a case-by-case basis, designed to get the best outcome that we can get for both ourselves and for our customer. And I think the case studies have been fairly consistent in outlining what we do. We go out, we generally meet our customers, we put together a strategy, we prepare a document that outlines the strategy, we negotiate arrangements with our customers, and then we monitor the execution of those strategies. So that's how broadly I would describe what we do.
Is one of the objectives to maximise the amount of money realised by sale of assets?
Well, we don't have a measure around that, but I think we are clearly trying to achieve the best result for both the bank and the customer. So we want to lose as little money as we possibly can in circumstances that are often very, very difficult matters to manage.
Well, what's more important, losing as little money as you can or achieving certainty for the bank?
Look, I mean, I think both of those variables are important, and sometimes, it's a matter of balancing the two between each other. I don't think there's any one particular answer that you could apply across the board, but I think they are two variables that play into our decision making.
And are there times when the objective of maximising the amount of realisable value is inconsistent with the objective of achieving certainty?
As I think about that question, there's a little bit of complexity to that question, because when part of this analysis is brings in concepts like net realisable value, for example. So there are cases, and I'm being general in the comment that I'm making, but there are cases where we need to assess the net realisable value of the actions we are undertaking in terms of the return that it provides for the bank. So that is not a simple concept. So it's not just a matter of comparing one number with another number. A number today could have different value to the same number in 12 months' time, for example. So,
Do you accept that the appointment of an external administrator, such as a receiver, might get you certainty but might not get you the maximum realisable value for the property?
I mean, my reaction to that question is that I rely on and trust the legal framework around the work that we do, Ms. Orr. And so when I appoint a receiver and manager or a mortgagee in possession, in the background when I do that with the comfort of knowing that they have statutory obligations to realise the best price possible. I think that that's a fair comfort for me to draw, that there is statute that ensures that when we take those actions, the best prices are realised that are possible in the circumstances.
Well, there's a timing question in that, isn't there? You appoint a receiver will move to sale promptly. Do you accept that?
Generally speaking, Commissioner, there are times when a receiver will, if it looks like it'll add value, might do some work to improve a property, but generally I agree with that, yes.
Circumstances in which the receiver, who is appointed receiver and manager, manages the business as a going concern is, comparatively speaking, infrequent. Is that right?
In the agri space, it would be, yes.
So if you appoint a receiver, it is likely that the receiver will move to sale promptly. Is that right?
I would actually hope that any receiver we appoint doesn't approach it that way. What I would expect from a receiver that we appoint is that at that point in time they will do an analysis of what will achieve the best outcome in those particular circumstances. And if the receiver believes that the best outcome would be to hold back a sale and do something, whatever that might be, whether it's clean the property, whether it's kill the weeds on the property, whether it's planting a crop or developing it, I would expect a receiver to come back to us with a strategy around what the best method of realisation for that property is.
I'm struck by the fact that in the case study we have last looked at, the agent for the mortgagee in possession goes to auction in August. The customers wanted to attempt to sell in spring. So we've got a couple of months between them. And the appointment of the agent, the mortgagee in possession, cost, I think, $44,000 plus GST in that case, did it not?
Yes.
So you've got the costs, and that agent goes to auction in August, where the customer had sold, what was it, 4 out of 9, 5 out of 9?
It sold 5
out
of 9, that's right.
Thought that they would do better for the remaining 4 in spring before the weather got hot. Is that right?
Yes.
Now, as I say, appointment of a receiver has timing consequences, doesn't it?
Can you explain exactly what you mean by that, Commissioner?
They're the agent, not a receiver, I understand, but the appointment of an external administrator led to sale in August, whereas the customer was looking to sell presumably September, October.
Yes, so I accept that there was only a 2-month period, is what you're suggesting, between when the receiver sold it for us and when the customer might have sold it for us.
Yes.
Yes.
Just while I've interrupted you, Ms. Orr, I notice on the page we have on the screen, the right-hand column, CRO priority, the third bullet point about churn has against it 1. Do I read that correctly as understanding that the Chief Risk Officer regarded this as a matter of high priority?
I think that's a fair assumption for you to make, Commissioner, but again, if I can just balance that, this particular page is the page that deals with, I guess, the financial side of our metrics. There are others, and when you look at the other metrics on that particular page, look for any revenue generating opportunities, which we've allocated a 3, manage our cost to serve within budget. That number 1 is a relative, it's a relative measure against the others that are on that page.
But of those on that page, whole of bank approach was that this was to be given high priority. Is that a fair understanding?
Yes, in terms of churning my entire portfolio through all of the different avenues that are available to me to achieve that churn.
Because carrying the provision as distinct from writing off the loss has a cost to it.
Commissioner, it's more carrying the loan. So once a loan gets downgraded to a 7, then APRA's prudential regulations require that we hold additional capital. That capital comes to the bank at a cost. That's one of the reasons why in our area there has been a tendency to lift pricing at that stage of the credit cycle, if I could describe it that way.
Commissioner, I attend to that document. The document as a whole is the Group Wholesale Portfolio Management 2015 strategy.
Exhibit 4.22 will be Group Wholesale Portfolio Management Strategy 2015, ANZ 800 766 2348.
Now, I just want to take you back to the Harleys now, Mr. Steinberg. You agreed yesterday that the remaining 4 parcels were sold in August 2014, including the parcel on which the Harleys lived.
Yes.
And they were sold, 3 of them, for a combined total of $780,000.
Yes, that sounds right.
And the 4th parcel was sold for $250,000.
Yes.
And the proceeds of those sales were used to pay down the debt.
That's right.
Now, could I ask that you look at your Exhibit 46, which is ANZ 800 644 0097. Now, this is a letter that we looked at for a different purpose yesterday. This is a letter that ANZ's lawyers sent to the Harleys lawyers in November 2014, after the sale of these properties in August. Is that right?
Yes, that's right.
And the letter said that the Harleys remained indebted to ANZ in the sum of $309,404.
That's right.
And the letter told the Harleys that if they hadn't paid that amount by the 4th of December, which is 8-ish days later, then ANZ might commence bankruptcy proceedings against the Harleys.
Yes.
So, just to recap, ANZ had required the Harleys to sell all of their properties,
Yes.
including their home,
Yes.
and their sheep.
Yes.
And when they didn't sell the properties fast enough, it sold the properties itself as mortgagee in possession.
Yes.
And when that didn't raise enough to pay off the debt, ANZ threatened the Harleys with a bankruptcy proceeding.
Yes, well, what we said was that we may commence bankruptcy proceedings. That's
Yes.
right.
Well, that's a threat of a bankruptcy proceeding, isn't it, Mr. Steinberg?
Well, I just tend to read things exactly as they are, and what we've said there is we've said we may commence. Again, I can see how you would interpret that as being a threat.
If by 4
But it definitely
p.m.
says that. I
If
agree
by
with you.
4 p.m. on Thursday, 4 December 2014, your clients have not repaid the amount owing or reached an agreement with ANZ for the repayment of the amount owing, then ANZ may commence bankruptcy proceedings against the individuals and or apply to wind up the company.
Yes, that's right.
Right. So if the Harleys had sold their house and their farming business, how did ANZ expect them to discharge the remaining debt?
Well, at this point we don't know. So we've also asked them to contact the writer to discuss the above and to discuss any options.
How much did ANZ charge the Harleys for enforcement costs?
I'll need to refer to my statement if I can.
You might like to look at paragraph 63 to see how much you charge them for enforcement costs relating to the appointment of agents for the mortgagee in possession.
Is it 63 or is it 56?
Well, you charged them almost $60,000 on my count.
The agent's costs were 59,000. Yes, correct.
$59,115.
Yes.
And that included the cost of further valuations that were prepared in May 2014 after the appointment of the agents.
Yes.
Now, you've set out in your statements the results of the different valuations of the various parcels that made up the property in the table at paragraph 64.
Yes, I have that as paragraph 60. That the first column is volume 1293, folio 324.
Yes, you have another table at paragraph 64, which is the table I'm referring to.
Oh, okay.
Some of the information in those tables may be the same,
Yep.
but I think this table includes both the earlier valuations and the valuations that were done after the appointment of the agents.
Okay. Yes.
So you have that table there now in paragraph 64.
Yes, I do.
And did the Harleys have any say in who ANZ would appoint to conduct those valuations?
Not to my knowledge.
And should they have?
Certainly under today's policy, they would.
Okay. Now, can we just look at the table, which we have up now, and perhaps if we could have both this page and the subsequent page of the statement on the screen together. We can see from your table that with two exceptions, all of the parcels of land were valued by LMW Hegney in June 2013. And it might assist if I point out the exceptions, which are the first parcel in the table. That's the one that was subdivided in February 2013.
Are you looking on the right-hand side or the left-hand side of this page?
On the left-hand side.
And you're looking at May 2013?
Yes, so that one wasn't valued by LMW Hegney in June 2013. Do you see that? Only in 2012.
Are you talking about the one that was valued by Optium that wasn't valued?
No, I'm asking you to focus on the dates as well. So the first parcel, we know that's the one that was subdivided in February 2013, and it wasn't valued by LMW Hegney in June 2013. Do you agree with that?
Sorry, Ms. Orban, I can't answer your question because I'm not following. There are two dates. There's a valuation date and
Yes.
there's a date of issue of report date.
Yes.
Which,
And you see that they're both dates in 2012, not 2013.
so that's across the volume 1047427. Is that the...
2688172.
I'm not sure where you are, Mr. Steinberg. I'm talking about volume 2688, folio 172. On page 16. Do you see the coloured mark now next to that?
Oh, yes. The value of 1,800,000.
Yes. So do you see there that that wasn't valued by LMW Hegney in 2013? It's valued in 2012. Do you see that?
I can see that by LMW Hegney.
That's right.
Yes.
And then there's one other that's also not valued by LMW Hegney in 2013. That's the second last parcel in the table on the right-hand side.
The
That's-
one valued by Optian for 280,000.
Yes, for 200.
1293.
It's 1293. It was valued in 2012 because it was sold by the time of June 2013. It was sold by the Harleys in July 2012.
Okay, the dot on my screen came up at volume 1293, volume 324.
Yes.
10th of February.
No 2013 valuation for that one. Do you agree?
Yes, I do agree.
Okay. Now, 4 of the parcels of land were valued by Optian. Do you see that? 1 on the first page, 3 on the second page.
One on the first page by Optian, yes, and one, yes, I can...
So they're all valued in May 2014, after the agents are appointed.
Yes,
So they're the 4 parcels of land that were sold by the agent for ANZ as the mortgagee in possession.
yes, looks like that.
And in
Yes.
each case, each of those 4 cases,
Yes,
we can see that the value of the property reduced significantly between the June 2013 valuation
Right.
and the May 2014 valuation. Do you
Yes.
see that?
well, I can't see it, but I'll accept what you're saying.
Why can't you see that?
Well, I'm going to have to identify each one of those properties. Oh, yes, okay, yes, I can see that
Well,
one.
let's go through them.
Yeah.
For folio 2808, I'm sorry, volume 2808, folio 934, it went from $425,000 down to $280,000.
Yes, I see that.
And do you know how much the agent sold that property for?
Not off the top of my head, I don't know.
Well, your statement tells us it was $250,000.
Yes,
So that's $175,000 less than the June 2013 valuation.
yes,
And for folio 1047, folio 427 on the second page,
yes,
it went from being $350,000 in 2013 down to $270,000 in the agent's valuation. And for folio 1063, folio 994, it went down from 575 to 340. And for volume 1245, folio 40, it went from 250,000 down to 190,000.
yes,
So that's a combined total valuation of $1.175 million under the June 2013 valuation
yes,
and $800,000 under the May 2014 valuation. and ANZ's agent sold those 3 parcels for $780,000. So almost $400,000 less than the June 2013 valuations. Do you accept that?
Yes, based on
Let's go
what you're
back a
taking me
bit.
through. I do.
Or you said sold those 3 parcels, sold those 4 parcels or 3?
No, that there were 3 parcels sold for 780 and a 4th parcel for 250. That was the one that had gone from 425 down to 280.
Yes.
So therefore, Ms. Orr, should the 800 that you mentioned be $1,030,000? Have I understood that correctly? Because the 800 is the 3 properties, and then you've added the 4th, which is the 250. So that takes us to $1,030,000 for the 4.
For the valuations in 2000.
No, for the actual sale price.
The actual sale price was 780 plus 250.
Yes. So I've got that as $1,030,000.
1030.
Yes. Yes.
$400,000 less for the 3 parcels than the June 2013 valuation, and for the 4th parcel, 175,000 less.
Yes.
You accept that?
Yes.
All right. Now, can I take you to one of your exhibits, Exhibit 47, which is ANZ 800 644 0125. This is a letter dated the 23rd of December 2014 from the Harleys' lawyers to ANZ's lawyers. And in that letter, the Harleys' lawyers did a comparison of the different valuations in 2013 with the sale price. Do you see that?
Yes, I do.
And over the page, if we could have both pages on the screen at once, 0126, we see that they set out the discounts at which the various parcels of land had been sold.
Yes, I see that.
And under the tables, the lawyers said to ANZ, in our view, the sales achieved by our clients do not justify the significantly discounted sale prices compared to valuation achieved by your client. We further note that before your client took possession of the lots which were sold by it, we did request on behalf of our clients an extension of time to the 31st of December 2014 so that our clients could facilitate a timely sale of the properties themselves, which request your client declined. Further, as we stated in my email, the lots which our clients had sold included the lots which they considered to be the most difficult to sell. According to your letter dated 26 November, as at 17 November, my clients remained indebted to your client in the sum of $309,404. Lots 11, 2895, 2914 and 4414 sold by your client sold at a combined discount to valuation of $570,000. Even after allowing for a more reasonable discount from valuation, consistent with the discount evident according to the lot sales achieved by our clients, there should have been a surplus remaining after payment of all debt owed by our clients to your client, which our clients attribute to a failure by your client to act reasonably and in a manner consistent with your client's obligations as mortgagee in possession. You see that?
Yes, I do.
All right. Now, the letter was concluded by a proposal from the Harleys' lawyers that they enter into a deed with ANZ releasing each other from all claims and liabilities and discharging all remaining securities. You see that?
Yes, I do. And
ANZ responded to this letter, and the response is your Exhibit 48, ANZ 800 644 0093. That response was dated the 10th of February 2015, and ANZ told the Harleys that it disputed the allegations, it did not intend to engage in litigation by correspondence, and it rejected the Harleys' proposal.
Yes.
So again, at this point, the Harleys have been required to sell all of their properties, including their home, during a time when Mr. Harley was recovering from serious health issues. ANZ had charged them the costs of appointing an agent to sell the remaining properties as mortgagee in possession, left them without their farming business, which was their method of generating income, and had sold the last 4 of their properties at prices significantly lower than their values in June 2013. You accept all of those points?
Yes, I do. Again, as I did yesterday, in the context, Ms. Orr, of us having given the Hardys a number of years to get to that particular point, but I otherwise accept that chronology that you've put. Well,
in the circumstances of the chronology I've just put to you, do you accept that the community would have expected ANZ to accept an offer of the kind that was proposed by the Harleys?
Again, Ms. Orr, I've got to bring it back to the submissions we made in January around how we have assessed community standards and expectations. And what rings out for me is that we have said there that we feel that we have to do what we say we will do, and in this particular case, that's happened. I agree the story is a sad one, but nonetheless, what we were doing here is pursuing our contractual rights to get paid. Managing money that belongs to our depositors, and whilst it's a very sad list of events to read out and to listen to, I think the community would expect us to do whatever we can to recover the money that's owed.
Is that right? That's what you think the community would expect in this situation?
I think the community expects us to do what we say we're going to do, and we've been consistent in our dealings with the Harleys over a 3-year period. And so where I've landed on this one is that we have conducted ourselves in accordance with community standards.
Well, I want to put to you squarely that this was a breach of ANZ's obligation under Clause 2.2 of the Code of Banking Practice to act fairly and reasonably towards the Harleys in a consistent and ethical manner.
No, I don't agree with that.
You don't agree with that?
No.
All right. Now, this was 2015, this letter we've just looked at.
Yes.
I want to take you to 2017.
Before you do that, Ms. Orr, can I go back to the previous letter, the letter from
Yes.
the Harley solicitors and the table that is there?
ANZ 800 644 0125 and 26.
On page 2 of that letter, Mr. Steinberg, you see the solicitors say that realisation of the 4 lots, so this is the second table on page 2, realisation of the 4 lots was for prices representing a discount to valuation of at least 1/3. Do I read that correctly in your view?
I think you read the letter correctly, Commissioner. I haven't done the maths to check that, but that's what it's saying, yes.
I haven't done the maths either. Let's trust the author with the maths, which
Yes.
may or may not be right. But my question is, are you surprised that an external administrator, whether agent for mortgagee in possession or receiver, should achieve on realisation values of the order of 1/3 less than values struck by an independent valuer within the period with which we're concerned here.
So, Commissioner, the discount to the valuation that this letter is referring to, as I understand it, is the earlier valuation, not the valuation obtained by the mortgagees in possession. So that valuation, I can't remember the age of it, but I think it's about a year old, perhaps a little bit more than that. I would be more surprised, in fact I would be surprised if we had that discount to valuation to the mortgagee's valuation, because that would have been conducted just prior to the sale.
And would have been valuing what the valuer expected to obtain by forced sale by external administrator. Is that right?
I'd have to actually have a look at whether the valuation was done on a market basis or on a forced sale basis. Our general practice is we get the properties valued on a market basis, but it's possible it was valued on a forced sale basis, but I think less likely. But I think it would more be driven by the condition of the property at that particular point in time, any environmental conditions that are occurring at that point in time. I think they would be some of the drivers.
With the Harleys having been required to vacate the property?
I think that would depend on the type of buyer. If the buyer was a...
But the condition of the property would be affected by the fact that the Harleys had been required to vacate, would it not?
It could be, yes. And so, Commissioner, if that is the case, what our practice then is to do is to maintain the property while we're in possession, and we have various ways that we do that. In some instances we might put a manager on the property. In other instances we'll manage the maintenance of the property in other ways.
It depends. The valuations in May 14 of 3 lots were 800 and realised 780. A lot turns on whether that valuation at May 14 was forced sale or fair market. And do you know whether the valuation in May 14 was fair market or forced sale?
So my instinctive response would be it would have been done on a market basis. That's generally how we ask for these properties to be valued. And when I was preparing, for this evidence, I looked at each one as I went through. I just can't remember this particular one, but they generally would stand out to me if they were for sale and would generally upset me if that had happened.
Yes.
I think if you turn to your Exhibit 36, you'll see the answer there, Mr. Steinberg. The valuation report appears to have been at market value.
Okay.
Would you like to satisfy yourself of that, or does that accord with your recollection?
That is what I would expect.
I said I wanted to take you to 2017, Mr. Steinberg. In July 2017, ANZ prepared a diary note recommending that ANZ issue a letter to the Harleys saying that ANZ wouldn't pursue their debt. Do you recall this?
Yes, I do.
And ANZ did that in February 2018. Is that right?
Yes, that's right.
So 3 years after the correspondence that we've looked at, declining the Harleys' proposal not to pursue the outstanding debt, ANZ wrote to the Harleys telling them that it wouldn't do so. Is that right?
Yes, that's right, Ms. Hall. My recollection is that it followed, I think, a phone call perhaps from the Harleys to the bank.
Right, so there was a call and a decision was made not to pursue the debt in July 2017.
Yes, if that's the date of the diary note, then that would be right, yes.
That is the date of the diary note. It's Exhibit 49 to your statement.
Yes,
February 2018, that's conveyed to the Harleys. Why did it take ANZ more than 6 months after it decided not to pursue the debt to send that letter to the Harleys telling them that?
yeah, I don't know the answer to that, Ms. Orr. I'm trying to think of what it could be, but
It's not clear from your statement, so you're not able to tell us why there was a 6-month delay between the decision being made and the Harleys being told?
no.
And this was obviously a period when the Harleys were still asking the ANZ and waiting for an answer on whether or not ANZ would continue to pursue this debt.
So what I'm not clear on, Ms. Harley, is whether the Harleys, what I'm trying to think through is what the Harleys made a call at some point in time. I'm not sure whether the response to their phone call was the diary note of the 6th of July or whether the response to their call was our letter of the 9th of February 2018.
Well, it's not clear to us, which is why I'm asking the question, Mr. Steinberg. You're not able to...
I'm just not able to help with that right now, I'm sorry.
I see. In your statement, you've acknowledged that the tone of some of the bank's communications with the Harleys was, in your words, regrettable.
Yes.
Which communications are you referring to there?
So I'm referring specifically to some conversations that were held between the ANZ relationship manager and Mrs. Harley.
And what was regrettable about the tone of those conversations?
So when I was reviewing the file and reading those notes, admittedly I wasn't at these meetings or on these phone calls, but I read into those notes a tone that came across to me as tense, and it made me feel uncomfortable reading the notes. Yes.
Mm-hmm. But in your statement, having gone through all of the events that we have, you've resisted the characterisation of any of ANZ's actions in relation to the Harleys as having fallen below community standards and expectations. Is that right?
Yes, I have.
And do you maintain that position, Mr. Steinberg?
Yes, I do.
All right. Now, there are two remaining points I want to deal with in relation to the Harleys. The first is, I think it's fair that I take you to the valuation report just on this topic of fair market value. So your Exhibit 36, the second document in that exhibit, ANZ 800 652 7498. And we see it 7502.
Yes.
I'll just wait for it to come up on the screen. We see that the valuation was done on a market value as is basis.
Yes.
Do you see that?
Yes.
Can you explain what a market value as is basis in comparison to a market value highest and best use basis?
So my understanding is that is as the property currently is, so without making any changes or modifications, additions.
Mm-hmm. And highest and best use?
Can you show me where that reference is?
7505.
I'm sorry, what's the question?
I was asking you to explain market value as the highest and best use.
No, look, other than describing it as it's written, I'm otherwise not comfortable describing those terms. They're not valuation terms, and
so you accept that this was market value as is?
yes, I do.
Yes, thank you. And the final point in relation to the Harleys is that in answer to my questions yesterday about whether you provided the Harleys with copies of valuations, you said that you did not, and it was not the policy or practice at the time to do so.
Yes.
Do you recall that?
Yes.
Your counsel has provided me with 2 documents, and I'll ask you to look at those documents and then consider whether you want to change that answer. The documents... Are they not in the system? I'll hand you a copy of those documents. They are in the system. Oh, I've given him the wrong documents. Sorry, these ones. Thank you.
Thank you.
I'd like you to read those documents and just give you an opportunity to consider whether you want to change your answer.
Thank you for giving me that opportunity, Ms. Orr, but it does appear that we gave the valuations to the Harleys.
Thank you.
Yes.
All right. Can I leave the Harleys and move to Annexure C to your statement, which deals with Elizabeth Handley and a group of accounts that you've referred to in your statement as the Handley Group. Do you have that there?
Yes, I do.
The Handleys ran a cattle farm in Queensland.
That's right.
And like many Queensland cattle farmers, they were affected by droughts, floods and fires.
Yes.
And you accept in your statement that ANZ's conduct in relation to the Handleys fell below community standards and expectations?
Yes, in some respects I do, yes.
You refer to an instance in November 2014 where the Handleys' lawyers asked ANZ to postpone a mediation on the basis that Mrs Handley had received adverse test results arising from a series of biopsies.
Yes, I do.
And instead of seeking further information about Mrs Handley's illness, ANZ declined to postpone the mediation.
That's right.
When in fact Mrs Handley, you tell us in your statement, had been diagnosed with cancer and was scheduled for surgery.
That's what we found out, that's right.
And you accept that ANZ's failure to seek more information before declining the mediation fell below community standards and expectations?
Yes, I do.
And what would happen if this sort of situation arose within ANZ today?
I'd expect my people to inquire further when a call of that nature is received, and to make the assessment based on the types of values and characteristics that I've spoken to you about before, driven by the lending services purpose.
Has ANZ made a conscious effort to change the culture of its lending services team?
And I would say we are constantly evolving, and we're constantly trying to do better. It's never an exercise where you reach your destination. So I'd like to think we have been doing that in the past, and I'd like to think that we are going to continue to do that as long as we exist.
And ANZ also made a series of errors in relation to the overcharging of interest and fees in relation to the Handleys' accounts.
Yes, we did.
And some of those errors were associated with the transition of their accounts from Landmark systems to ANZ systems.
Yes.
And the effect of those errors was that there was a period when the Handleys didn't have access to funds, and several of the cheques that they presented were dishonoured.
That's correct.
Mm-hmm. And you accept that those errors fell below community standards and expectations?
I certainly think they may have. What's happened there is the bank's made an error, and we've rectified the error when it's come to our attention. But when I was analysing that particular point, Ms. Orr, I can see how some people might think it is.
Yes.
My analysis of that particular situation is, yes, we got it wrong, we made an error.
Mm-hmm.
When we found out that we had made an error, we rectified it. I also have looked at what ANZ did in respect of those bounced cheques, and what ANZ did was it wrote to the individual recipients of those bounced cheques and explained ANZ's error, and that the bouncing of the cheque was not our customers' fault.
Because dishonouring someone's paper is defamatory, isn't it? Dishonouring a cheque, where there are funds to meet it, is defamatory, isn't it?
I don't know, Commissioner. Yeah. And so I think we've made an error and we've fixed it. I think that's what we say we do, that if we do make errors, we'll fix them.
And ANZ also failed to extend overdraft limits to the Handleys that it had agreed to extend,
Yes, that's right.
which meant that there was also a period when they were charged default interest when they shouldn't have been.
They were definitely charged additional interest, and yes, I agree, and we reimbursed that when we discovered the error.
And you accept in your statement that that was also conduct that fell below community standards and expectations.
Yeah, I say it may have, yes.
It may have, or it did?
I say it may have.
Well, what do you think, Mr. Steinberg?
Well, my analysis on that is as previous, that we made an error, we got something wrong. When we identified it, we fixed it, and that's what we say we will do. So
You don't think it did fall below community standards
no,
and expectations? I see. And you've also accepted that ANZ engaged in misconduct in relation to the Handleys.
yes, I do.
There was an occasion where an ANZ staff member involved with the Handleys signed documents as a witness, even though the staff member hadn't witnessed the Handleys signing the documents. Is that right?
Yes, that's right.
And you accept that that was misconduct?
Yes, I do.
Have you seen the submission that ANZ made to the Commission on the 29th of January? You must have. I think you've referred to it a number of times in your evidence.
Yes.
And are you aware that in that submission ANZ acknowledged that certain financial advisors at ANZ had engaged in similar conduct in falsely witnessing beneficiary nomination forms?
I'm broadly aware of that, Ms. Orr. Because it's not part of that statement that I'm involved in, I wouldn't want to give the impression that I've concentrated too much on it.
No, I understand that, but ANZ told the Commission in that document that it had reported more than 30 financial advisors to ASIC who'd engaged in that conduct.
Yes.
Now, was the ANZ staff member who falsely witnessed the Handleys documents a financial advisor?
I don't know.
So you don't know whether this is an issue that extends outside of ANZ's wealth business, where the financial advisors are located?
My understanding is that the lady involved was a branch manager. That's my understanding.
So not in the wealth business?
No.
So the issue extended beyond the wealth business?
Yes.
And has ANZ taken steps to investigate how widespread the issue of false witnessing of documents is?
I don't know what the bank's done generally in that respect. I know what happened in this particular case.
Well, in having identified this particular case,
yes.
Has ANZ taken steps to investigate how widespread the issue is, whether it goes beyond this particular branch manager?
Yes, I don't know the answer to that question.
You don't know if ANZ's taken steps to investigate it?
No, I know we investigated this particular matter. I understood your question to be a broader question.
Yes.
And I don't know the answer to that question.
I see. Should ANZ take those steps to investigate how widespread this is?
I don't quite understand or don't quite know how this part of the business operates. I would accept the general principle that there should be obviously a culture where this type of behaviour is not allowed and is unacceptable.
What I'm putting to you is that you should look into whether this is a one-off event or a more widespread issue. Have you done that?
No, I haven't, but...
Has anyone in the business done that?
And that's the answer, that I don't know,
You don't know.
whether
Okay.
that's happened or not.
All right. Let's move on from the Handleys then. Mr. Steinberg, the final case I want to ask you some questions about relates to another set of farmers who are the subject of a non-publication direction. You deal with them in your Annexure F. They also were cattle farmers in Queensland.
Yes.
And you accept that ANZ's conduct in relation to these customers fell below community standards and expectations?
Yes, I do.
Specifically, you've identified that ANZ offered these customers a $450,000 overdraft facility in May 2010. But there was an error, and the overdraft facility that was made available to them was only $350,000.
Yes, that's correct.
And it wasn't until September 2010 that the full facility was made available.
That's right.
And you say in your statement you're not sure what caused that error, but you think it's likely that it arose because of the transition between the landmark computer system and the ANZ computer system.
That's correct.
And you acknowledge that the failure to make the full amount of the agreed overdraft available to the customers for a number of months was conduct that fell below community standards and expectations?
Yes, I do.
And you've also accepted that there were aspects of ANZ's handling of the file for these customers that would be different under ANZ's current systems and processes?
Yes.
One of the examples you give is that following the floods in Queensland in early 2011, the customers made a request for interest rate relief and ANZ declined that request.
That's right.
Do you know why ANZ declined that request?
No, as I said here, I can't call it, no.
But you tell us that under ANZ's current approach to disaster relief, that sort of request would now be granted. Is that right?
Yes, that's right.
So what's ANZ's current approach to disaster relief?
These approaches don't develop from my part of the bank, so it's not a subject that I'm able to speak about confidently. Mm-hmm. But what I do know happens is it's conducted by the front line, by our regional and agri people, that whenever there is an event of this nature, usually very quickly afterwards an announcement is made outlining a relief package for the people who are affected. Our customers are contacted and usually a media release is issued to communicate that message to the market more broadly. It usually involves suspending certain payments for a certain period of time and some other things. That's my understanding of generally what happens.
So do you agree that it's important for banks to be flexible in their approach to customers who are experiencing financial difficulties as a result of a natural disaster?
Yes, I do.
Okay. And in December 2014, we've already heard from other witnesses, ANZ announced a moratorium on farm repossessions for drought-affected farmers in Queensland and New South Wales?
Yes.
And that was later extended?
That's right.
I see. Now, in your general statement, Mr. Steinberg, you also acknowledged that ANZ had engaged in conduct falling below community standards and expectations in relation to 7 former landmark customers. Now,
that's in 4.1, is it not?
It is. Now, we've gone through a number of these. The first is the case we've just discussed. I'll ask you to turn up your table at paragraph 43, and this is ANZ 9999-010-0084. I'm sorry, I think I gave an extra 9. 999-010-0069. So this is your table showing the particular customers that you acknowledge ANZ engaged in conduct falling below community standards and expectations, landmark customers.
Yes.
Now, the first in the table you can see, but we can't see, is the
Yes.
one we've just discussed.
That's right.
The name of the second former landmark customer is redacted, but this is an additional farmer who we haven't discussed. Is that right?
Yes, that's right.
And this farmer was from Western Australia.
That's correct.
And in relation to this farmer, ANZ acknowledged that it engaged in poor communication and inconsistent practice in that it applied the entirety of the secured property sale proceeds to reduce principal rather than annual principal and interest.
That's correct.
And the third customer referred to in your table is the Cheesemans,
That's
who we
correct.
discussed yesterday. The name of the fourth customer is also redacted, but this is an additional customer who we haven't discussed.
Yes.
Perhaps if we have the following page brought on the screen at the same time, this will help as we move through the table. The fourth farmer was from Queensland,
Yes.
and ANZ acknowledged in relation to this farmer that it failed to honour checks contrary to a previous commitment to do so.
Yes.
And the name of the fifth former customer is also redacted. This is another additional farmer,
That's right.
and this farmer was from Tasmania.
That's correct.
And in relation to this farmer, ANZ acknowledged that it engaged in poor communication in relation to the restructure of their loans.
Yes.
The sixth entry is the Handleys, who we've spoken about.
Yes.
Now, you didn't mention the Handleys in the original version of this statement, did you, Mr Steinberg?
No.
Because at that time you didn't consider that ANZ had engaged in conduct falling below community standards and expectations in relation to the Handleys.
Just trying to recall. Yes, that's right.
Because the Commission brought the Handleys to your attention. That's right, isn't it?
Yes.
The Commission asked you to provide a statement in relation to the Handleys, and you did that, and after you did that you considered their case further.
That's correct.
And having done that, you now acknowledge that ANZ not only engaged in conduct that fell below community standards and expectations in relation to the Handleys, but you've also acknowledged that there was the misconduct we just discussed in relation to the Handleys involving the false witnessing.
Yes.
And the seventh entry in this table we see, not redacted, is the Hursts, who I asked you some questions about yesterday.
Yes.
So in addition to these 7 customers that you acknowledged ANZ's conduct fell below community standards and expectations for, if we move further in your statement to paragraph 45 on 0086, we see that you also acknowledge that ANZ breached the code of banking practice in the case of 3 former landmark customers. If we could have 0086 and 0087 on the screen. Now, the first of these, it is redacted, but we've spoken to the customers whose name appears in the first row, and we have their permission to identify them. So you see that the first of these is a company called Cashmore Farms Proprietary Limited.
Yes.
And the Cashmores were based in Western Australia.
Yes.
And ANZ acknowledges that it made significant variations to the Cashmore's loan, which was not in monetary default, without also communicating those changes in a clear and transparent way, and it applied the sale proceeds of a residential property to a long-term rather than short-term loan.
Yes.
And you acknowledge that that was a breach of the obligation in clause 2.2 of the Code of Banking Practice to act fairly and reasonably.
Yes.
And the second entry, which is also redacted, but again we've spoken to the customer who this relates to, and they don't have difficulties with being identified, that relates to Mr. Follott Jr., doesn't it?
Yes.
And as we discussed earlier, ANZ acknowledges that it breached clauses 2.2 and 25.2 of the Code of Banking Practice in relation to Mr. Follott.
Yes.
And the identity of the third customer, which we'll see over the page, 0088, is also redacted, but you see that this farmer was from South Australia.
Yes.
And ANZ's acknowledged that it took guarantees from this customer's mother and siblings to ascertain if they were suitable to act as guarantors. It took guarantees from the customer's mother and siblings without taking all reasonable steps to ascertain if they were suitable to act as guarantors.
Yes.
And that was a breach of the obligation in clause 2.2 of the Code of Banking Practice to act fairly and reasonably.
Yes.
Thank you. Now, in the course of dealing with these cases, the cases that I've taken you through and the other cases in these tables, you've told us in the course of your evidence about a number of things that ANZ now does differently. Is that right?
Yes.
And I want to ask you a bit about the process that ANZ went through in making those changes.
Yes.
The specialist agribusiness team that you've referred to within lending services, that was established in August 2014.
Yes.
And before that, agribusiness files were distributed amongst relationship managers in lending services. Is that right?
Yes.
And they might not have had any specialised agribusiness experience.
Some might have and some might not have, yes.
And that specialist team, you tell us in your statement, was established because it was thought that high-risk agribusiness customers would benefit from being serviced by relationship managers who had specific knowledge of and experience in agriculture and restructuring.
Yes.
Was the establishment of that specialist team prompted by ANZ's experiences with the former Landmark customers?
I would say it would have been a contributing factor. Just to give you some background, the germination of that team, that came into being on the 1st of August, the planning for that team began in approximately March 2014 when we undertook a very material restructure of the whole lending services area, and as part of that restructure, one of the decisions we made was to create this agri team, and then there was a process that took 6 or 7 months from March until it was established in August in the runway, if you like, in getting that team set up and established.
And around that same time, in August 2014, ANZ also started to use farm debt mediation more frequently. Is that right?
Yeah, I think that's right. I can't recall the point in time when we've put that into our policy, but certainly with the establishment of the agri team, we looked at utilising farm debt mediation as frequently as we could.
And you also tell us in your statement that around that time ANZ increased the frequency of face-to-face farm visits by lending services staff. Is that right?
Yes, that's right.
Then in December 2014, stories about Mr. Follott began to appear in the media.
Yes.
And they attracted political and media attention.
Yes, that's right.
And at about that same time, ANZ announced its moratorium on repossessions in Queensland and New South Wales that I asked you about a short time ago.
Yes.
Was that decision influenced by the attention attracted by Mr. Follott's story?
Look, I wouldn't want to say it wasn't an input. I think it might have had an input. I think the stronger input was the fact that we knew we had a whole lot of customers in these drought-affected areas. But I'm prepared to accept that some of the publicity, as a bank, we don't want negative publicity, so it may have been a driver to some of these decisions.
Well, after this publicity commenced in December 2014, ANZ started making further changes to its lending services team, didn't it?
Can you be a little bit more specific?
Well, I want to take you to some documents to show that at that time, after this attention, ANZ started addressing the culture of the lending services team.
No, so again, Ms. Orr, I think that is all part of this restructure that started in March 2014. So we had the big restructure in March 2014. We had the establishment of the Agri team officially 1st of August 2014, but it actually probably took a little bit longer to get it up and running. Then during the course of 2015, we were looking at the purpose, the lending services purpose, or that could have been a little bit earlier, but all of this had its genesis from that restructure that was undertaken in March 2014 when we had a new general manager came along, and we were looking at doing a very, the biggest restructure of a lending services area that I've seen in the 30 years that I've been involved in the area. It was a big change.
Well, I want to put to you that the genesis wasn't all in that March 2014 body of work.
Yes.
I want to put to you that the political and media attention that ANZ got as a result of Mr Follot's engagement with the media in December 2014, led to quite significant cultural changes being made.
Yeah, I wouldn't hide from the fact that as a bank we don't want negative publicity, and we try and do everything we can to avoid it. So I would accept that could have been one of the drivers, but I know from my experience that it had its genesis well before that. But yes, you're right, we didn't like the publicity and we wanted to do whatever we could to not get that bad publicity.
Could I ask you to look at a document I've shown you once before, which is ANZ 800 610 0479. It's a lending services agribusiness discussion document from the 1st of June 2015. And I'd like you to look at 0480, where we see some of the changes that ANZ was making in this period summarised.
Yes.
Do you recall this table that I took you to, the
Yes.
old versus new?
Yes, I do.
With the lending services commercial issues, agri-specific, and then the lending services agri-solutions?
Yes.
So I just want to go through those briefly, because we see that the first one, which is the one I had already drawn your attention to, is that there had been a clear lack of customer visitation and communication. And as a result of recognition of that, the move was to an increased focus on customer service and site visitations. You see that?
Yes, I do.
And previously, the interest rates, the average interest rate across the commercial lending services agri book was 8.4%, with some customers paying as high as 12%.
Yes.
The solution was instruction has been given to all staff to reduce rates to an average of 5 to 6%. See that?
Yes.
In the old system, there was a lack of clear strategy and length of time in lending services, evidence of a number of files having no clear strategy, with some files being outsourced to legal firms to manage. And the solution was that all relationship managers were now to prepare a one-page summary on every file in lending services agri, outlining the background of the file and the strategy going forward, to be reviewed and discussed with their managers.
Yes.
Under the old system, there was a lack of formal valuations on land and no thought on security around livestock and plant and equipment. Provisioning generally lacked any sophisticated calculation and appeared very conservative. And the solution was we've set up dedicated training around security, particularly around the PPSR for frontline and LS staff. The PPSR?
Yes.
What is the PPSR?
It's the the security register.
Yes. Under the old system, many files lacked formal valuations and relied on internal valuations. And the solution was more focus on formal valuations and understanding our security position. And under the old system, there were examples of a number of customers being refused seasonal funding during planting time and having interest payments due at the wrong time of their working capital cycle. The solution was we now have a dedicated agri team with an understanding of farm cycles. So this was in June 2015, a recognition of the deficiencies in the way lending services had been doing things and the proposals for dealing with those deficiencies moving forward.
Yes, that's right.
So this is June 2015, and then in July 2015, 60 Minutes broadcast a story about Mr Follott.
Yes, that's right.
And following that story, much more political and media attention was given to ANZ's management of its agribusiness customers.
Yes, there was more.
And particularly in relation to its management of former landmark customers.
Yes.
And in July, following that piece on 60 Minutes, ANZ put further measures in place to manage the risk to its reputation arising from its handling of the landmark customers.
Can you take me to that, please?
Well, I want to suggest to you that the task force was established at that time to review the cases of certain former landmark customers.
Yes, that's right.
Okay, now could I ask you to look at ANZ 800 075 4956? This is a farming segment support strategy document for the ANZ board for a meeting on the 6th of August 2015. Is that right?
Yes,
Mr.
that's
Steinberg?
right. That's what it says, yes.
And if we turn to 4957, we can see an executive summary of this document. Do you see there the second heading, increased focus on agri customers, including media and political attention?
Yes.
And there's a reference to parliamentary inquiries, the two stories on 60 Minutes,
Yes,
and a possible class action against ANZ.
that's right.
And under the next heading, the document says, whilst there are a number of existing initiatives in place, additional measures are required to assist distressed farmers, which may also assist in mitigating future litigation and reputation risk.
Yes.
And over the page at 4958, we see a list of the existing initiatives in place supporting agri customers. You see the reference there to incorporating our lessons learnt out of the New Zealand experience and enabling lending services to respond more proactively to emerging issues. What was the New Zealand experience?
Can you just point me which bold statement am I looking at for that one?
The third bold statement on the page.
The third bold statement says reduced interest rates, does it not?
No, are you on 4958, Mr. Oh, I'm sorry, you're in the subheadings. I'm taking you to the bold heading above those subheadings, about just below halfway down the page, existing initiatives in place.
Oh, yes, yeah. No, I don't know exactly what that's referring to. I know that there is a large agri book in our New Zealand office, but I don't know what those lessons learnt out of the New Zealand experience are referring to.
I see. And over the page at 4959, we see the heading, to further support agri customers and reduce any future litigation and reputational risk, additional initiatives are being put in place. The first of those was the establishment of the task force.
Yes.
The task force will deal specifically with 16 customers, limits of 35 million, current IP 13 million, which have been identified as being high risk. All of these files will be reviewed internally by the 29th of July 2015. This is to ensure that each matter is managed urgently whilst managing the reputational risk, and will seek to reach closure on all pending customer disputes and claims with strategies in place for all 16 customers by the 31st of December 2015.
Yes,
And we saw that one of the cases dealt with by the task force was the Cheesemans.
that's right.
Were you on the task force, Mr Steinberg?
Yes, I was.
And how many cases of former landmark customers did the task force ultimately review?
It'll be somewhere between 185 and 200.
And how were those cases selected?
So initially we undertook a review of all of the landmark accounts that were in lending services at the time. So that was the first category. And then the second category was looking at what we call the closed files that had been in lending services and then been closed. And a review was undertaken of all of those to try and identify which in that population may have a high probability of needing a review done. And then some of those files were then passed on to the task force for review if they were considered to meet certain criteria.
Does the task force still exist?
Yes, it does.
And what's its role now?
So its role now is to assist our relationship managers across lending services as a forum to bring difficult type matters that ordinarily would be decisioned with your normal authority holders, but they've got more difficulty or more complex situations, whether it's financial or other. And so people can come to the task force to get guidance on how to deal with those files so that we can be confident that they are dealt with in a consistent way and in accordance with lending services purpose.
Were all of the files of former landmark customers ultimately reviewed by the task force?
No, all of the files that were existing in lending services at the time, plus a number of the closed files, not all of them.
So do you know how many files weren't reviewed?
So again, I'll just be a little bit clearer. Every file was looked at.
Yes.
My response to your question is which one of those went to the task force.
Yes.
So every single file was looked at to determine the selection criteria, that's
Yes.
right. And then approximately 200 were then reviewed by the task force. And yes.
And do you agree from this document, Mr Steinberg, that a significant motivator for ANZ in introducing the new changes, particularly the task force, was to manage the risk to its reputation?
I would agree with that proposition. The only addition, if I could make to that, if I could, Ms Orr, is that a subset of looking at the bank's reputation is how we treat our customers and the approach that we take with our customers. So in saying that, the way I look at reputation is the driver of our reputation is the way that we deal with and treat our customers.
I tendered that document, Commissioner.
Exhibit 4.23, Farming Segment Support Strategy, Board Paper 6 August 2015, ANZ 800 075 4956.
So since that time, Mr Steinberg, ANZ's continued to make changes to its policies and procedures in relation to high-risk customers.
Yes.
And in May 2016, we have the change that you've mentioned to me earlier, which is a change in requiring copies of valuations to be provided to customers.
That's correct.
And at around that same time, in May 2016, ANZ introduced a requirement for a member of the Lending Services Global Leadership Team to approve any decision to commence enforcement action.
That's right.
Why was that change made?
The main reason was to ensure that there was a consistency across the whole country in the manner in which these decisions were made. So previously, as all the decision was made by the relevant authority holders on a particular file. What this change does is those people are still the initiators or the recommenders of those actions, but then it comes up to somebody like me to then apply another lens over the decision-making process and ensure it's the right decision for both the bank and the customer.
And decisions made by lending services are now informed by something you've referred to multiple times in your evidence, which is the ANZ lending services purpose. Is that right? And you've exhibited that to your statement,
That's
Exhibit
right.
22 to your general statement. Just ask you to have a look at that. ANZ 800 552 2654.
Yes.
Could you explain how this document and the lending services purpose informs decisions that are now made by lending services in ANZ?
Yes. So, first of all, we try and make this a integral part of our culture and of the way that we act and behave on a day-to-day basis. I, as the leader of this business, talk to my staff regularly about the lending services purpose and what it means and how it should drive the way that we analyse the matters that come to our attention and how we decision them, as well as how we then communicate them onto our customers. In my opinion, this has become a very important piece of change in our lending services area.
And we see there the four pillars. I think you were struggling to remember the fourth before. Here's your chance, Mr. Steinberg.
Yeah, so the
see
four
it there
pillars, the customer experience, which we brought as our first, and then the staff experience, and then well-managed and trusted advisor.
So is it the case that now ANZ attempts to ensure that it takes into account considerations like the emotional and personal impacts of recovery and enforcement on customers in its decision-making process?
Yes.
And that's something that we saw was lacking in relation to both the Cheesemans and the Harleys?
I think so, yes.
And you've accepted it was lacking in ANZ's handling of other cases that you've described in your statements?
Yes.
Can I take you to one last document, Mr. Steinberg? ANZ 800...
Before we leave this document, Mr. Steinberg, under customer experience, the second bullet point, we act with fairness and honesty, and the third bullet point, we do what is right. The fairness that is spoken of there is fairness to two sides of the equation, isn't it?
And which two sides?
Bank and customer.
I actually think that it's actually speaking to the customer side, but I accept that when we do make our decisions, we are looking for fairness on bank side as well as customer side.
And when we speak of community standards and expectations, do you think it is right to say that the community expects fairness of that kind, that is fairness to customer and to bank?
Yes, I do.
And in your view, when the Code of Banking Practice speaks as it does of fairly, reasonably, consistently, in ethical manner, so fair, reasonable, consistent, ethical, Is that adding anything of real substance to the notion of fair to both bank and customer? That is it just a longer way of saying that the community expects that banks will act fairly to their customers, but the community accepts also that banks have got to act fairly for the bank?
I think that's right, Commissioner. You know, one of the things that I take into account when I do the work that I do is the fact that the money that we are managing belongs to people, it belongs to our depositors, and it belongs to the people who we borrow money from, and it belongs to our shareholders. But the stakeholders that I have the most concern about amongst those three are our depositors. And our depositors expect that every single day when we deal with their money, that we deal with their money in the way that I'd want my money dealt with. And I want to be sure that every day when I turn up to my bank to withdraw money as a depositor, that my bank is able to meet those commitments. And one of the ways the bank ensures it can meet those commitments is by managing its loan portfolio, which is where the role that people like me play. Now, I don't mean to overemphasise, you know, our importance in the world, but I'm just trying to give you an insight as to how a person like me thinks.
And the notion of we do what is right can perhaps be captured by the question, should we? Would you accept that?
As in, should we do things that
Should we do this?
Yeah, I
And
think
the distinction I'm drawing is the distinction between can we do this, have we got power to do this, and should we do this?
yeah, I agree. And the question that I often put to my people now is, and it might be driving at the same thing, but it's a slightly different question, and it is this the right thing to do? So I know what our legal obligations are, but is this the right thing to do?
I said I had one more document that I wish to show to you, Mr. Steinberg. It's ANZ 800 076 0761. This is a landmark portfolio update for the ANZ board on the 28th of October 2016.
Yes.
And could I ask you to turn to 0763, which sets out the key outcomes from the review of the landmark files.
Yes.
Task force review process undertaken highlighted the following. Number 1, no systemic issues. Customer concerns dealt with on a case-by-case basis. Do you agree with that, Mr. Steinberg? There were no systemic issues?
Yes, I do.
Well, why then, Mr. Steinberg, did fixing those problems that occurred with ANZ's handling of the former landmark customers require significant changes to the culture of lending services and to its governance and policy?
The way I make my analysis on whether there are systemic issues is slightly different to the way that you've just put it to me. I'd be looking at this and saying, are these systemic across the entire portfolio of customer? And in coming to that particular view, we had 4,500 landmark customers constituting over 7,000 accounts. And so what that comment is responding to is that this didn't apply to all 4,500 or to 4,000 or 3,800 of them, it was a smaller number, so it wasn't systemic in that particular sense of the word. I think the point that you raise is why did we then go and make all of these changes? And I have to come back to what I said earlier on, that the genesis for these changes was in March 2014, and I know I haven't annexed it, but there is a lot of documentation around this restructuring that was done. So there will be evidence in the bank's records of all of this work occurring in March, April, May, June, July, up to August 2014. But you're also right to say, as you asked me before, what other things impacted it. And as you pointed out, we had some negative publicity, which we didn't like and which we didn't want to have continue. And so we continued to understand what we could learn from that and how we could change and what changes we had to make sure that what we were doing that was causing the distress to our customers, that was in turn causing the negative publicity, and that's what's driven the changes.
Well, you see on this same page under the heading Culture, Governance and Policy, both Lending Services and Frontline have made a number of changes to culture, governance and policy to ensure no repetition of these issues occur.
That's right.
These are the issues that occurred with the former Landmark customers.
Yes.
And one of the cultural changes, the first one we see on the page there, is the introduction of the Lending Services purpose that we've just discussed.
Yes.
And what I want to put to you squarely is that all of these changes indicate that there were systemic issues with the culture of lending services at ANZ before it embarked on these changes.
Yes, I don't agree with that.
You don't agree with that?
No, I don't.
So why were these changes made then, Mr. Steinberg?
Well, as I said earlier, we are constantly looking at ways that we can change, Ms. Orr. I hope that this isn't the end of the change. You know, to the extent that we've got it right now, if we have, I'm sure it'll be different again in 12 months' time. Yes.
I just want to be clear, after the many hours of evidence that you've given so far and the cases that I've taken you to,
Yes.
demonstrating the way Lending Services handled multiple cases, you don't accept that there were systemic issues within the culture of lending services at ANZ.
That's right, I don't accept that.
I see, and you see all of these changes as not being driven by those problems.
Again, what I said earlier is that it started in 2014, and I have accepted that some of these issues that caused the media publicity, which started with distress in our customers, contributed to it. Can you please also, Ms. Orr, take into account that in my part of Lending Services, we have, I don't know the number, but we have 700 or 800 accounts at any one point in time, and every year I have approximately 400, 500 new accounts coming in and 400 or 500 accounts going out approximately. So there are a large number of customers that are coming through what I would call the Lending Services experience. And so when you talk about the customers that we've spoken about, which I have acknowledged there are issues with, I don't see that as being systemic when you consider that we have thousands, in the time that I've been in Lending Services, there have been thousands of customers that have come in and out. And I think that's how I'm assessing that question that you asked.
How many of the cases that the Landmark Task Force reviewed resulted in a settlement for a Landmark customer?
There is a number available in number of customers. I just don't know that number.
Can you give a rough proportion? Half? More than half?
acknowledging that I'm uncomfortable with the question, but I would guess in the order of 40, 50, something like that.
And you,
Or cases?
I'm sorry, what was your first?
Percent or cases?
Cases.
oh, cases. And how much roughly was paid?
$40 million.
$40 million was
Well,
paid.
can I just define paid for you? So,
Yes, please.
So we track the cost of this exercise to the bank, and that cost is defined, includes areas where we had debt forgiveness, as well as some areas where we refunded interest or paid compensation.
And finally, Mr Steinberg, do you think that ANZ's policies and processes for dealing with agribusiness customers now reflect the community's expectations about how a bank will treat customers in financial difficulty?
Yes, I do.
Thank you, Mr Steinberg. No further questions, Commissioner. I'm sorry, I need to tender the last document.
Landmark Portfolio Upgrade Board Paper 28 October 16 ANZ 800 076 0761 Exhibit 4.24. Now, should we take a break at this
Yes,
point?
thank you, Commissioner.
Is all? If I come back at say 5 to midday.
Thank you.
Please be seated.
Now, Mr Molesworth, you have an application? You have no witness. Apart from that, we can do well.
Toby's in the bathroom, I'm sorry. Commissioner, oh, he's here.
I think he's entitled to do that, Dr Collins. I hope he is. Have I come back sooner than I should have? Probably.
Matter of seconds.
Old habits die very hard, Dr Collins. Let him have a chance to settle down. Now, Mr Molesworth, you have an application.
Commissioner Lachlan Molesworth, I appear for Mr and Mrs Hurst, who have leave to appear today,
Yes.
whom have been a subject of Mr Steinberg's evidence. I seek leave to cross-examine Mr Steinberg in relation to 3 discrete issues raised in his evidence. I should say up front, being very cognisant of the time of the Commission, I propose to limit questioning to not more than 10 or 15 minutes or so. I'm happy to talk to the issues.
Not so much time as subject matter, Mr Molesworth. If you're going off into new matters, that's one thing. If we're rehearsing old matters that we've heard about and dealt with enough, then I might cut you off. So don't fix it by time, fix it by subject matter.
Thank you, Commissioner. No,
You may go ahead.
Thank you. Mr Steinberg, if I might take you to your witness statement, rubric 401, page 17, which is ANZ 999 010 0085.
17, did you say?
Yes. It's document 999 010 0085.
You don't have a tag number for me, do you?
I don't have a tag number. It's your statement 4-01, page 17.
The general statement, page 17, Mr Steinberg, is what we're looking for.
We're able to get that on screen.
I don't have that first folder for 417.
Thank you. That's the one.
Right,
401,
I'll
we're
use
looking
this one.
for
So
your
what-
general statement, okay?
that's 401, is it?
401, Your general statement,
Yep.
page 17. I'm sorry, I'm
Now- it's now
rushing,
on the
obviously.
screen, Mr. Steinberg.
Page 17? Yes.
Yes.
Looking at the bottom right-hand cell, you note that in October 2015, ANZ offered the Hearsts to participate in an independent evaluation process. Before this time, had the bank provided any options to have their case independently reviewed or advice on external assistance available?
Sorry, Mr. Molesworth, is it?
Yes.
While I was working to work out where we are, I missed the beginning of your question. So you've put up the
The
table.
third document,
So you
in
put
the
up.
cell on the bottom right.
Yeah,
In October 2015, ANZ offered to participate in independent evaluation process.
Yes, that's right. ANZ offered to participate in an evaluation process. Yes.
And prior to that,
Yes.
were options made available or information made available on other review processes which would be available to the Hearsts?
So my understanding, Mr. Molesworth, is that the Hearsts were dealing with our customer advocates office, which is, I guess, the third line of dispute resolution that we have available in the bank. The first being the relationship manager, the second being our customer resolution centre, and for anything that can't be resolved at that level then gets elevated to the customer advocate, and that's where I understand the Hearsts matter was being looked after.
In the 4 years, though, between August 2011, which is when the bank froze their accounts and their financial troubles first started, and then, would advice have been provided on other sorts of external assistance that might be available? Mediation, FOS?
Yeah, so my understanding is that the Hearsts were obtaining external legal and accounting advice at that time. I can't think of anything that I've seen where we've specifically directed them to go and get that advice. That's not to say it didn't happen.
Would you likely have volunteered it, though, ordinarily in the course of your processes or procedures with which you're here?
In our current practice, we certainly encourage our customers to obtain legal and financial advice. I can't say from my recollection of the file right now whether we did that in the case of the Hearsts in that period between 2011 and 2015. But what I do know is that there was quite a lot of engagement between ANZ and the Hearsts, including after the transfer to lending services. I just can't recall any specific diary notes that answer the question that you're asking me.
You'd presumably agree, though, and you noted that you thought they might have been receiving external advice. Given that they had had their accounts frozen, and then over a period of years, ANZ brought about the sale of all of their properties, it would be a pretty reasonable assumption that they would have had no financial resources with which to seek external advice.
So, a couple of things behind that. First of all, I'm not aware of the Hearsts account actually being frozen. I know that there is a reference to that in the materials, but when I looked into that particular matter, I actually don't see any evidence of the account being frozen. In terms of the financial side, the Hearsts business was, I guess there was two sides to it, as I understand from reading the file. One was the farming side, which was cropping and livestock, and then the second part was the property development and the MIS side of the business. And so looking at recalling their cash flow forecast as I recall it now, there was a cash flow forecast that demonstrated with property sales that they would be able to reduce their debt significantly through the sale of their properties. And and in that particular scenario retain entirely forest. When I then strip out from that cash flow forecast the capital side of the equation, in other words, the property sales, to then try and come to an answer to your question, there was a surplus of trading funds. So taking out the capital side, there was a surplus of trading funds. So what that's communicating to me is that on the analysis of that document, there was some funds available. Now, I just want to, obviously be cautious in how I say that, because I understand that I'm interpreting an accounting document, but that's the only reference I have to go to answer that question.
Right. But can I ask this question then? Is it accurate that the bank only offered a review of what had happened, a review process, once the Hearsts actually wrote to the bank some years after all this started and well after the properties have been disposed of, pleading about conduct which they'd experienced and seeking compensation?
Yes, you're right. That is when the evaluation process was offered.
Do you think that there is an imbalance of power in understanding what options are available for review and resolution when these sort of serious cases or disputes arise?
Mr. Molesworth, I think there's a potential for that. In the case of the Hearsts, my recollection is that they appointed Core Cordis to represent them in their discussions with the bank. Core Cordis are a reputable insolvency practice. So I feel comfortable that in this particular case, to the extent that there could have been any inequality, that should have been addressed by the fact that Core Cordis were representing them.
Given that they rely entirely on the bank for the home they live in,
yes,
for their income, their livelihood from the farm, as the bank moves to actually remove both from them, do you think that there is a community expectation that the bank would take more of a role in informing clients as to what review alternatives would be available?
Again, for me, it's going to come down to an analysis of the individual circumstance, and in this particular circumstance, because the Hearsts were being advised by what I consider to be a reputable insolvency firm, I believe that they had that opportunity of learning about any review mechanisms that were available.
When the review process was offered and there were negotiations commenced on the terms of reference for it,
yes,
did the bank fight the Hearsts on those terms of reference? Did they act in an adversarial manner?
So I'll qualify that by saying I was not involved in setting up the evaluation process, but as I understand it, in the manner it was described to me when it was happening and on my read of the file, I don't see that coming out.
Just referring to your statement, I'll give you the document number first, ANZ 999-010-0089, which is the same document, 4-01, page 22, paragraph 29. I'm not sure this is the right document. Oh, sorry, the next page. Sorry, yeah, thank you, that page. You gave evidence that ANZ has introduced new procedures, including dispute resolution mediation processes. Do you think that the Hearst case would be done differently now and the Hearst would get a better result under the new rules?
So, Mr. Molesworth, I think we need to have a look at what's happened, you know, in the history of the Hearst's file. So, as we know, they were involved in the MIS industry, and as we know, in 2009 and 2000,
Portion of their business.
that's right. And as we know, during the course of 2009 and 2010, that industry went through you know, significant structural change with the collapse of Timber Corp, Great Southern, FEA and Guns. That had a material impact on their business. When I can see the dealings with the Hearsts through the course of 2010 after the acquisition, the bankers of the understanding that the Hearsts' strategy is to sell property in order to repay debt, and specifically the entirely forest property. And their mode of sale of the entirely forest property is by sale to a relative for $2.5 million, and this becomes quite a strong theme in the file from probably about September 2010. In addition to that, there were representations that the Hearsts were looking at selling, I can't quite remember whether it was Glenrowan or Parklea, but the analysis on the file at that time was that by the sale of those two properties, the expectation was that all of the bank debt would be repaid.
I guess my question is more directed to the dispute options that are available. You refer, for instance, to farm debt mediation, and you acknowledge in the same document, in the same statement at the table we looked at previously, that they should have been referred to mediation earlier.
Yeah.
My question is, under those procedures which you say have now been introduced, would they be more likely to get a better outcome? Given that you have acknowledged that they should have been referred to mediation earlier.
Yeah, as a general philosophy, I agree with the notion that farm debt mediation generally produces better outcomes. As you know, there was no requirement in Tasmania, there's no legislative requirement in Tasmania for this to occur, but I agree it would be better. What I see from the Hearsts file, though, is, and it's not to suggest it still wouldn't be better, but there is regular engagement with the Hearsts and the bank, and there seems to be a relatively cooperative relationship as far as I can see through the file. So whether farm debt mediation would have produced something materially different, that I can't say, but I think philosophically, I think it's always better.
Better because you're tackling the problem sooner, or better because the outcomes are likely to be better? Better in what way, do you say, Mr. Steinberg?
So I think that, first of all, there's potentially a better disclosure of information at farm debt mediation, so hopefully there's representation. So that's the first thing. The second thing is you have that independent mediator that takes out some of the tension that might otherwise be there. And third, the structure, the fact that it's a more structured way that completes in an agreement.
So my question is this on procedure then. In your statement, where you were asked questions about what has ANZ changed in order to address the issues which were faced by a lot of the landmark customers, you said the use of farm debt mediation on a greater range of agribusiness files. This change in practice was introduced in August 2015. That was over a year before the Hearsts were actually offered any form of dispute resolution. So weren't they subject to these new rules?
My response to that, Mr. Molesworth, is that in fact the Hearsts properties were sold by, and I'm struggling here, but I think January, February 2014? 15.
The last two.
The last two.
That.
So by the time we had implemented this change, the Hearst enforcement process had already occurred. So had it predated, then I accept it would have been subject to the benefits of that change, if any, in this particular case. But in the Hurst's case, we had already sold the properties by the time this change was made.
Turning to valuations and impact on lending behaviour,
Yes.
do you believe that the ANZ acted below community standards and expectations in respect of how it used and undertook valuations in respect of the Hurst case?
In the way it used and...
The way it used the valuations which it had,
Yes.
and the way it undertook the evaluations.
Yes.
And they are two discrete questions, so you can answer them separately. The answer is not the same.
So, again, the background, Mr Molesworth, is that there were valuations undertaken by the Landmark manager prior to the acquisition, and under Landmark's policies, processes and procedures, valuations were undertaken by their Landmark relationship managers. When the account came across to ANZ after the acquisition, ANZ, I don't know what the terminology, I guess we adopted those valuations, we took them over. I think what your question is getting to is whether ANZ should have undertaken its own valuations in order to meet community standards at that point. And my answer to that question is that I believe that we did meet community standards, and the reason I say that is because ANZ's policy around valuations of a property of this type is that we undertake valuations every 36 months. The valuations that we relied upon from Landmark were done in late 2008 and 2009. So under our policy, we were able to rely on those valuations until 2011 and 2012. So the question for me then is, did ANZ act in accordance with its policies and procedures? The answer for me is yes, we did. Therefore, I reach a conclusion that we have operated within community standards.
Sure. So part of the question is questioning is around understanding how you use them. If I could refer to document ANZ 017 004 7252.
Is this still 4-1, Mr Molesworth, or
I beg your pardon?
is it 4-1?
No, it's not. This is a credit memorandum prepared by the bank. You might just like to go to page 1 for Mr Steinberg, or put it up next to it. I just want you to confirm, Mr Steinberg, that on the date this credit memorandum was signed, which was the 2nd of August 2011, and if you go to the last page, you'll see it was signed on the 2nd of August 2011. August 2011, and going back to that first page which I brought up, you'll see that ANZ has signed off on a value of the properties at $7.75 million. And that's set page 7252. You'd agree with that, Mr Steinberg?
What was your question? I'm sorry.
That in this credit memorandum, which has been signed by the relevant relationship officer, they have relied on a valuation of $7.75 million.
For all of the securities that were held by the bank?
Land securities.
Yes. So you're using the word relied. I agree. This is a credit memorandum that's documenting the securities that we are holding at the time, and what this is recording is that we were holding $7.7 million worth of property as valued at that time, yes.
Sure. And then if we just go back up now to page 7249 in the same document, you'll see that based on that valuation, there seems to be a recommendation of increasing leverage from 4.86 million to 5.1 million. That recommendation would be based on the information of that valuation itself, correct?
So, Mr. Molesworth, this document's not telling me what you are saying, but I'm prepared to accept your proposition that the bank was looking at increasing lending, and yes.
Thank you. I'll tender that document if I may.
Exhibit 4.25 will be credit memorandum concerning Hearsts, 2 August 2011, ANZ 017 0004 7244.
Thank you.
4.25.
And about recommending an increase, if I could go to document ANZ 017 004 8175. On the same day, that letter went out, the 2nd of August 2011, which, can you confirm, is a letter of offer for a new increased debt facility?
Yes, I'm not sure the amount of the increase by looking at that. I'd need to see the previous letter of offer.
Or that figure, the 5.1, which is a total of those, does agree with the memorandum of the same day, which proposed an increase to the 5.1 million.
Yes.
Now, can I just refer to 2 more documents, and that will be it. ANZ, actually I'll tender that document if I may.
Exhibit 4.26, letter of offer to Hearsts, 2 August 2011, ANZ 017 0004 8175.
ANZ 017 004 8154. This document, which is a diary note, is 12 days later. Could you confirm for us the valuation of all their Hearst securities this 12 days later from the past valuation?
Yes, so Mr. Molesworth, this is a diary note that's prepared by the new relationship manager for the Hearsts, and what he's done there is he's listed the properties that we hold in security, and what he's put alongside each of the properties is what he calls an estimate of their values, and the value is $4.7 million.
Which is 40% less than what the valuation was 12 days before, which was part of increasing their credit facility.
The estimates are less than what was in the credit memorandum, yes.
And then the last document which I refer to, and I'll tender that document as well, sorry.
Exhibit 4.27, diary note 15 August 2011, ANZ 017 0004 8154.
And if I could refer now to ANZ 017 004 8923. This is an email which was sent on the 23rd of August, 21 days after the letter of offer to increase the credit facility. If we go down to the last page, second last page, it appears to note that the accounts of the Hearsts are now frozen 21 days after being granted a letter of offer to increase their credit.
Can you show me which line to go to, please, Mr. Molesworth?
At this stage, ANZ cannot allow unarranged excesses to continue, and we cannot advance further monies.
Can you tell me what line? I just can't see that.
The third last paragraph at the
10
bottom.
lines up from the bottom. Mr. Steinberg.
Oh, yes, yes.
At this stage.
All I want to confirm is that having had that increase 3 weeks before, They now have no more access to funds from ANZ.
No, that's not how I read that document, Mr. Molesworth. What's that saying is that that the bank won't allow unarranged excesses, so they can utilise their facilities up to the limits that the letter of offer that you've put to me allowed them to.
So you're confident after the date of that letter, they still had access to funds?
Well, this certainly doesn't tell me that they did not.
Do you think the original valuation was inflated? The $7.5 million valuation, $7.75 million valuation?
So again, that question needs a little bit of consideration because those valuations were done at a particular point in time, and what I'm prepared to accept is that a couple of years later, when a formal valuation was done, that the values came in materially less. That, to me, appears explainable by the change in the industry and the real estate values in that market at that time.
Would a relationship manager have any incentive to inflate a valuation in order to lend more against securities?
Not under ANZ's processes, procedures, policies,
So
no.
in no way his remuneration would in any way be linked to the success or ability to provide debt funding.
I mean, you're asking me a question about the way that our frontline works, which is why I'm hesitating a little bit before I answer. So, but my instinctive reaction to that is no.
But I'd be right in saying that if the properties had not been as overvalued, and I think it's evident they probably were at that time, the bank would not have been prepared to lend as much in the first place?
No, I don't agree with that. Again, I've had a look at the additional lending that was provided by ANZ post the Landmark acquisition, and my assessment is that the additional lending that was made by Landmark was fair and reasonable in the circumstances, based on the business model that the Hearsts had, which was to buy and sell properties, based on the belief that the Entirely Road property was going to be sold to their brother-in-law for $2.5 million, and based on the cash flow analysis that I saw on the file that indicated that after stripping out asset sales, there would be a surplus after paying interest. So on my analysis of the facts that are on the file, I consider the lending to be fair and reasonable.
Despite the fact that the valuation relied upon seems to drop down 40% in 12 days.
So again, we just got to come back to those. The document you referred me to before was an estimate by a relationship manager, but I otherwise accept the fact that as a result of what happened in the industry and at that time that there was a significant decline in values.
Sure.
But as I said, there was a representation to the bank that $2.5 million worth of debt reduction was going to come from one transaction, and the file records this on quite a number of occasions, and as I can see it was clearly in the mind of the decision makers as they were working through this file to give that transaction an opportunity to complete.
And just a final couple of questions just on admission of wrongdoing. Can I take you to your statement, ANZ 999 011 0069, which is an extra E to rubric 420, page 24. This was tendered into evidence on Monday by you. And at paragraph 123, it starts with, "It is difficult to answer the question whether ANZ's conduct in relation to the Hearsts fell below community standards of expectation." We've heard over the course of the last 2 days that there has been admission that there was a lot of conduct which was below community standards of expectation in respect of this case. My question is around the reluctance of the banks to want to acknowledge wrongdoing. Why is it so difficult for the bank to come out and say, we got it wrong?
So, Mr. Molesworth, the first sentence in my paragraph 123 is not intended to convey a difficulty in admitting to getting things wrong. What that is conveying is that in deciding whether, in the Hearsts case, our conduct breached community standards, we found it difficult to reach that conclusion one way or the other. I found it a very complicated exercise. In terms of your question, I think I have admitted on behalf of my bank quite some behaviour here that has been short of community standards, so and some misconduct. So what I hope I'm communicating by being here today is a preparedness to acknowledge wrongdoing when we commit it.
Do you think it is important for victims, and do you think the community expects an apology to be provided to by banks when wrongdoing has occurred?
Yes, I do.
Are you aware that after 5 years of the Hearsts being left financially destitute, which even former High Court Judge Susan Crennan, who reviewed the case, said, well, the case involving bank unconscionability or likely bank unconscionability, the bank to this day has never apologised to them?
I didn't deal with the Hearst matter, so I'm not aware whether or not an apology was made. I'll take that opportunity now to offer the Hearsts that apology.
Thank you. No further questions.
Not sure, Mr. Molesworth, whether I marked that chain of emails as an exhibit. If I have, so be it, but emails 23 August 2011, ANZ to Hearsts, ANZ 017 0004 8923 is exhibit 4.28.
Thank you, Commissioner.
Dr. Collins.
We have no questions for Mr. Steinberg.
Yes, thank you very much, Mr. Steinberg. You may step down. You are excused.
Thank you.